unwind or some of the climate investments under the Biden administration. We know Orsted has quite a bit of exposure, especially when it comes to the New York area. So one stock we want to keep an eye on. S4 Capital is another. This is Martin Sorrell's advertising company in talks to combine with MSQ Partners. Likely to see a bid into those shares this morning, Guy.
Okay, here we go. Monday's trade. What are we going to see? Val was talking about 0.2, maybe 0.3. We'll wait and see exactly what the numbers deliver this morning. But there's actually some underlying narratives that are going to be really interesting. So let's take a look. What do we got at a headline level, at an index level? We've got a FTSE 100 that is staggering into the new week, up a massive 0.03 of a percentage point. Now go negative, just right on cue. The IBEX is up a little bit more, up by 0.3%. What's going to happen with oil names this week? I think is going to be a really interesting build-up to what we see in Alaska at the end of the week. What happens with CPI, I think, will also have a pretty big impact here as well. But the Stock 600 right on cue, 0.2 to the upside is what we are watching. But below the surface, there's defense names to watch out for. There's energy names. Keep an eye on Orsted. I think there's also a rights issue you maybe want to be looking at there. There's lots of kind of interesting little stories that are happening that maybe add up to something more significant. Kriti, Val, what's happening on the sector front? Break it down that way.
Well, on the sector front, we are looking very positive. There's only two sectors in the red so far in the first moments of trade. One of those being energy, not a surprise. We had a slide in WTI and Brent in the last few days. At the top of the basket, we do see healthcare, and we do have Novo Nordisk, one of the best performing stocks so far in this morning's trade, up some near 3%. We also have basic resources at the top, auto parts, and banks. But when it comes to those names on the downside, Kriti, a lot of those single names are defense that are catching my eye. We also have Vestas Wind Systems in the red. That might be following on from some other wind energy names that we did have reporting earlier. So I guess defense on a back foot and wind stocks as well.
Absolutely. Rheinmetall, BAE Systems, we'll throw Saab in there as well, just to name a few on the back foot as well. I think this does, however, feel a little bit of a rotation, though, because if you look at some of the bigger kind of outperformers, you mentioned Novo Nordisk, but I'm looking at AstraZeneca, for example, even Roche. These were the underperformers of last week, given some of the conversations around pharmaceutical tariffs, the 39% rate being imposed on Switzerland, even though carving out some of the healthcare space. But even some of the volatility around that has bled into that sector. So to me this morning, it immediately looks like just a little bit of a reversal or continuation of the trade that we saw last week, Guy.
Yeah, so of the 600 stocks, we do have 440 in the red, only 440 in the green, should I say, and 111 in the red. So it does look like that this rally, even though it's small, is quite broad-based across the stocks, Guy.
Small but mighty.
So, yeah, but the big names that have driven this market, banks have been the big outperformer so far this year, but kind of park the banks. Defense is down. So how much could it fall? Say you get to Friday, and there is a deal done on Ukraine. How much do these names fall? How much is already priced in? If you don't get a deal, how big a bounce are you going to be setting yourself up for? Is that the trade as well? Maybe you want to be long into. Do you want to be short into that meeting, or do you want to be long into that meeting, in terms of the narrative around the defense story?
Yeah, how to play this U.S.-Russia talks happening on Friday. Let's take that question to our guests here around the table. Joining us now is Laura Cooper, the Nuveen Global Investment Strategist and Head of Macro Credit. Always a pleasure to have you here. Thanks for joining us on this August Monday. What do you think is the trade for a possible detente of the Ukraine-Russia war? Is that something you're thinking about this week as a potential catalyst for your portfolio?
Well, it's one of the narratives that markets are focusing on, but I think it's important to look at the cyclical component versus the structural component. So on the cyclical side, we are clearly seeing that tactically kind of overbought in terms of the defense is a key theme that's emerging. So I think we're going to see a bit of a pullback if we were to see any type of peace deal. But if we think about the structural drivers of the defense sector in Europe, if we look at what is expected from defense spending as a share of GDP, the continent is expected to reach 3% by 2030. That is going to be a clear tailwind for earnings growth. We've already seen, 19% defense growth last year, estimated at 16% this year. Let's say about 8% annualized on the next kind of few years. That's a meaningful boost to defense stocks that we think is worth kind of still investing in. Just seeing any pullbacks is buy the dip opportunity.
Buy the dip in defense stocks. All right. Well, I guess you're buying today and all of last week. We saw defense take quite a hit. But for wider European equities, do you think that that's still going to be the tailwind to attract this foreign capital, this fact that we do have all this infrastructure spending to come? Or do you think any of that is going to be dented just because, is Germany really going to be deploying this capital quickly if there's not a reason to right on the table?
And that's the key catalyst that is real, or the lack of a key catalyst that is keeping us still neutral overall in European equities, because we need to see more conviction that we are going to see some of this fiscal deployment come through more meaningfully. So in the near term, we've actually tilted back into that so-called U.S. exceptionalism trade, let's say, largely driven by what we're seeing come through in U.S. tech earnings, have been exceptionally robust. If we look at what capital expenditure plans are for artificial intelligence, we think that's going to be a meaningful driver. And at the same time, when we are seeing this deterioration in the U.S. economic backdrop, those secular growers, the profitability metrics of these key tech companies, I think will come back into focus.
Do multiples matter when it comes to defense story? A quick search on the Bloomberg terminal. NVIDIA's trading at a 41 PE multiple. Rheinmetall's at 53, almost 54. Do multiples matter in this environment?
I think valuations always matter, perhaps from more of a medium-term perspective. I think it's why we're seeing quite a dispersion across not just defense, but in European equities in general, that really does warrant a more active management approach rather than taking on some of those benchmark exposures. But in speaking with our European PMs, the way they're looking at it is we're going to see meaningful valuation shifts across the defense sector to capture in really this kind of game-changing fiscal stimulus that is really yet to be incorporated, I would say, at the micro level. In terms of corporate guidance, they're not incorporating meaningful defense spending, apart from a couple of the key names that you mentioned, but we'll see how that plays out.
Do I shift, though? Defense has had a great run.
Yes.
And as you say, we've kind of come an awfully long way. If there's a defense deal, do I want to be in the defense names? Sorry, there's a Ukraine deal. Do I want to be in the defense names? Or do I want to then think about reconstruction? I joked at the top of the show, this is about concrete now. Is there a big trade? Rebuilding Germany after the Second World War was a huge trade. It took an awful lot. Rebuilding Europe after the Second World War took a lot of resources, and a lot of money was being spent and deployed. We've had kind of phase one, which is the defense build. Is there a secondary trade to this that comes on the back of it in other areas of Europe? Is it steelmakers? Is it concrete? I'm joking, but there's an awful lot of stuff that needs rebuilding. I'm wondering where the money comes from, and I'm wondering who is ultimately going to benefit from that money being spent.
Well, I think when we look at it from a European equity lens, it's very much a regional story. I think Germany is going to be kind of the key catalyst behind a lot of that spending, whereas others like the periphery, are going to lag behind that. So you really kind of want to be more focused in something like the German DAX and taking less exposure in the peripheries, particularly when you look at how much financials have outperformed. Perhaps we're going to see less of that trade going forward. And then industrials. Industrials continue to be something that we do have strong long-term conviction in. But to your point, maybe European equities are tactically overbought, taking some chips off the table and looking for other opportunities outside of Europe.
Are you not worried about the concentration risk? Again, is massive in US tech. Do you not feel that you and everybody else is buying US tech for exactly the reasons you've just laid out?
Well, and yes, and that's a key risk that certainly we're monitoring. Valuations also come into play. When we look at the NASDAQ trading about 27 times PE. When it gets to 30 PE, that tends to be the cap, and we do see drawdowns on the back of that. But just look at the overall secular story playing out. Capital expenditure on AI is expected to be about $200 billion annualized going forward. We look at some of the key components that are driving fueling a lot of the digitization of the global economy is going to come from tech. Yes, we are going to see spillover effects in terms of European semiconductors is something where we see potential opportunities, but that's all being driven by these tech companies that have had that first mover advantage in the space. We are going to see that kind of second round, third round effects, but I think at this point we're still taking that trade, at least on a tactical basis, for the 12 to 18 months.
Let's talk about something that might hinder that momentum you're seeing in the tech space. That, of course, is the relationship between the United States and China. This morning, what the news is NVIDIA and AMD are likely giving 15% of their Chinese chip sales right back to the U.S. government. In the next 24 hours, the trade truce between the United States and China expires. What do we get out of that? These are the world's two largest economies. What does the price action look like going in and out of that expiry?
I think we're going to see more bouts of volatility because the recent news just captures that we are seeing these kind of piecemeal deals come through, but not kind of that holistic trade deal that really investors are looking for from trade clarity. Now, in terms of how we're positioning, we don't think that's going to be a structural dent on the medium term for U.S. tech. And then when it comes to China, we've actually downgraded China largely because of the growth backdrop. In part, that's because of what we are seeing in terms of the trade dynamics. But we're also not seeing the type of stimulus that is needed, in our view, to bolster the Chinese economy. We had the Politburo more recently, who really signaled a wait-and-see approach. So it's one of the reasons why we're still quite cautious on China and seeing exposures elsewhere in EM. And again, just pivoting back into that U.S. story, despite some obviously risks still ahead.
Well, Laura, the big part of the U.S. story, I think, does remain to be seen on the tariff impact on inflation. We have CPI on Tuesday. What do you think we're going to get, and what is the market reaction off the back of it?
It is going to be a crucial print, just because it's one of the key kind of inputs into the Fed calculus. I think at this point we are going to see further gains in terms of the goods price inflation. We're already seeing that come through. We'll actually be watching for the super core gauge. That does tend to have a high correlation with nominal wages. It will signal whether we are seeing any broadening of price pressures beyond goods inflation. The Fed has clearly said they see this as a one-time shock, likely to be contained in goods. So tomorrow's print won't necessarily be a game changer. We think at this point, 25 basis points is cemented for September, but certainly a trend to watch for.
Are you focused on housing disinflation at all? A lot of people saying that the immigration story can lead to some decent disinflation in housing, and that could really dwarf core goods inflation.
And it's one of the reasons why we've seen overall headline inflation remain fairly contained, just looking at the overall downtrend that we have seen in services inflation. And the question is, if we don't start to see meaningful tariff inflation in goods pick up in the next couple of months, then perhaps the Fed is positioned to actually cut 50 basis points in September. I mean, that's not our base case, but I think it is going to be that key debate among market participants.
There's two people that have said
forward.
that this morning.
Yeah.
The bar is very high.
Unprompted.
Okay,
you mentioned September 50 basis points.
It's your vibes, kind of.
It's not priced in. I think it's good risk reward here, Guy, if you want to take a punt.
What is the risk of a high inflation print? If it does start to show up? Then what?
I think at this point, because we've seen such a significant repricing in the front end of the curve over the past week since payrolls, we are going to see a bit of a knee-jerk reaction on the back of that. But I think at this point, we still see inflation above 3% this year, which does suggest we are going to see upward inflation prints. But again, the Fed narrative has been they're going to see disinflation pressures next year. They're clearly focused back on the labor market, the deterioration there, the wages that are easing at the margin. So I don't think it's going to be as meaningful.
I didn't get that from Powell. Powell sounded he's concerned about inflation. He's still banging that drum. Why do we think the Fed, in its entirety, is more focused on the labor market? They got burnt once. They got burnt on inflation. Do you think they're going to make the same mistake again?
Well, and that's why they've been on pause for so long.
Sure.
I mean, and essentially, if you take a step back, looking at the recent jobs revisions, we've seen 3 consecutive months of fairly weak job prints now.
Sure.
That was kind of the threshold needed for them to cut 50 basis points last September. Again, it's not our view, but I think it just captures that this kind of divergence between the hard and soft data in the U.S., we're actually seeing more of that hard data capitulate by a greater degree than I think the Fed certainly had kind of been anticipating. So it does certainly warrant a 25 basis point cut, regardless of whether we see, 4/10 print tomorrow on core CPI.
Okay. Laura Cooper, Global Investment Strategist, Head of Macro Credits at Nuveen. Core 6 looks like this. Let's talk about what's going on. Defence stocks are under pressure this morning. Orsted's under pressure. You've got Schneider down a little bit, but everything else is ticking a little bit higher. Let's figure out what else we need to be watching. Chloe Melle's here with the details.
Good morning, Guy. Let's start with the defence sector this morning. So we see, as we can see, a little bit of weakness across that sector. Hensoldt, Rheinmetall, BAE Systems. We've also seen some downward moves in Leonardo, for example. That's on the back of the potential truce deal between the US and Russia over halting the war in Ukraine. Moving on to Ørsted, the wind turbine space. It is down almost 24% this morning. So the revenue actually beat estimates. But what investors are focusing on is the rights issue that Ørsted is planning, and that is sending the shares down by quite a lot this morning. Moving on to S4. S4 Capital is up 7% on the back of the potential merger with MSQ Partners, and that is providing a little bit of a boost for S4 after quite a tough year. And then finally, Novartis. Novartis said that its autoimmune drug that it is developing is succeeding in key trials. That's providing a bit of a lift in the shares as well, up 2.5% this morning for Novartis.
All right, Chloe Melle from our equities team walking us through some of those early movers. We thank you so much. Coming up on the program, we're going to do a little bit of a deeper dive into the shares of Ørsted, falling sharply this morning after reporting a new rights issue plan, now officially below its 2016 IPO price. That conversation next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We're 17 minutes into the equity market session here in Europe, and this is the picture at an index level, you're not seeing a great deal of activity, but below the surface, there's some interesting stories that are developing. Defense is down this morning. That is one area you want to watch out for. Ørsted is taking a really big hit on the back of an announced rights issue this morning. We'll come back to that story in just a moment. But broadly, these are markets that are waiting for the next big catalyst, and there are big catalysts that could potentially come this week. One in the form of CPI, the other one in the form of this Alaska meeting. But you've also got there's other stories that are bubbling up. This lithium story out of China, I think, is really interesting.
The fact that China has kind of, at least from a news flow perspective, fallen on the back foot, I think is crucial here from a narrative point of view. But of course, as this lithium story takes foot, we're trying to connect the dots here in terms of what it means for the European markets. Chinese battery giant CATL has suspended activity at a major lithium mine in China. Now, we understand that the closure could last at least 3 months. When you talk about the European read-through into that, this is where we struggle a little bit because this is part of the supply chain for a lot of the EV space, but doesn't have a direct impact when it comes to Europe. For more on that, we're joined by Bloomberg's Global Autos editor, Craig Trudell, on this story. Craig, just connect the dots for us.
Yeah, I mean, this is, in short, a case of China and CATL specifically having so dominated the sector, and the criticism for some years now has been they've done so by sort of deliberately, putting themselves in this position of overcapacity to where they could drive their costs and prices down so much that they could build this massive domestic industry that then could turn into a significant export base. That has absolutely come to pass. And yet there's been a lot of criticisms externally about, this can't last, that this can't keep up. And you hear this even from CEOs in the U.S., Mary Barra or Jim Farley at GM and Ford. This is a case of sort of, something coming home to roost that everyone has been predicting for some time, that surely you can't, sort of keep overproducing and driving prices down to such a tremendous degree forever. At some point, something's got to give.
Lithium prices have come down really sharply.
Yeah,
I'm just looking at the chart now. 2022, we're in the 80s. We're now in the 8s, right? 7s. We're kind of at 8. So a huge drop in the price of lithium. If I was to take an average EV, how much of the cost of an average EV is lithium? I'm sure you don't have the exact number, but is it significant?
Yeah.
Are we going to see, if prices rise of lithium, are we going to see rises in EV prices? Because lithium prices have come down. I haven't seen EV prices coming down very sharply.
Well, and I think that's the real question here, right? Where because we have seen prices come down for batteries and for EVs in China, and it is in no small part because of the fact that we've had so much production of these raw materials. Absolutely. Okay. And so, and our colleagues at Bloomberg New Energy Finance at BNEF track battery prices on a yearly basis, and you have seen these dramatic reductions and differences.
Because of raw materials.
And because of raw materials being a big component of that. And we've seen those prices, though, we've seen dramatic come downs for China, but in terms of that filtering through the rest of the world, because of the fact that the rest of the world, has so struggled to compete with China to build their own domestic, say lithium or other raw material industries, we've not had a sort of opening for other suppliers to be able to compete because prices have been driven down so dramatically.
Craig, why did China choose now to act? Are there broader implications of this? We know that the U.S.-China trade deadline is Tuesday. Does it have anything to do with one another?
I don't think so. I think this was a sort of specific instance of a license for this mine sort of coming due. And so it is definitely interesting that aligns with these trade talks, because it is obviously, sort of, makes one question. Timing. Yeah, it makes one question whether the two are aligned, and I think it's a completely legitimate question. But I think this sort of opportunity was brought about by the fact that this had an end date, and we've reached that point. There's been some speculation, just given the dynamics in this market, the dramatic come down in price, that something was potentially going to give here. We had reports coming into this weekend of people flying drones over this mine. There was a lot of speculation that this mine was potentially going to be headed for this destination of a shutdown.
Craig, a final question to you, kind of on the same theme that Valerie was hitting. We are less than 24 hours away from some sort of development on the U.S.-China trade front, whether that's another extension, whether that's a breakthrough. Tesla has been kind of nestled between these two superpowers. Walk us through what the impact might be. Where are they most vulnerable? Where are they perhaps not?
Well, when you talk about a China trade perspective for them, what they point to immediately is the energy business. And, the car business, of course, is the predominant, portion of their revenue, of their profits as well. But, in terms of what they're reliant on China for in the rest of the world, it's LFP batteries for energy storage systems. And as we've seen this real slowdown with their EV sales, we've actually seen the energy side being a source of growth. That suddenly has come to a halt because of these tariffs taking a real serious hit to that business. And so, you've not only had this slowdown of EV sales that everybody's paid a lot of attention to, but also that EV storage, industry. If they continue to have this significant, challenge of higher tariffs on those batteries, that is a business that is in real trouble.
Let's see. Let's stop by to kind of explain it all. Trying to figure out timing, what impact it's going to have. Craig Trudell, thank you very much. Let's talk about how some of these electrons are generated that go into some of the cars that we've just been talking about with Craig. Some of them come from wind farms, and that is my segue into talking a little bit about Ørsted, which is certainly not feeling the power this morning, and the stock is down, as you can see, quite sharply. The analyst take that I'm reading at the moment is that the rights issue that's being announced this morning is basically short-term pain, long-term gain. This is a company that needs to stabilize its balance sheet, and as a result of which it's going to issue equity to do that. But you can see the short-term pain in terms of the stock this morning. It is down by nearly a quarter, 24.4%. Let's find out why. Christian Weinberg, who covers Ørsted out of Copenhagen for us here at Bloomberg, joins us now. Christian, just explain why this is necessary, why so much short-term pain is required by Ørsted to stabilize things maybe over the medium term.
Yeah, well, it is a surprise that they're doing it. As you say, it's definitely short-term pain. Ørsted has had a lot of issues facing higher costs for their wind turbine parks, and especially in the US and also in the UK, they have cancelled or delayed projects. So the company has faced these issues which have weighed on the balance sheet. It's a bit of a surprise that they do it now, because the new CEO who came in at the beginning of this year said that he was able to turn things around with his cost cut and his investment reduction plans. But perhaps he has looked at the balance sheet and said, well, maybe it's time to do it now anyway, despite the measures that he has set into space.
Christian, we'll leave it there. Thanks very much indeed for the updates. Christian Weinberg covering us on Ørsted, talking about what is happening. This is a Trump effect.
Yeah.
Like this is what happened off New Jersey. This is Trump not liking wind farms, particularly at the end of the 18th, but generally not liking wind farms. The UK, though, has gone down this road very, very heavily. Yeah. It is rippling through. It's going to be interesting to see what Vestas has to say about all of this, what the effect of all of this is going to be. But this is a sector that for a while looked like it was going to literally take off. But now the Trump administration has put that very much in the rearview mirror.
Yeah, and you wonder, just will this deregulation when it comes to the EPA, having a mandate about carbon emissions, is this just the beginning of this deregulation in the energy industry? I think that's what it makes me ponder, at least.
Imagine losing almost a quarter of your stock value without even issuing some sort of stock split or at all. I mean, that's the pain that we're kind of seeing in Ørsted this morning. I'm curious if it recovers.
More shares. Dilution, yeah, sure. That's what happens. The arithmetic is fairly straightforward.
Well, the energy industry in turmoil, that's for sure. Well, coming up, EU nations are seeking talks with President Trump before his meeting on Friday with Vladimir Putin. We'll have the latest on that next. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Minutes into today's session, and it's starting to feel like the flowers may be coming off of the bloom, at least when you look at the DAX. I think this is really indicative of what we're seeing underneath that hood. That unwind we saw in the defense story last week really kind of flowing into this week as well, and that's why the DAX is the underperformer. But again, not by much. These are some sleepy markets, because on the index level, if your outperformer is the stock 600, higher by 0.2%, or I should say the FTSE 100 actually, only moved by 0.3%. I think that tells you everything you need to know about this August Monday, Guy.
Okay, let's talk about the internals. What is happening in this market? You've got a lot higher than lower at the moment. You would have thought, therefore, this would be a market marching on the front foot, but it's not. Volume is super light. It's August. Of course, it's going to be super light. But let's talk about some of the 52-week highs and lows. Let's whip through these and just show you some names and numbers to give you an idea. Raiffeisen, British American Tobacco, Holcim. Look at that, Holcim, 52-week high on Holcim this morning. The concrete trade, we were talking about that. Is the reconstruction trade going to be the next defense trade, or is the defense trade going to morph into a reconstruction trade? That's the potential Ukraine narrative. Let's look at some lows, though, because that's where we're also seeing some pretty interesting trades as well. Let's just whip through some of these names, and there's a few that you really want to stand out and look at. Orsted is obviously the name that is really in focus this morning. The stock down by 26, nearly 27% this morning. 52-week low, definitely. That's on the back of the rights issue. Short-term pain, maybe some long-term gain here, Val. We'll wait and see. This is the Trump trade as well, in action here in Europe.
Well, here's what else you need to know this morning. U.S. President Donald Trump says he hopes China massively steps up its purchases of American soybeans. The comments come just one day before the trade truce between the two countries expires. And Bitcoin has risen within striking distance of an all-time high as demand from institutional investors and corporate treasury buyers lifts the wider market for digital assets. And Bloomberg has learned that European leaders are aiming to talk to Donald Trump ahead of his meeting with Russian leader Vladimir Putin on Friday. Putin is demanding that Ukraine cede territory as a condition to unlock a ceasefire. Zelensky said over the weekend that Kyiv won't and constitutionally can't cede any territory. Pretty?
Yeah, it's a fascinating one here in terms of what the ripple effects actually are when it comes to this Ukrainian-Russian American, if we can throw it in there, truce deal, because there's so many different outcomes here, Guy. The idea that we have the same outcome as last time around, where it kind of feels like we're heading to this idea that Vladimir Zelensky is saying no territory is ceded, where European leaders saying no way. I think the game changer is that the NATO Secretary General, Mark Rutte, actually saying, this might necessarily have to be on the table.
It might be on the table. Whether or not it stays on the table remains to be seen. It'll be interesting to see how the Europeans influence the narrative this week. It's interesting to listen to the Vice President, J.D. Vance, saying basically, if you're so wedded to this idea that we don't see territorial shifts, then you need to stump up the cash to keep this conflict going. And I think that's going to be something that the Europeans are going to have to think about as well. But that feeds us back into the defense stock story. There is an odd outcome here that if you don't get a deal done, Europe may need to spend even more on defense. So actually, it'd be interesting to see how this trade works by the end of the week.
Is it a relief factor in the European markets, or a massive negative and a continuation of the unwind we're seeing at least today and for most of last week? Let's dive into the details, though. For more on this, we're joined by Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, just give us some of the nitty-gritty here. How likely is it that Ukrainian President Vladimir Zelensky will be presented with a deal that forces him to hand over some of that territory to Russia? Is this a repeat of what we saw a few months ago?
Well, that is the biggest worry among European capitals and in Kyiv itself. They do worry that there is a deal that's going to be done without them at the table that does call for land to be ceded. That, of course, is something that Kyiv has ruled out as constitutionally that they just can't do under the Constitution. They can't cede their sovereignty. So this is not something they want to see. Europe views it as huge concessions to the aggressor in this war, Russian President Vladimir Putin. So they don't want to see this. Another big issue is that there hasn't been much talk of security guarantees for Kyiv. If there is such a deal, and clearly land has come up a lot in this, but not the security guarantees that Kyiv has sought. If the conflict is going to stop, what is going to prevent it from restarting again? So that hasn't come up. Now, of course, Europe has sought to try to influence the Trump administration to make sure that their concerns over land, over security are taken into account, but yet they don't really have as many levers to influence Trump. And clearly, they're not at the table at the moment. They're not at the table in Friday's meeting, and at the way it looks right now, it's unclear whether even Zelensky will be at the table. It doesn't look like he will on Friday. So those are real fears among them.
All right, so Greg, you mentioned Zelensky might not be at the table at these discussions on Friday, but is it likely that Trump is going to put to Zelensky in a kind of deal or no deal scenario? And in the, I guess, outcome that Zelensky chooses no deal, could Europe make up for the lost U.S. support in that scenario?
Well, that is a great question. Europe, their industrial military production hasn't been going quite fast enough to potentially close that gap. Right now, Ukraine has up until now really relied upon U.S. support, both in intelligence and military armaments. Europe just doesn't always have the same weapons that are needed, or if they do have them, they're not always in the same quantities. So it's unclear how much they can actually provide to Ukraine. Certainly not as much as the U.S., with the U.S. pulling back. Now, of course, there was that the U.S. did say that they are willing to sell Europe the weapons to provide to Ukraine. J.D. Vance, in his comments in Europe, seemed to underscore that that would be the arrangement going forward, that the U.S. doesn't want to financially fund Ukraine. But right now, the way it looks, Europe just can't make up that gap. So they can be vocal in their support, but when it comes to actually providing physical armaments, it doesn't look like they can actually close the gap for Ukraine.
In terms of what could ultimately come out of this, is the next play, say we do get a deal over the weekend. So say something is put together, the details sort of come out of Friday, and we start to work our way through the weekend, and we start thinking about what could come next. Is there any idea what could come next? What would Ukraine look like at the end of this conflict? If that conflict came to an end quickly, what would happen? How could the Europeans pivot on that? I'm just wondering what the next phase of this looks like. We're so focused on kind of how we end it, but we need to think about what comes after that.
Of course, and there's a number of scenarios that could play out here. One, if what comes out on Friday is a deal that Ukraine just can't accept, then it's hard to see the fighting stopping. If Ukraine can't accept the ceasefire because of a land swap, that puts them in a very tough position because they will essentially have to keep the fight. So not much progress would be made in that scenario. If there is a deal that is somehow tenable to Ukraine, even for a temporary ceasefire, then of course negotiations will have to continue to try and get to a permanent ceasefire. ceasefire, to a permanent resolution of the conflict with the possibility that fighting could continue or flare up again. Remember, in 2014, Russia annexed Crimea, and there was still some simmering tensions and fighting. And again, it flared up in 2022 with the invasion of Ukraine. So there's always the possibility of fighting again in the future, something that Ukraine has made very clear that they're concerned about, which is why they have striven for security guarantees, something to prevent the conflict from restarting or from Russia from saying down the line that they want more territory.
Yeah, and the concern here is that Russia is given breathing room to add to its military might and therefore proceeds with another conflict further down the road. Greg, great stuff. Thank you very much indeed for updating us. It's going to be a busy week. We've got a lot to debate as we work our way through the week towards the meeting in Alaska Friday. Joining us now, Jane Kinnamont, CEO of the United Nations Association UK. Thank you very much indeed for joining us. Good morning.
Good morning.
What do you expect on Friday?
At best, I think there will be something called a framework agreement that is proposed by Trump and marketed to both Russia and Ukraine. Yeah. The idea of that, which is being written about by some well-connected think tanks in Washington and elsewhere, is that you would set some kind of parameters for what peace talks would lead to. At the end of the day, this conflict has been going on at high intensity since 2022, but from the point of view of many, including Ukraine, it's been going on since 2014. You're not going to end a conflict like this quickly, but you could start a process with a sense of there being shared end goals. It would take many months.
What do you think those end goals could be? Is it land swaps? Is it security guarantees? What does an end deal look like?
There will be some focus on security guarantees, which may well be instead of NATO membership, something that would represent a compromise for Ukraine.
And Putin would be okay with that?
There's a lot of devil in the details here, but I think there would be something for each side to market to their home constituencies as some kind of victory. Potentially, Putin could say, I kept Ukraine out of NATO. But security guarantees are very tricky. We know that European countries, including the UK and France, have security agreements with Ukraine. They want to provide those guarantees. But they will, at the end of the day, be nervous about putting troops on the ground unless they feel the US would back them up, including in dire scenarios such as Russia threatening to use a tactical nuclear weapon, which we cannot rule out. So the US would need to be willing to provide some kind of guarantee. Of course, that's an area of great uncertainty.
Well, speaking of those tactical nuclear weapons, Jane, in the last 7 days, we've heard that Russia, unsurprisingly, is pulling out and has called the treaty of the INF Treaty of 1987 kind of dead in the cold water. For international audience, that's basically the intermediate nuclear missiles that have been agreed to be taken off the table, basically putting back on. Plus, there was that social media exchange between Donald Trump and Dmitry Medvedev as well. Why did Putin say yes to this? Despite the fact that we are now talking about Donald Trump very publicly saying there are nuclear submarines in the water, that there is this kind of frigidity between some of the folks representing Putin as well. Why did Putin say yes to this?
Well, in many ways, when the talks focus on nuclear, that's an area where Russia is quite comfortable. If you look at the history of summits between US and Russian leaders, really they became very, very important after the Cuban Missile Crisis, because the world could see whether or not these leaders agree with each other, they need to be able to talk at the end of the day on nuclear weapons, or the whole world can potentially suffer. Today, Russia isn't the global superpower that it was during the Cold War, but nuclear weapons are one of the ways that it gets to remain relevant, and it has hinted at those weapons coming into play in Ukraine some time ago. So I think this kind of heated nuclear rhetoric that you've seen is part of the preparation for the summit in a way. But I wouldn't be too relaxed about this, of course, because all of these agreements really are falling apart. There's one remaining arms control agreement governing nuclear weapons, New START, between the US and Russia. That expires in February 2026. So one of the things Trump and Putin may also be talking about is what might come after that.
Wow, a little bit of, speaking of deja vu, which has been a theme of the show today, talking about a deja vu of the Cold War. Talk to us about the economic war machine behind it. In the last 7 days, again, we had 50% tariffs being put on India now as a punishment in terms of buying Russian oil as well. We know other pressure has been put on other Russian allies as well. How much more money does Putin have to continue this?
Well, the Russian economy has really defied predictions of buckling under sanctions, because at the end of the day, an authoritarian government doesn't necessarily make its judgments based on the overall health of the economy and the job prospects for its people, but rather on its own ability to sustain itself and the constituencies that are most important to it. So far, they have developed a war economy that has managed to keep going quite successfully. They have been able to get round quite a lot of the sanctions on oil as well. And although Russia is losing out in terms of its access to global technology, that is more affecting its medium to long-term growth prospects rather than putting pressure on Putin right now.
Jane, we've heard that the EU foreign ministers are holding an extraordinary meeting today, and that European leaders have been wanting to speak to Trump before he meets with Putin on Friday. Do you think Europe deserves a seat at these negotiations and at the table on Friday?
Europe will need to have a voice, because at the end of the day, if there is to be a ceasefire in Ukraine, it's very likely that Europe will be involved in monitoring that in some way, whether that's through the OSCE organization or some kind of bespoke monitoring mission. Europe may well end up being the primary financier of Ukraine, both in terms of the military effort but also the reconstruction, for a long time. So they can certainly say, we're going to be involved and we need to be acknowledged. But we know Trump strongly prefers bilateral to multilateral.
If European leaders do get on the phone with Trump before this meeting on Friday, what do you think they'll push for?
They will push for a US underwriting of European security guarantees. They will say, we are willing to put European potentially boots on the ground. We're willing to put Europe at the forefront of this. We've done what you asked in terms of upping the defense spending commitments and all of this. But we want to know that if Russia threatens nuclear weapons against us, the US will be there backing us up. That will be the kind of offer that they're asking for.
But what's the point of that, Jane? I mean, the U.S. can see through that. Everyone can see through that. We know the U.S. doesn't want to do that. They don't want to put boots on the ground. Why would they even indicate any sort of willingness to back up the Europeans? The idea that J.D. Vance has put forward famously in the Munich Security Conference was the Europeans are at this alone in every way except for when a conversation needs to be had with Putin.
I think Europeans accept there'll be no US forces on the ground, but they'll want to feel that there is a kind of backer of last resort, that if Putin was to hint about nuclear use, then he would get threats in return from the US, but probably very, very quietly. They will also want the US to give them access to intelligence and so forth, but they will appreciate that Trump would want all those things to be quite subtle, and that he would want to be able to show his constituents that he's succeeded in getting Europeans to step up. And I think all of these phone calls will involve quite a lot of flattery and telling him that he's been a roaring success.
What would reconstruction of Ukraine look like? What would be required to allow that to happen? How long would it take? What comes next? Say a deal is done, a security guarantee is achieved, that the fighting stops. What happens after that?
So businesses will be interested in going back into Ukraine, but these won't be businesses that have quite a high tolerance of risk already, because I think that there will be a lot of ongoing questions about what the security guarantees will look like. And it's an economy that's probably going to remain quite militarized for the foreseeable future. We will probably see a lot of interest in military and technologies associated with.
There's a lot of infrastructure, like roads, railways, hospitals, housing. So much needs to be rebuilt.
And there will be money coming in from Europeans and from international financial institutions that will help a lot of that. But ultimately, the amount of investment is going to depend heavily on whether there can be an underwriting of security to help make that happen.
Okay, nice to see you. We'll wait and watch.
Thank you.
Build up to Friday. Jane Kinmont, CEO of United Nations Association UK. Thank you very much indeed. Let's take a quick look at what is happening with one of the stocks that we're watching so carefully this morning. That is Ørsted. The wind farm company is down by, as you can see, 26.2%. This not on the back of the numbers it's produced this morning, which actually exceeded expectations, but on the back of the rights issue it has announced to stabilise its balance sheet. We'll come back to that story. Down by 26% right now. This is Bloomberg.
is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come, while we've invested in the convention center. The reason we focused on housing and getting rid of the vacant housing. The reason we focused on violent crime. And now Baltimore is having among the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 50 minutes into today's cash trade session in Europe, and the rally does seem to be petering out just slightly. Eurostoxx 600 up 0.2%. We are seeing NASDAQ futures dip into the red for the first time this morning. S&P 500 futures also very close to entering the red. So maybe that kind of excitement from these U.S.-Russia trade talks wearing off as the cash equity trade goes on. But let's go to Switzerland, where the government has reached out to local drug makers Roche and Novartis to discuss the tariff situation. It comes after the country was hit with the highest U.S. levies in the developed world. Bloomberg's Paula Denecki is in Berlin and joins us now. Paula, so far, pharma firms have not been hit by tariffs, but that could all change. And what effect could it have?
Exactly. So President Trump said last week that in the next week or so, he might announce tariffs on pharmaceuticals as high as 250%. Now that could play out very differently because it's quite a complex market. I mean, what happens first is that obviously that drugs, that drug makers like Roche or Novartis import into the US, they have to pay those tariffs, which means either they pass them on to patients, which is obviously difficult, as President Trump made very clear he expects those drug makers to decrease prices, or it will affect their margins quite badly. Now, what Trump wants is them setting up production facilities in the US, and in fact, they have pledged to do that, though it will take some time. It looks like the US administration has an understanding of that, and they said those tariffs would be phased in over some time. They would maybe be smaller at the beginning and then grow. So it's not unclear. It really depends on the timing and how the rules will be specifically.
Other sectors that are going to be affected, what else should we be watching out for?
Other industries that we should be really looking at is the Swiss watch industry, because they are so proud of their Made in Switzerland trademark. And obviously this is kind of what the Trump administration attacks, because this is what they have to pay the levies on. And it's not clear yet. We know Swatch told us that they have exported quite a bit of their watches into the US to make sure that there is enough product there for now, and everybody hopes, I guess, that those tariffs will come down at some point. But if that's not the case, and if they have to import their products to the US, they will be very expensive, and it will hit their margins and also profits.
Absolutely something we're going to be keeping a close eye on. Bloomberg's Paula Dunica joining us out of Berlin. We thank you so much for walking us through some of that that we can expect this week. Let's talk about some of the other things we can expect this week as well. We've got a couple of earnings sprinkled throughout the week, but I think the data seems to be the hot button issue. UK labor market data due tomorrow. Of course, US CPI as well, plus the expiry of that trade truce extension between the United States and China. That's going to be a key story for tomorrow. And then going into the end of the week, we've got that PPI data and U.S. retail data. Inflation, consumer confidence out of the States, very much on the front foot. Val, what else is catching your attention?
Well, I was reading over Michelle Bowman's speech from Saturday. I was really surprised that this speech wasn't more juicy, Guy. I thought if someone was going to mention a 50 basis point cut in September, it was going to be this lady. She did not. She reiterated it in her view that the Fed should still cut at 3 times through the remainder of the year. So that is a cut at every meeting. She also harped on her view that she basically the reason why she dissented in that decision was because she sees greater risks to the labor market than inflation. For her, it's all about this move in core services and housing. That tick down in inflation is the reason why she thinks the Fed should keep cutting. If you flip on, I want to just show you what the picture looks like at the moment of U.S. inflation. We are seeing core goods tick up, and that is worrying some of the hawks out there at the FOMC. But the doves, you got Waller, you've got Bowman, are way more focused on core services, on the housing disinflation. If that stays on track, the Fed should be cutting.
Last time I heard from Powell, he pretty much ignored these people, and I thought that was really interesting as well. I don't know. Would 50 basis points be an emergency cut? How would the market react to that? I don't know.
But that's reacting. So I have all the sympathy in the world for Jay Powell and the folks on the Fed at the moment, because if you lean into that, if you lean into this revisions data, if you say, okay, the labor market is cracking, this is the moment to act, we get it, we are hearing Donald Trump's message, and then the tariff numbers, the tariff read-through shows up in the fall into holidays, then suddenly you're like, wait a second, we were right all along and we've moved too fast. And I think that's the fear that seems to be I don't know, haunting Jerome Powell?
Exactly. Yeah. He's been bitten by the inflation story before. Does he want to get bitten again?
But the not acting is equally painful.
I agree, potentially. And the labour market can accelerate really quickly on the downside when it happens.
Mm-hmm.
Would 50 basis points be conceived as an emergency cut?
I don't think so. No, we've gotten clarity on inflation. We've gotten clarity on the labor market. And as you just said, when the labor market deteriorates, if we look at history, it deteriorates rapidly. So that is enough for them to bring those cuts forward.
So is that good for risk or is that bad for risk? So if the labour market is deteriorating rapidly, that implies that we are in a situation where actually the economy is slowing quite fast. Mm-hmm. Will the stock market see 50 basis points as a good thing, or actually look at the data and go, this is an economy that's slowing down? I know the answer to this question.
No, but we have to then separate out what you mean by the equity market. If you mean tech stocks, no, I don't think they're going to be worried about this. If you think about the rest of the stock, the Russell 2000s, the small caps, yes, those are going to to get hurt, but I don't think the AI trade is going to get hurt, and it's hard to really be bearish on the S&P 500.
So the 50 basis points is neither here nor there for the S&P 500.
I think in some ways you can argue that, yeah.
Right.
That's a bit much. Come on, like it's such an
lower front end rates do help economic growth in some way, right?
No, absolutely, absolutely. But it would also it's trying to address an issue in the labor market that, to your point, the tech story is completely insulated from, but also not really, because they're sitting on so much cash as well. We can go into this for ages. That does it for the opening trade. Tune in tomorrow for a continuation of this conversation. The Pulse is up next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
NVIDIA and AMD agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government in return for export licenses. Lithium prices spike after battery giant CATL halts operation at a key mine in China after failing to get a new permit renewed. And the NATO chief, Mark Rutte, says negotiations about Ukrainian territory may be on the table as President Trump and Vladimir Putin prepare to meet. Now, first thing is first, there's quite a lot going on this Monday morning in August, of course, in world news, and the impact on the markets can be felt. Now, S&P futures, you can see practically flat. I would point to Brent crude down some 1% at 65.93. Again, there is a little bit of optimism in the markets out there. Volumes are a little bit thin. Remember, it is a weekday in August where a lot of the Europeans are actually at the beach, but stocks are climbing, oil prices falling again on optimism that this upcoming meeting between Donald Trump and Vladimir Putin could boost the chances of finding an end to the war in Ukraine. Gold 3,361, euro dollar 116.47. Now we're at the tail end, of course, of the earnings season. Let's get straight to the European markets map. But it's very clear that there's more of a risk sentiment out there when it comes to some of the ones that still have quite a lot of exports. I'm thinking of the DAX and the CAC 40. When it comes to the FTSE, it's gaining some 0.2%. Let's also quickly have a look at what NVIDIA and AMD are doing pre-market. Again, this is an unprecedented deal, saying that they'll pay a certain percentage to the Trump administration in return for some of the permits, basically, to sell to China. NVIDIA down 1.2, AMD down 2.5. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bloomberg has learned that NVIDIA and AMD have agreed to pay the U.S. government 15% of revenue from Chinese chip sales as part of a deal to secure export licenses. Now, the deals with the Trump administration come as the president prepares for a summit with the Russian leader, Vladimir Putin, in Alaska on Friday. In a moment, we'll get the market view with Subita Subramaniam, head of investment strategy at Saracen & Partners. But first, let's dive into those top stories with Rosalind Matheson, our EMEA news director, and Susan Lynch, our Brussels bureau chief. Ros, let's start with you. NVIDIA and AMD agreeing 15% of their revenues in exchange, basically, for export licenses. Is this really a new way of making business with Donald Trump? Is it financial payout for trade concessions?
Well, it's certainly very unusual, to say the least. So this would be them paying revenue from their AI chips specifically sold in China. And it's not actually a ton of money, at least for now. These are chips that also NVIDIA is seeking licenses to start shipping again to China. So we're not talking about masses of money, but it is an unusual approach to essentially say you're putting an export tax on specific companies. And so you're going to take a slice of their revenue in order to have these deals flowing. And does that set a precedent for other companies that are looking to do business into China or elsewhere? This would be the first case that really can recall in a very long time of an export tax. And certainly there are questions even over the legality of it. Is it actually allowed and something that would legally be acceptable or could be challenged, and by other companies also? But it could suggest that this is maybe a playbook that could be emerging for Donald Trump for other companies also. And we've seen it really in the array of developments over the past couple of weeks, be it with Apple or others. You know, if you bring manufacturing, for example, back to the US, if you pledge money, you'll get lower penalties, or you'll get, in fact, no penalties whatsoever. So it's very, very personal. It's very based on individual companies as a template. And it's very difficult for companies, therefore, to work out which is the thing that they're going to get in all of this. But certainly this is a very unusual move, and it would bear to be seen, actually, whether it would actually get through and be allowed to take place.
Yeah, I imagine, as you think, Ross, like, you know, the other corporates are thinking, what does it mean for us? Beijing is probably thinking, again, longer-term implications of this. Susan, what does it mean for EU negotiations on trade?
Is looking closely at this development, as it is doing to everything that's coming out from Washington. Now, there is some optimism here that the European Union is protected from any of these new measures, new arrangements, because it did 2 weeks ago lock in that 15% on reciprocal tariffs, and it believes that that 15% is set in stone now. So, for example, last week when Donald Trump announced a 100% tariff on semiconductors, with this big exception for companies that manufacture or manufacturing that happens in the United States, the Europeans were very quick to say, look, we're not included on that. We've already got our 15%. Similarly, we're expecting future statements by Donald Trump on pharmaceuticals, and the European Union are saying that they're covered by that 15% when it comes to pharmaceuticals. However, the reality is that we are still waiting for a document, a joint declaration between the United States and the European Union. It still hasn't been forthcoming. The White House did issue executive orders setting out some of these terms that it agreed with the EU, but not everything. Similarly, we are expecting, and we're still waiting for some kind of a statement from the White House about cars and other sectoral tariffs. So it is by no means finished when it comes to the EU-US trade deal. But as I say, European Union negotiators are confident that 15% rate is pretty much there to stay.
And Ross, we're also getting, of course, you know, a little bit of noise on soybeans and China. Is there an agreement? Are we near an agreement between the US and China?
Well, our understanding is there isn't currently an agreement, but there could certainly be one. And Donald Trump was floating that, saying that he'd like China to buy a lot more US soybeans. But the timing is interesting because we're coming, obviously, to the rollover of the US-China trade truce. We're also coming weeks before US farmers harvest their soybeans. So they're going to have a lot of soybeans to sell. And so basically he's saying to China, you know what, if you're willing to buy some more soybeans, that would really smooth the way for the rollover of this trade truce. And it's in interest of the China potentially to do so. They do need to buy a lot. They've been diversifying their sources of that, which has made sense strategically from countries in Latin America and so on, but they don't have to buy them from those countries. They can easily buy them from the US, and you know, at a good price. It makes sense to do so both for farmers in the US, for businesses in the US, but also strategically to keep things on an even keel, because of course we're all building potentially towards a meeting between Xi Jinping and Donald Trump later this year, the sense of can we get to the point where they are going to have a proper summit. And so China's sensing the mood on that. This is Donald Trump floating it as a possibility, and it's an easy win really for China just to meet him halfway on it.
And Suzanne, what do we know about the Trump-Putin meeting in Alaska on Friday? I mean, this is a big deal. Oil is actually moving on the back of it. Putin, though, wants Ukrainian land.
Yeah, look, this is a big week for Ukraine. That summit taking place now on Friday in Alaska between Donald Trump and Vladimir Putin. The Europeans, the EU is holding an emergency meeting of foreign ministers this afternoon. Now, that will be a virtual meeting by video conference, not here in person in Brussels. But it speaks to the urgency with which Europe and a lot of actors are viewing this development. As you say there, Mark Rutte, the NATO chief, confirmed over the weekend in an interview with the US media that, the issue of territory here is going to be on the table in some way. Now, whether this is Ukraine acknowledging in some way some of the land it sees as temporarily lost without ceding sovereignty, but this issue is likely to be the key focus of the meeting on Friday. Now, the Europeans are not going to be at that meeting. I don't think there's any expectations they will be. However, there's still hope, and I think Europe is pushing for this, that Volodymyr Zelensky, the Ukrainian president, will be included in some way. They're also pushing, we reported on Sunday, to be able to speak to Donald Trump before that meeting, the main European leaders, if you will, to have some kind of conversation with Donald Trump to kind of set out some of its demands or its wishes ahead of this meeting. But generally, a big week for Ukraine, and all eyes are on that Friday summit in Alaska.
Thank you both for a terrific briefing on this Monday morning. Rosalind Matheson, our EMEA News Director, Suzanne Lynch, our Brussels Bureau Chief. Now let's also bring Subita Subramaniam, Head of Investment Strategy at Sarazen & Partners. Subita, we'll talk a little bit about oil and Alaska in a second, but overall, look, trade, it's unclear exactly where we are, given the ongoing negotiations. I think there's a lot of relief maybe on the markets that at least we've had that hurdle. The kind of deadlines have passed, but how do you see it developing further?
So I think there's more certainty now than there was, say, in the months after April 2nd. But if you step back and you say, well, on April 2nd, the average effective tariff rate in the US was 28%. Now we think it's about 18%. And actually, if you think about what's happened with India, with Switzerland, there is no certainty that actually it stays at 18%. If anything, I think this is sort of a universal tool that President Trump and the administration really will come back to. So I believe that 18% is the baseline going forward, and businesses and everyone else will now start to optimize around this 18%. But I don't think we can take it for granted and that it will stay here, because it actually, from the administration's perspective, it's been quite successful. It's bringing in heaps of revenue from their perspective, about $350 billion now at the current run rate. So I think they will, I suspect, be tempted to go back to this well repeatedly.
But is there a concern, again, that markets just seem to be ignoring it completely? I know partly it's driven by tech. But actually, does it make sense to you that the economy, we're seeing question marks on the labor market in the U.S., on inflation, but actually the market is just roaring ahead?
So I think Mary Daly, the president of the San Francisco Fed, had a fantastic analogy. She said, U.S. households and businesses seem to be standing at the edge of a cliff, and they have this amazing view, and they think everything is fantastic. AI is going to bring in this huge amounts of productivity improvements. The U.S. is getting a lot of tariff revenue. It's righting its relationships with the rest of the world. But actually, there's a sort of there's a sense of sort of insecurity, and there's a fear that actually the rocks under your feet might give away. So it is really a complicated feeling that, we're very comfortable with what we see, but we're not quite certain that it's actually going to last. So, and I think markets are a bit like that.
Yeah, and it feels like we still don't know exactly how exporters are going to behave, right? Whether they absorb some of the costs and then see 5-6 months down the line, or whether they just pass it on to consumers.
Yeah, and I think history tells us, and there's no reason to say every economic model is broken. I think generally tariffs will get passed on to U.S. consumers. It's really a consumption tax on imported goods. Right now, American businesses have actually absorbed a huge amount of the tariffs. They basically said, we don't know what the end number is going to be, so we're just going to take it on our P&L. But now that they know it's roughly 18%, the sort of landscape is fairly more certain than it has been. I think they now start to pass it on to the consumers. So eventually, inflation has to start picking up. We've started seeing the early signs of inflation in last month's inflation data, and I think now we get that this week, and I think we'll start seeing more of it.
So does it matter? I mean, there are many questions, I guess, that we'd all want the answer to. It's inflation. It's what happens to the Fed in U.S. China. But is it likely that we get a cut from the Fed in September, also given labor markets, despite inflation creeping up?
Yes, so I think we have an environment of sort of a whiff of stagflationary pressures starting to come through. So now we're starting to see the first signs of inflation in imported goods. Yes, inflation in housing is starting to moderate, as every model told us it would right about now. But, you know, goods are starting to pick up. Businesses are now saying that they will pass on prices to consumers. And at the same time, the growth is looking quite, you know, it's starting to bear the impacts of all this uncertainty, the labor market crackdown. So I suspect, and I think the Fed has sort of signaled that September 25 basis points is pretty much on the table. The real question is whether they go larger. We've had Stephen Myron, who's been nominated as the new Fed governor to the board now. He's only there temporarily, but I think he is a fairly sort of, you know, credible and respected economist. He's not really a policymaker, but, you know, for long anyway. And he will, I think, change the nature of the debate at the Fed. I suspect he'll push as Waller and Michelle Bowman to push for a 50 basis point cut. He could dissent with a 75 basis point cut as well. So I think this idea of a cohesive Fed, which is starting to break down, also starts to sort of enter the market's narrative.
I mean, Stephen Myron is also the architect of the Mar-a-Lago Accord. Savita, give me a sense. I mean, if there's a 50 basis point cut, does it panic the markets because it looks like it's an emergency? Or is it the right thing to do and then see what happens in the coming months? Stagflation, let's just remind, is an absolute nightmare for anyone to deal with it, but especially the Fed.
Yes, so I think we have the, you know, we have the summit, in the Jackson Hole summit at the end of August. So I hope that at that point, if there are a number of members of the Fed who are seeking to change their position, they telegraph that quite carefully, and they have a clear sort of narrative as to why they would move more aggressively. The arguments could be very simple. Waller has already said that, you know, he believed that we should have cut rates at the last meeting. So he would say, we're going late. So now that we're going late, let's just reset. At a lower level. There's no reason to panic. This, you know, we just need rates to be more at neutral levels when the economy is growing at about 1%.
So, Savita, I mean, the other thing is U.S.-China. We don't talk a lot about China, or we haven't in the last couple of weeks because there's just been so much going on. But where do you expect the U.S.-China relationship to go? It feels like China could get a better deal than than Switzerland, for example.
Yes, I mean, that is, I think many people say that Trump is the most dovish person amongst his cabinet with regard to China. I think that the game with China is quite different. It is to create strategic uncertainty. So if you think back to 2000, what really mattered was that China entered the WTO, but also American businesses realized that they now have a very stable and predictable trading regime with China. Now what Trump is going to do, possibly, or the administration, they'll just push forward this deadline. You know, another 90 days, we can get some element of certainty for 90 days, and then we're back to the drawing board. So if you're a business, you're going to think, okay, if we do this 3 or 4 times, it's just really insecure, and you really start to pull back your investment decisions, your supply chains, and I think that's really the ultimate objective, is to just make China more unreliable as a source of supply.
Savita, what have you learned about the Trump administration so far? I know it's difficult. You know, people say, well, look, it's the art of the deal. Does AMD and NVIDIA actually show you that it's the art of the deal, that they just want revenue coming back to the U.S. almost at any cost? Or is it that, you know, it's very uncertain because there are different factions also wanting different things?
I would say the number one sort of learning I have from the administration is that they really want to leverage American power globally in every aspect. You know, if you have access to the U.S. market, you need to pay an access fee, which is your tariff. If you want, you know, American chips, which are the best in the world, you have to pay a tax to access that. So it's really trying to extract as much. And they said that pretty clearly before they came into power, is that, you know, the U.S. administrations over time have really ceded power of the American economy to the rest of the world. And they just are going to extract as much as they can from the rest of the world. But I think this is not just a one-step game. I think it has effects. It has domino effects repeatedly across the rest of the world. And other countries will react. Of course, they pay the tariff. Of course, they don't retaliate, because it's not in their interest to retaliate. But I think over time, the rest of the world does have, you know, they start to protect themselves by reaching agreements amongst themselves, by becoming much more protectionist themselves. And so it's not necessarily, you know, what we see today or the next 12 months, you know, that's not the end of the game. I think it sort of plays out over, you know, many, many years.
Savita, thank you so much for joining us. Savita Subramanian there, Head of Investment Strategy at Sarasin and Partners. Now, coming up, the Chinese battery giant CATL announces the suspension of a major mine, sending lithium prices soaring. So we'll also have the details on that next, and this is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Well, the conversations that matter, the insights you need. This is the Pulse, and I'm Francie Lacqua here in London. Now, Chinese battery giant CATL has suspended activity at a major lithium mine in China. Now, we understand that the closure could last at least 3 months. Now, for more, we're joined by Bloomberg's global autos editor, Craig Trudell. He's the autos editor, but really he understands every component that also goes into batteries, which is why we're talking to him about lithium. So first of all, Craig, thank you as ever for coming on. But how significant is this temporary suspension of lithium? Is it temporary?
Yeah, I think the answer to that, we don't know at this point in terms of whether this ends up being permanent or it's just a matter of a few months. But in terms of the significance, it is substantial that this is one plant that accounts for something like 6% of global output. And it raises all sorts of interesting questions about, whether this is the first of many suspensions, given this sort of clear signal that we are in a state of severe overcapacity where, one plant going down leads to this dramatic move up in prices that have been so depressed for so long.
So what is it? I mean, is this retaliation or is this actually overcapacity?
I think this is a matter of a clear case of state control of an industry that is seen as extremely important, and depending on how you look at it, it could either be a sign of victory or defeat, right? In the sense that it is clear that China has an absolute stranglehold over this material. Yeah. It is absolutely crucial to EV batteries. And we're now in a situation where China is so dominant with so much production of sort of every aspect of the supply chain that if and when it does make these moves, it has these broad-reaching ramifications for the rest of the world. Now, will this actually will we feel this over here in Europe? We haven't necessarily seen a dramatic come down in prices for EV batteries here, but we have seen it in China. So I think it remains to be seen whether we see maybe some incremental move in EV and battery prices for the rest of the world. I think for the time being, we can sort of count on this being mainly a domestic story.
Craig, thank you so much. Craig was also telling me actually about drones flying, so we'll have to get you back to talk about that. This is the lengths, actually, that a lot of traders go through to understand the dynamics of lithium. Craig Trudell there. Now, the Israel Prime Minister Benjamin Netanyahu has defended his plan for a new military offensive against Hamas strongholds in Gaza, calling it the best available option for recovering hostages. The plan has drawn condemnation from foreign powers and vocal opposition at home. Let's bring in Ethan Broner, our Israel bureau chief in Tel Aviv. Ethan, so what's been the response from inside Israel to this latest move?
Morning, Francine. I would say that there is a lot of resistance to it. The right thinks it's not enough. The left is horrified and feels that the war has gone on long enough. Enough people on both sides have died. Hamas has been degraded enough, and that victory should be declared and something else other than a military going forward should happen. That said, I think that the plan is still real. And we'll see also the business community is starting to play a role in trying to oppose it, but it's got difficulties because its workers, many of them actually do support the plan.
Israel has become isolated. Does this bring even more isolation after a lot of the critics say, of course, Gaza has already been all but razed to the ground?
Yes, I mean, of course, I guess it's partly a question of what isolation means. I mean, nobody has ended their diplomatic relations with the country. They're all yelling at it. They're telling it to stop doing it. They're expected in growing number of countries, already 147 countries, recognize a Palestinian state. Several Western key allies say they're going to do the same thing. Australia just announced that today. Yes, I mean, its plan is not being embraced anywhere. I think that there's no question that it's not going well diplomatically. On the other hand, the argument of this government is every time we win, people come back to us, and we're going to win this one too. I wouldn't say that there's a lot of agreement about that here, but that is the argument of the government.
Is there an exit strategy if Israel has so few supporters?
I think Israel's exit strategy is that it's going to take Hamas apart. It's going to do what it has to do. It's going to remove whatever it can in terms of Hamas infrastructure. It's going to bring home whatever hostages it can. And then the world is going to say, oh, I see, that worked out, and that's going to help them install a non-Hamas, non-Palestinian authority into governing the place. Whether that's going to happen, I can't tell you, but that is what Prime Minister Netanyahu said is going to happen.
Ethan, so I mean, I was going to ask you, like, what does this later operation mean for the hostages, but also where does it leave negotiations to end the war?
So the argument of this government is that the more military pressure they bring on Hamas, the likelier Hamas is to come back to the table and negotiate a deal. There's not a huge amount of evidence to support that argument, but that is its argument. So there is an attempt underway to restore those negotiations. It's not very clear if they're going to go anywhere. I think that the hostages, the Israeli argument has also been that we'll do what we can to get as many of these hostages out as possible. And eventually, we're going to have to do, because the most important thing for us is to destroy Hamas. That's its argument. That's how it's proceeding.
Ethan, thank you so much for the update. Ethan Brodner, our Israel Bureau Chief. I would also suggest everyone to read Mark Champion's opinion piece saying, of course, that the implications for Gaza and its residents, no matter how you see it, are simply appalling. Now, coming up, why Trump's tariffs are spurring on investments in emerging markets. We'll dig into that next with Yakov Arnopoulin, Portfolio Manager for Emerging Markets at PIMCO. We'll have a full roundup of our top stories today. Of course, lithium market soaring as CATL shutting one of the world's biggest mines has a big implication not only for EV makers. The other thing we're watching out for is how NVIDIA and AMD go from here after agreeing to pay 15% of their revenues from Chinese AI chips to the U.S. government in a deal to secure export licenses. I think it's the first deal of this kind. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this. Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Well, NVIDIA and AMD agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government in return for export licenses. Lithium prices spike after battery giant CATL halts operations at a key mine in China after failing to get a permit renewed. And the NATO chief Mark Rutte says that negotiations about Ukrainian territory may be on the table as President Trump and Vladimir Putin prepare to meet. Now, despite President Trump's imposition of global tariffs, sentiment towards emerging markets appears to be on the up. Investors busy adding exposure as 2025 shapes up to be among the best year for EM returns in the past decade. Well, we're now joined by Yakov Arnopoulin, portfolio manager for emerging markets at PIMCO. Yakov, thank you so much for joining us. I mean, we did start the year in saying, look, I think you also last time came on and said, you know, there could be a little bit of concerns for some emerging markets depending on how the Trump administration does and what they put in place. Now they seem fine or better.
It's such a nice to be here and not have to defend emerging markets. We're actually, if anything, rather than crisis to crisis, we're going from strength to strength. And I think on the back of that, we're seeing this really surge in interest in terms of EM investing. And a lot of it because feels like we're in a bit of a virtuous cycle for emerging markets, where because of the travails of the US dollar, volatility has dampened among EM rates and bonds and currencies. So obviously better Sharpe ratios, and we're witnessing some of the best returns for EM this year of the past decade. And traditionally, we've in the past few years, investors have really been underallocated, underweight to the asset class, and now they're busy adding back exposure because of this virtuous cycle that we're witnessing.
I mean, when you look at the tariffs, some of them got quite hard hit by Donald Trump and the Trump administration, but were they managed? I mean, is it because they're more structurally sound than they were 3-4 years ago, or is it also because he's been much harder on some of the developed countries?
I think it's a mix of the above. It really is. It would surprise us as well. I think the initial reaction was when one takes out our macroeconomic textbook, and back in April, Economics 101, in my case, it was written by Ben Bernanke. That's the one I read in Carnegie Mellon. One would anticipate a weakening of the currencies to resist, basically to offset this shock. And yet, I think because of the concerns about U.S. policy and generally this allocation away from U.S. assets, or I would say kind of diversification away from some of the U.S. assets, we've actually seen this strength in EM. And again, as we speak to our investors, let's say pension funds that do their SAA, the Strategic Asset Allocation Plan, our sense is the U.S. will remain very important. Right? It's still a core allocation because of the tech sector and so on and so forth. But the incremental unit of risk, maybe the incremental euro or yuan of investment, I think a chunk of that will go into EM on the back of some of the recent noise. And I think back to tariffs, generally speaking, we have to recognize tariffs certainly are higher than they were pre-Liberation Day, but not as draconian as what was announced back then in April. So generally, it's been fairly muted. We say that 10% is a new 0%. The exemptions are Brazil and India. So we're still watching those quite closely. There's a little bit of a political angle there.
I mean, Jaco, India for me is actually quite strange because he also personally gets along with Modi, right? They're allies.
Yeah.
So does it mean that it's a deal or finance above anything, or is it just negotiations?
Our sense is there's a deal to be struck at some point. India has intervened heavily in the currency to offset some of the pressure. But generally speaking, when we think about the really attractive opportunities out there, I still think it's more in the local space, countries like South Africa, countries like Peru, where they've done well, but we go and we re-underwrite the thesis and they still look quite attractive. Very steep curves, very solid monetary policy. South Africa changed their inflation target to 3%. So a lot of interesting things for us to do out there. And actually linking it back to your comment earlier about the lithium situation overnight, when I think about the biggest lithium producers out there, China #1, then Australia, Argentina, third biggest producer, that's really trying to it's already big, trying to increase that production around Vaca Muerta over the next few years. It's also structurally some very interesting tailwinds there.
But so I'm surprised. I mean, I'm not surprised because you always usually pick the right countries. But in terms of preferred exposures, Colombia and Angola. I mean, these are two very different countries with also exposure to very different industries.
Absolutely. Look, I think it comes down to always valuations. And what we saw back in April after Liberation Day, there was panic in the market. Now, oil prices dropped, so people were selling Angola, with their eyes closed. We re-underwrote the thesis. We looked at the balance sheet, felt this was a very attractive investment. So we really were buying some of these short-dated bonds at bargain basement prices. They've recovered, still looks attractive. We've taken profits a little bit, but still involved. Colombia, same story. Still find a lot going on there politically. Political transition may be beneficial for bond prices. And one other country that's worth mentioning is Mexico. Some very interesting, very attractive opportunities in their fixed income recently as they've sought to bolster the state-owned enterprises. That's what's created some really interesting bond investments.
Which is surprising, right? Because Mexico and Canada actually, because of the proximity to the U.S., were the ones that we were worried about at the beginning. Do you now have a better understanding of what the right way of dealing with Donald Trump is, and also looking at dollar dynamics?
I think we focus on the fundamentals, and the fundamentals come down to, in Mexico's case, is USMCA, which is the old NAFTA. So much of the trade is covered under USMCA, and on the back of that, although there are certain areas that have much higher tariffs, the vast majority of the trade is still USMCA related and consequently practically tariff-free.
When you look at some of the things that you prefer, actually, your favorite longs in local rates, Peru and South Africa. Again, South Africa has a lot of, I guess, short-term concerns that they're having, including the blackouts.
Yes, getting somewhat better. Yep. So a long history of blackouts, brownouts that have actually been improving. There as well, when we look at growth has not been very impressive. Inflation has been going down. And again, that's where kind of the dichotomy between what may not be great for stock markets or where growth is poor, that's a great opportunity for us in the fixed income space where the bonds can do well, bonds can rally, and low inflation, obviously very, very positive for us. And I think another topic where we can find uncorrelated returns and where I think this is kind of, again, very benign environment are frontier markets. So going from South Africa a bit northwest to Nigeria, where frontier affects frontier currencies, that's one of our favorite bets, favorite views. And then further north, Egypt and Turkey. Again, these frontier names that can continue to do well and generate alpha for our investors.
Jaco, is there worries that actually, given the uncertainty on tariffs going forward, that actually for the moment we feel, right, we've gotten the hurdle. I love the fact that you say 10% is the new zero. What happens in the next 6 months? What if there's a sizable shift? Do you not worry about it at the moment, or do you try and preempt?
As a fixed income manager, always worried. And frankly, we took some of our risk down in the past few weeks, specifically as we saw the rally in credit, in sovereign credit, corporate credit, in developed markets, in emerging markets. So around June, July, we started to take chips off the table, reallocated some of that into local assets like rates and effects that I mentioned, because we find there is more risk premium, more attractive risk premium there. But generally, feel comfortable. We have dry powder to deploy, and in the meantime, have to remember, the base case is for the Fed to cut rates, September, December, and that should help, cushion markets.
Does it matter if it's a 50 basis point cut in September from the Fed?
Yeah, there is a lot of data still to come out between now and then. Yeah. So we have 2 inflation prints, we have the job sprint for August that will come in September. So TBD, but certainly our sense is it's most likely 2 cuts, and there is upside risk to that scenario.
Okay, Yakov, thank you so much for joining us. Yakov Arnold-Poland, their portfolio manager for emerging markets at PIMCO. Now, President Donald Trump is continuing his push for U.S. tech companies to focus on domestic production and investment. Well, Bloomberg has learned that NVIDIA and AMD have agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government. It's a move that may unnerve both U.S. companies and Beijing. Well, joining us now is our very own Tom McKenzie. Tom, nice to have you back. What does this signal in terms of Trump's intentions?
Well, it's a reminder, of course, that President Trump is willing to lean on and pressure companies, whether it is in terms of tariffs or indeed what is now looking like an export tax. It's pretty unprecedented to see a corporation being told that it has to pay 15% of its revenues in terms of its sales into a market like China, into the US Treasury. But that appears to be what is now at play for both, as you said, NVIDIA and AMD as they sell those chips into the Chinese market. The quid pro quo is you can get access, you'll get the license, but you have to give us 15% of the revenues of the sales into that market. It's a reminder as well that this continues. We saw Apple committing to $600 billion in terms of its investments in the US market. To your point, a president and a team around the president determined to pressure these companies, US corporates and others, to invest in the US market or to put money into the coffers of the Treasury, even if it is pretty unprecedented. There's a broader picture to this as well in terms of what this means longer term for US Inc. and US corporates as they think about that dynamic, the political dynamic now with the Trump administration. The Chinese, by the way, response to the H20, which is the chip that was blocked by the Trump administration, is now allowed in if indeed you manage to get that export license for that fee. The Chinese reaction is increasingly skeptical, and we've been hearing that from reports linked to state media. They are concerned about what they describe as security concerns linked to these AI accelerators. We are yet to hear an official response from Beijing, but of course we know that this is in the context of US-China talks and that deadline tomorrow, of course, which could be extended, and that has been the hint, the suggestion from the Trump administration.
Tom, how much pressure is the Intel CEO now under?
Significant pressure. Lip-Bhutan, of course, President Trump came out and said that he should step down because of conflicts of interests, as the president describes it. We know, according to the Wall Street Journal, that Lip-Bhutan will be heading to the White House today to meet with President Trump, according to that reporting, for extensive conversations where he's expected to make the case for his own history within the semiconductor sector of the US. He is, of course, a US citizen now, previously a Malaysian citizen, but he's worked and lived in the US for more than 40 years. He's expected to drive that home with the president and also explain some of his business and investment ties that apparently and appear to be causing concern for President Trump. That, of course, at a time when Intel and the strategy that Lip-Bhutan is pursuing as the CEO of Intel is causing some concern amongst the board as well. And you've yet to see, of course, a significant turnaround in that company. So we'll see what comes of those conversations between the president and the CEO, of course, of that major chip maker.
Tom, is Palantir the canary in the coal mine when it comes to AI valuations?
Well, if you look at the valuation, I mean, Palantir up to 2,500% since this listing in 2020. It's up 150% year to date in terms of the earnings, 245 times forward earnings, 245 times forward earnings. You compare that to NVIDIA, which is trading at about 35 times forward earnings, then it does look very, very richly valued indeed. But it's come on the back of a number of catalysts for a company. It's lent in, of course, to its AI. It's built that into its products. It's got a very close relationship with the US government's benefiting from some of those contracts. And, of course, it came through with that blockbuster earnings report as well. So those are the catalysts. But some will be looking at this and saying maybe this is a little stretch too far. Bloomberg Intelligence saying that they'd have to turn around revenues in the next 12 months of about $60 billion US. The forecast for next year are closer to about a tenth of that.
Tom, thank you so much. As always, Tom McKenzie there with the very latest on some of the chips and all of the tech stories that we're watching out for. Now, shares in Danish company Ørsted have also plunged after it said it will conduct a rights offering to raise as much as $9.4 billion. Now, the capital raise by the world's biggest offshore wind developer comes in response to President Trump's policies to limit offshore wind development. Ørsted has blamed the policies for derailing its ability to sell stakes in projects it's already building in the U.S. Now, coming up, Kyiv and the EU reject any giveaway of Ukrainian territory ahead of President Trump's summit with Vladimir Putin on Friday. We'll look ahead to that meeting next, and this is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Now, political maneuvering has begun ahead of this week's meeting between Presidents Trump and President Putin to discuss Ukraine. Now, sources say EU nations are seeking to meet the U.S. president before his summit on Friday, after President Zelensky and EU foreign policy leaders both rejected the idea of allowing Russia to occupy Ukrainian territory. Now, the NATO Secretary General Mark Rutte has warned that he believes the U.S.-Russia talks could or may open the door to negotiations on Ukraine territory. Now, we're now joined by Mark Champion, who covers international affairs for Bloomberg Opinion, and Stephanie Baker, our senior writer. So, I have many, many questions on this because, Stephanie, there was talk about a summit like this a couple of months ago when, President Trump and President Putin were very chummy, and then that relationship soured. So what could come out? And now they're friendly again?
Well, I think this is what Putin wants, is to reestablish that relationship, that friendly rapport that he had. This summit in and of itself is a huge political win for Putin. It brings him out of isolation onto U.S. soil, even though he's sanctioned. And Zelensky is not at the table. So usually these summits require months of preparation. So this is incredibly rushed. Usually they go in with an agreement ahead of time that the leaders just sign. Yeah. That's not happening this time. I think if you're trying to look for parallels, I would look at the summit that Trump had in his first term with Kim Jong-un of North Korea. He really wanted a nuclear deal out of that, didn't get one despite a couple of meetings, and ended up walking away. But I think he still spun it as a win. Yeah. So I think there is a real danger that Trump gets played again and Putin succeeds by changing the narrative and trying to cast Zelensky as the problem and the obstacle to peace rather than him.
Yeah, I mean, it feels like if it is actually like that meeting with Kim Jong-un, it was a photo op, right? It was kind of like we covered it extensively. It was pageantry. It was quite impressive to see the two leaders walk together, and I remember the car. Mark, what are you expecting out of this? We're now, I mean, I was surprised about the NATO Secretary General also saying, well, we should maybe talk about Ukraine giving up territory, especially if President Zelensky is not at the negotiating table come Friday in Alaska.
Well, I didn't quite interpret what he said as that. What he was, there are two ways of thinking about territory, or even more. But, so what he was, everyone understands, including the Ukrainians, that they are going to have to, in some kind of deal, they're going to lose control of territory. What they're not willing to do is to offer de jure to give away territory and say, this is now Russia. And so Zelensky has been very clear on that. Rutte, I think, was trying to make that distinction and say, well, we're going to have to talk about giving away control of territory. But didn't really, wasn't saying, they have to, de jure give it away.
Yeah.
So there is some, and from what, President Trump has said, he's talking about, we're going to talk about land swap. The fear for the Ukrainians is going to be that, what's being offered to swap is that the Ukrainians would have to give up parts of the Donbass region that Russia has not yet succeeded in occupying. And then in exchange, the Ukrainians would, the Russians would have to give up territory that they have not yet occupied in Kherson and Zaporizhia. So it's a kind of something for nothing deal on the part of the Russians. It also doesn't, there are no guarantees, no matter what they sign, that they won't, simply go further later, say that there's, someone's broken a deal. After all, they signed guarantees, back in the 1990s that they would never do exactly what they're doing now.
So, Stephanie, what does Putin want to get out of this?
He wants to reestablish that relationship that he had with Trump beforehand, and I think he is hoping to work his KGB charm with Trump, flatter him, and I think he would like an even broader agreement with him on a whole host of issues, convince him that these demands that he's had all along about Ukraine, that Ukraine can't join NATO, there should be caps on Ukrainian military, it should be neutral, and that Ukraine is part of Russia's sphere of influence. I think he would like this to be a kind of Yalta agreement, carving up their spheres of influence. I think for the Ukrainians, they're really worried since they're not at the table. This is more like a modern day Munich, where they're going to be forced to hand over territory against their will. And this land swap, remember, Trump's going in, he's not really equipped to do the detailed negotiations on a land swap. And the details matter. And the theme running through all the conflicting reporting over the weekend was that was the one thing that Putin wanted, was control of the area of Donetsk that the Russians have not been able to take because it's heavily fortified. And if they hand that over, that leaves Ukraine really vulnerable to an additional attack from Russia down the line, where Russia could take further bits of Ukraine near Kharkiv and elsewhere.
Yeah, how do you see this going, Mark? Again, I mean, we all think about also President Zelensky showing up at the White House and basically being ambushed. So could this be a repeat of, the friendliness between Putin and Trump, with Zelensky and, frankly, the rest of Europe being frozen out?
I think there's a very high risk. That is what, Zelensky is clearly very worried from the things that he's been saying. The Europeans are worried from the things that they're saying, and I think rightly so. So if you look at what Trump has actually done since he came into office, there has, his default very much has been, I want to make a deal with Russia. I want to make a deal with Putin. I want to regularize relations between the U.S. and Russia. I want, economic benefits from that. And, getting some kind of deal in Ukraine is the kind of, the gateway, the door that has to be open to get there. He hasn't been able to do it. He's been very frustrated. And for Putin, the very clear thing that he wants to do is to prevent Trump from being so frustrated he actually starts to do stuff that hurts Russia. And all he has to do is this kind of thing, which is to appear a little reasonable, to show up for talks, to give the photo ops that Trump wants.
Stephanie, I mean, there was also talk about these secondary sanctions on basically any country that bought Russian oil, but it seems to have, gone away apart from India. That could be getting in the neck.
Right, so I do think, for all his bravado, Putin knows that his economy is in a terrible state right now, and he is running out of time to be able to finance the war in the way he has up until now. Russian oil revenues have come down, and this threat to impose an additional 25% tariff on India for buying Russian oil, which only comes into effect in a few weeks, that would hurt Russia. Even if India, for instance, just reduced the amount of oil that it was buying from Russia, that would hurt Russia, and I think that is one of the factors that is driving him to the negotiating table. Of course, Trump has let that Friday deadline come and go without any action, but that threat remains, and I think Putin is worried about additional restrictions on Russian oil.
Stephanie and Mark, thank you so much. Just a terrific briefing as we look ahead to Friday in Alaska. Mark Champion from Bloomberg Opinion, Stephanie Baker, a senior writer who also has a fantastic book out, Punishing Putin, that you can, well, everyone should read, but you can pick it up at your local library. Oil lower today as key U.S.-Russia talks come into view and ahead of tomorrow's U.S. CPI print. Let's bring in Christine Aquino, managing editor for our Markets Live team. Christine, so good to have you in London. What can you tell us about oil?
Yeah, thanks, Francine. I mean, oil definitely kind of in the front lines in terms of the market reaction to the potential Russia-Ukraine talks, and we are seeing a pullback there. And really, it speaks to this geopolitical risk that has played oil for much of this year, right? I mean, it still remains very much a demand story, a lot of worries long-term over what consumers are feeling, a little bit less optimism there for the second half of the year. But geopolitical risk is something that has reared its head repeatedly for oil prices this year. We're seeing that again this Monday with a pullback in oil. I think questions again over how long this effect can last, because as Mark and Stephanie have highlighted, a lot of questions still over the outcome of these potential Russia-Ukraine talks and what each country can stand to gain from that. And so a lot of questions for investors as well in terms of longer-term direction. But as of now, it is a clear negative for oil prices to start the week.
Yeah, Christine, also a lot of focus on the Fed. Now possible talk about a 50 basis point cut, whether it's seen as an emergency or not in September. So before that, we'll get U.S. inflation and then all of this like stagflation worry creeping everywhere.
Absolutely, Francine. I mean, the expectation for this latest CPI print, of course, is again a creep higher in that year-on-year CPI number to about 3% now. And that's been kind of the story really for this print. There was a lot of relief in the first half of the year, especially with talks of tariffs kind of coming to fruition, but then not really seeing that as a reality. And so, CPI prices not necessarily reflecting that. But now that tariff discussions are back to fore, and again, questions on the growth side of the equation with that terrible jobs print that we just saw, the Fed definitely leaning more towards supporting growth at the moment. And we are seeing talks of more rate cuts. At the moment, markets aren't necessarily buying it. We're not fully priced for a rate cut of even 25 basis points in September. But I think tomorrow's CPI print will definitely go a long way in informing markets who are maybe changing the equation for rate cut expectations.
Christine, thank you so much. As always, Christine Aquino, their managing editor for our Markets Live team. Now, this is a picture across the board. A lot of things going on in the space, of course, of markets. The main focus is what's happening in oil because of the U.S.-Russia talk in Alaska on Friday, but stocks are racing a lot of their gains. Again, a lot of traders seem to be dialing back optimism that a summit between Trump and Putin would bring the war in Ukraine closer to resolution. The other thing we're watching out for actually is Bitcoin approaching an all-time high, supported by strong demand for institutional investors, but also corporate buyers. Up next, Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday morning. Cutting an unprecedented deal. NVIDIA and AMD will pay 15% of their China AI chip sales to the U.S. government. Awaiting Trump-Putin talks, oil extends a decline ahead of a meeting between the U.S. and Russia on Friday. And gold futures slide. Traders wait for the White House to clarify last week's surprise tariff on bullion bars. We are basically at this moment a rounding error away from an all-time high. We closed on Friday 0.01%, actually less than that, but you round up to that, away from an all-time high. So even if we open up basically unchanged, we will get there. We are unchanged for this market to start with S&P and NASDAQ futures. Citi, though, they boosted their year-end target for the S&P at 6,600 now from 63. The latest Bank of America survey says that investors are the most bullish in a few years. So we are getting that bullish sentiment seeping into the market. Now, for this bond market, and maybe for everything, the main show is tomorrow, is Tuesday. It is the CPI release. We had some bonds under pressure last week. They were higher by 6.5 basis points for your 10-year yield. Today, we're lower by about 3 basis points. 4.2539 is where we stand. And you can see Brent crude, that continues to fall down about 0.5% ahead of those Alaska talks between Putin and Trump on Friday. Let's get you some stocks moving underneath the surface now. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with NVIDIA and AMD after news that they have agreed to pay the U.S. government 15% of their revenues from their China chip sales. We're seeing both of them on a back foot this morning. NVIDIA down over 1%, AMD down nearly 2.5%. Now, both of these companies have failed recently to give any guidance on what that kind of China revenue would be. So when it comes to how much money the U.S. government could make on this revenue sharing deal, that still remains a big question. Let's keep in the AI space and move on to some more soft news there. We have C3 AI. This is an enterprise software firm that helps companies optimize anything from supply chains to their inventory, falling nearly 30% in pre-market trade after what analysts call was a catastrophic round of results, slashing their revenue guidance by a third, coming in way less than the market expected. Lastly, M&A Monday, as reported by the Wall Street Journal, we could see some M&A, some merger activity in the local TV broadcasting space. Tegna has become a takeover target of this competitor Nexstar, who is the biggest local TV news station broadcaster in the U.S. Now, Tegna has been the eye of some takeover interest before, but those deals have fallen apart due to regulation hurdles. Danny, this could be a new test, though, for Trump's new leadership at the FCC if they approve this type of merger. Danny.
Valerie, thank you very much for the roundup. We'll catch up with you later in the hour. Also, in this hour, in just moments, we'll be speaking with Ella Hoja of Newton Investment Management on risk asset euphoria. Later this hour, we'll discuss the Fed's rate path ahead and CPI tomorrow with Lawrence Hadelbaker of ITR Economics. Now, Ella Hoja of Newton Investment Management makes the case for staying cautious, writing, quote, current complacency in markets is likely to be tested in the second half, starting with core bonds and interest rate expectations. That may have ramifications for riskier assets such as equities and credit. I'm pleased to say that Ella joins us now. She is head of fixed income at Newton. Ella, always a joy to see you. And look, it is a strange time we're living in, that bonds can be pricing in a near 90% certainty that we're going to get a cut in the next meeting for fears of this labor market, with risk assets at all-time highs and credit spreads at new tights. What do you think is driving that complacency?
Well, I mean, the data has been supportive, minus the last NFP print, which we can debate and discuss whether that's, totally reliable. And that's on the basis that a lot of what's been driving labor markets over the last 2 to 3 years has been demand for labor exceeding supply. And I think that's a little unusual as far as labor market dynamics go. So you could argue the fact that you're now having negative net migration in the U.S. Could be pushing the numbers lower. So it doesn't necessarily have to be a bad NFP print on itself. So even if you take that aside, data has generally been okay and supportive in the U.S. Markets obviously went through this massive fear phase back in the spring. And so now the pressure point has been upwards. And so we've broken key technical levels, whether that's on the MAX 7s or just more broadly in equity indices. And so the euphoria is in play. And I actually, we talk about euphoria, but the Bank of America Fund Manager Survey, which hit my desk this morning, was talking about the most bullish we've been since February 2025. So the market's low cash levels as far as active managers go, and basically pretty bulled up.
You say that your concern, as I mentioned, Ella, starts with core bonds. I mean, we did see some pretty tepid bond sales last week. How much of that is due to just lower yields following those weak NFPs versus some real stress there, be it concerns about Fed independence, a ballooning deficit? What do you see driving weaker sales, and does that continue on? Is that part of your call?
Well, we're trading flat to or below cash. So the value proposition is not there in lots of ways. That's number one. So to your point of, is the yield too low for investors to come in? I think the answer is yes. The second part that concerns us, and that's what's caused us to reduce interest rate sensitivity at the portfolio level, is basically this tick up in inflation expectations, which is not consistent with the level of price cuts we have in the curve now. So what the market's been pricing. And so actually we think the coming quarter or two, we will start to see a tick up in inflation. Nothing dramatic, I don't want to overplay it, but enough to cause a bit of a head scratcher for the Fed. And so with that in mind, we're becoming much more neutral on our duration sensitivity. And if that's confirmed, we probably expect to reduce further.
Could that happen tomorrow? And what's the vulnerability of this bond market if CPI does appear to be stickier in tomorrow's report than expected?
Yeah, I'm not a big fan of forecasting, to be honest. I make a point of that, and not because we cannot have a view. It's because I think it's a bit of a pointless exercise. You can have your models, which, it's more about the asymmetry and where the risks lie. Are the risks to the upside or downside? I mean, markets are obviously priced for a bit of perfection now, as we say. So what would concern us at the portfolio level is if things start to tick up. Why? Because I can only see that as really the higher probability risk that can disrupt this risk-on mood that we're seeing in markets. And that's why that's the sort of the tail risk, if you like, that we'd like to hedge.
And the other thing that maybe Ella's been supporting this market has been earnings, that while uneven overall on a headline basis, they look strong. But then we get this reporting overnight from the Wall Street Journal, we have it as well, that AMD and NVIDIA might be giving 15% of their profits on their most advanced AI chips that they sell to China to the U.S. Ella, I mean, that's a completely different dynamic for companies to try to deal with. We can talk about the political ramifications, but just in general, it does mean slimmer profits. How do you think about that? And as we evolve, dealing with tariffs, and again, extra added political dynamics for companies to try to navigate right now?
Well, lots of empathy for the CEOs of those companies, right? Because they do have to navigate this terrain, but it is part of this new regime. We've talked about this. It's a much shorter cycles, more volatile regime. So as an investor, you should demand more risk premium, but that's not the case, right? When we look at the PE multiples for those companies, they're very high. So a lot of the good prices are baked in. So, you know, you could, if you want to take a contrarian stance and say, well, maybe all the good news are in, but how do you deal with that? I mean, I guess through, you know, as a portfolio manager, you deal through portfolio construction, right? So the sizing of the bets and probably staying away from extreme cases or extreme views. Those are potentially blind spots that can open problems in the future. It's very difficult to predict the geopolitical angle, other than to say we've shifted in a regime that's far more, you know, domestic, local, and where the government keeps on playing a very big role.
It's impossible to avoid the conversation of politics, be it for corporates or for this bond market. Ella, I just want to end here because before the weekend, there was also reporting from the Wall Street Journal that two new figures have emerged in the Fed chair sweepstakes. That is Jim Bullard and Mark Summerlin. That adds to the Kevins and Waller as a potential candidate. Bullard, though, and Summerlin, much more traditional type candidates. Does that take some of the risk premium out of this bond market, the fact we could get someone along the likes of those two figures to lead the Fed?
Yes, absolutely. More traditional, the better for the market. As an investor, as a cynic, I take a step back and I say, is this Fed going to be more hawkish or dovish going forward? What is the preference for the guy or girl? I suppose maybe there will be a girl up for the job too. You know, that's going to take this role on. And then the answer is quite simple. I think more likely to be a more dovish Fed. And so with that in mind, your expectations of term premium go up, not down. And I think we're only like halfway through baking that term premium into bond markets when we look at the longer term history of yield curves. And so with that in mind, I would still stir on the side of caution.
Yeah, to the point of a woman being the next Fed chief, Mickey Bowman out over the weekend talking about 3 cuts this year. So maybe she is indeed trying to get that nomination. Ella, thank you so much for joining us. It's great to see you as always. Ella Hoja of Newton Investment Management. Let's look at some other top stories now that are trending on the terminal this morning. Lithium prices and stocks spiked earlier today after Chinese battery giant CATL suspended activity at a major lithium mine in China. The company said it will resume production after its license is renewed and that there would be no material impact on operations. PIMCO CEO Manny Roman signaling caution over private markets. The chief of the $2.1 trillion bond market giant warned that private markets haven't been tested by a steep economic downturn. He was speaking with the FT and further urged on the need to constantly think about what can go wrong. And Bitcoin has risen to within striking distance of an all-time high. Demand from institutional investors and corporate treasury buyers lifted the wider market for digital assets. The gains come off the back of mounting interest in crypto among large investors. Digital asset treasury companies have built a stockpile of Bitcoin worth $113 billion. Coming up, we get back to that top story. NVIDIA and AMD agreeing to pay the U.S. government 15% of their advanced AI chip sales to China. More on that unprecedented move. That's coming up next on your brief.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
You know, the world is reconfiguring itself, and we are a company, and we just have to adapt to whatever the world's trade and tax and tariff conditions are. And so this is something we all have to adapt to. But the very incredible thing is, NVIDIA is a very adaptable company. Our supply chain will have to adapt, and we will find a new way.
And adapt they have. That was the NVIDIA CEO, Jensen Huang, speaking last month about navigating the changing trade environment. Well, how about this for navigating? U.S. chip makers AMD and NVIDIA, they're under pressure now, and they have agreed to pay the U.S. government 15% of the revenue from Chinese chip sales, according to our reporting, part of a deal that would help secure an export license. Joining us for more on this on trade is Bloomberg's Lauren Dezensky, who helps lead our breaking news coverage out of D.C. Lauren, people have looked at this deal and said, okay, are we tariffing exports now? What exactly are the details of what we understand to what's happening with AMD and NVIDIA?
So one thing you'll hear more than anything is that this is unprecedented. For U.S. companies to be paying 15% of revenue for these specific chip sales to China, again, is unprecedented. Really, we've seen Jensen Huang of NVIDIA, as well as other chip companies, pushing the U.S. government to really do whatever they can to unlock the Chinese market as well as others. And I think, again, back to the unprecedented point, it goes to show that this Trump administration is really interested in kind of doing whatever it can to not only unlock unexpected sectors, but to also extract what they want from companies. They're extracting concessions. It's estimated that this 15% out of NVIDIA at least could generate roughly $1 billion a year. That would obviously go into U.S. treasuries, or into U.S. reserves, rather. And the idea that this administration is looking at other ways of working with these companies, and even just seeing how these companies have to adapt to this administration. I mean, look no further than the president's Truth Social feed and how he interacts with various CEOs, such as the Intel CEO who is coming into the White House today. This is an entirely different landscape, and so it's clear that these CEOs, as well as this administration, are just thinking differently in terms of how they have to navigate this current environment.
Lauren, it's such a good point that it's not just pressure on countries, it's turning to pressures on companies, which, by the way, previously, this wasn't going through because of security concerns, which raises the question, okay, are those gone? But the countries still are under pressure, Lauren. Tomorrow we get the deadline for getting a China trade deal done. Do we seem any closer to at least an extension?
It sounds like it will be another 90 days. Again, we don't know until Trump himself says it or posts it on Truth Social. However, the Trump administration, officials like Howard Lutnick, Commerce Secretary, have indicated that the expected 90-day truce will come to fruition. The deadline is tomorrow, Tuesday, so we will have to see. This is another classic example of we don't know the decision until Trump himself says it or posts it. We do know after the talks in Stockholm between the U.S. and China negotiators that 90-day deal was indicated or did appear that that was going to be what the agreement was. That's what the Chinese side said. And then the U.S. side said, whoa, wait, we'll have to see what Trump says. So again, we are still here waiting for what the president actually has to say.
Yep, it's a lot of waiting this year. Lauren, thank you so much for joining us this morning. Excellent reporting. That is Lauren Dzenski in D.C. Now from China to Russia, President Trump and Vladimir Putin are planning to meet in Alaska on Friday, discussing the war in Ukraine. At the moment, talks don't appear to include President Zelensky. Here is NATO Secretary Mark Rutte ahead of the big meeting.
I think it is important that the meeting takes place next Friday. President Trump broke the deadlock with Putin in February. That was very important. Only a couple of weeks ago, he decided to, again, open the floodgates of lethal support into Ukraine and to put secondary sanctions on countries like India. So he clearly is putting pressure on Putin. Next Friday will be important because it will be about testing Putin, how serious he is on bringing this terrible war to an end.
We're also seeing oil declining this morning, about 0.5%, as investors gauge peace in Ukraine. And what, actually, sorry, 0.2%. That decline has lessened. Really gauging what this might mean for crude supply. Pleased to say that I'm joined by Bloomberg's Tony Halpin, who leads our Russia coverage. Tony, what are the expectations for this Friday in Alaska?
Well, that depends on who you are. Europeans and Ukraine are pretty alarmed by the prospects of Friday's meeting because they're not at the table, and what they're really worried about is that President Trump and President Putin will cut a deal together that allows Putin to hold on to Ukrainian territory, and that they'll have very little say in this deal. Trump, as you've noted in the piece, is keen to test Putin's sincerity on reaching a ceasefire. So far, he's resisted all efforts and all calls from the US for a truce. And Putin, of course, is very keen to lock in his gains and may be willing to see whether Trump is going to give it to him in return for an agreement on a ceasefire.
Part of what Trump has talked about is some swapping of territories, in his word. Tony, is that a non-starter with Zelensky, with Europe?
Well, we have to remember that when you talk about swapping of territories, that this is all Ukrainian territory to begin with, and that Russia is illegally occupying it. So from the Ukrainian perspective, this is a non-starter simply because, as President Zelensky said, he's not in a position to cede territory, and the Ukrainian constitution doesn't let him do so. But the fact of the matter is that Russia holds on to this territory, it occupies it, and I think neither Europe nor Ukraine currently believes that they can reclaim that territory. So there's going to be a lot of subtle wordplay, I think, around the idea of Russia holding on to territory while Ukraine and Europe don't recognize its possession of that territory. But we will have to see what form of words comes out on Friday.
Well, Tony, so far, prior to these talks, it seemed like a Trump administration that wanted to put economic pressure on Russia, targeting countries like India for their purchasing of Russian oil. Is there a risk that this changes the outcome of that this softens Trump having a one-on-one meeting with President Putin?
Well, let's not forget that the deadline for Putin to agree to a truce was, in fact, on Friday, and that deadline came and went, and there wasn't a general application of secondary tariffs on countries that purchase Russian oil. There was one placed on India, but China is the biggest purchaser. Nothing has happened there. Turkey is another major purchaser. Nothing has happened there. So it's been quite selective up until now, and I think we probably won't see much action until Trump and Putin get together on Friday and they can test each other's sincerity in reaching a deal. If a deal is reached, then I suspect that we'll no longer hear much about secondary sanctions.
Fair enough. Tony, thank you so much for joining us this morning and that update. That is Tony Halpin. Coming up, the Intel CEO is meeting with President Trump. That, according to the Wall Street Journal. We're going to have that and the other headlines in the front pages of your papers this morning. Stay with us on your Bloomberg Brief.
think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own niche.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning, what's making headlines in the major publications. First up in the Washington Post, the FBI is dispatching agents to Washington, D.C. to tackle increased carjackings and crimes. This comes after President Trump recently threatened to call up the National Guard. Trump will be holding a news conference at 10 a.m. Eastern to address the situation. Next up, Al Jazeera is condemning the killing of one of its journalists by Israeli forces in Gaza. Prominent Al Jazeera journalist Anas al-Sharif has been killed, along with 4 colleagues in an Israeli airstrike on a tent near Shifa Hospital in eastern Gaza City. Israel's military said it targeted Anas, alleging that he headed a Hamas cell and was involved in rocket attacks against Israel. And on the Wall Street Journal, Intel CEO Lip Bhutan singled out by President Trump to visit the White House. This after the president recently called for his removal over ties to business in China. Sources say that the CEO hopes to show his commitment to the U.S. Coming up next, it is a market awaiting CPI. What will the inflationary report mean for the Fed at their next meeting? Lauren Sadel-Baker of ITR Economics will be joining us next on Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, When they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I am never doing that again.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday. Cutting an unprecedented deal. NVIDIA and AMD will pay 15% of their China AI chip sales to the U.S. government. Awaiting Trump-Putin talks, oil extends a decline ahead of a meeting between the U.S. and Russia on Friday. And gold futures slide. Traders wait for the White House to clarify last week's surprise tariff on bullion bars. We are a rounding error away from an all-time high, less than 0.01%. So if we open where we are this morning, which is little change for the S&P and NASDAQ, we will get to those all-time highs. The bullishness is evident. Citi upgrading their price target for the year end to 6,600. Bank of America saying their latest fund manager survey shows us the most bullish since February. Meanwhile, for this bond market, it was yields higher this week. We take a breather this morning, lower by 2.5 basis points for your 10-year. We'll get CPI tomorrow. Meanwhile, gold futures at lows of the session down 2% after rallying on Friday after a surprise 39% tariff from gold coming from Switzerland. The White House says that they will clarify that. We are still waiting for that clarification. Let's, in the meantime, get you some stocks to watch. With that is Valerie. Good morning, Val.
Good morning. Let's start with NVIDIA and AMD after they have agreed to pay 15% of their China revenues for those export licenses. We are seeing both of them in the red in pre-market trade. NVIDIA down around 1%, AMD just down right over 2%. Now, Danny, there can be argued that there's good things about this agreement because it does definitely sound like they are going to get those export licenses. NVIDIA's was actually approved on Friday. AMD is still waiting for the approval for theirs. Let's stay in the AI space and move over to C3 AI. This is a software company that deals with AI applications for businesses, giving some catastrophic guidance in its results. Its guidance for revenue came in a third less than the street estimated, and we're seeing that stock fall around nearly 30% in pre-market trade. Now, this company offers software to businesses that helps optimize anything from supply chains to inventory, so they are not seeing that kind of growth that's happening in the rest of AI. Lastly, let's end with lithium miners listed in the U.S. They are seeing a decent boost in pre-market trade. This is all down to China shutting down one of CATL's biggest lithium mines in the province of Jiangxi. This is important, Danny, because this is maybe the beginning signs that China is beginning to clamp down on overcapacity in some key industries. They're starting with lithium. Danny.
Valerie, thank you very much for that. Now, investors are also gearing up for another busy week of economic data. There's U.S. CPI tomorrow, PPI and jobless claims on Thursday, finally U.S. retail sales and the University of Michigan sentiment survey to close out the week on Friday. Lauren Sadel-Baker of ITR weighing in and writing, quote, inflation will likely rebound in the second half of 2025 and into next year. Our analysis suggests it will take between 9 to 18 months for tariff-related inflation to become evident in the data. As you saw just there, Lauren is in the studio with us. Lauren, great to see you this morning. Thank you for joining.
Thank you.
So it will take some time, to your point. You see it for inflation to show up. So what are you expecting tomorrow? How much tariff-driven inflation might seep through in the numbers?
So tariff-driven inflation is the key there. Everyone is looking for the impact of tariffs, and I just don't think we're seeing it yet. That's not to say we aren't seeing building inflationary pressures. Those are just for non-tariff related reasons. We have a lot of fundamental drivers that are just now starting to really flow through the data. We saw this in last month's report, kind of those early warning signs that pressures are building. So I think it's going to be important to differentiate, and critically important for the Fed to differentiate what is a one-time step up in prices due to tariffs and what are these more lingering kind of fundamental pressures that aren't going away anytime soon.
It's such an interesting point because the Fed governors who have called for cuts, both Waller and Bowman, have been talking about the idea that tariffs are a one-off. So what you're saying is even if tariffs are a one-off boost to inflation, something else is still going on that maybe should keep the Fed more restrictive at this point?
Yes, we absolutely see that at ITR. The fundamental pressures, I mean, there are things that are baked into the numbers for a year or even close to 2 years at this point. In addition to the typical monetary and kind of fiscal policy that we've seen, we also just have those persistent wage pressures. Because they have come down, I think a lot of businesses and market watchers think that they're done. We don't have to worry about that anymore. We are seeing building energy prices, electricity costs being much higher now. So many of those kind of individual threads that we could try to pull through to see each one in concert, all of those pressures are now kind of coming together at this moment in time to build some inflation, to build some pricing pressure.
What does that mean, what the bar is for the labor market to look weak enough to force a cut, even if you have some of that building in the background?
That's the real question. These last jobs numbers clearly were softer, but by our analysis on a not seasonally adjusted basis, they were soft, yes, but at the low end of our normal range. This was not the bottom falling out from the labor market. And in terms of balance, we really do still see some balance between the number of unemployed workers and the number of job openings. Now, both of those numbers are a little bit lower now, so I think of it like a scale that can be in balance, whether there is a lot of weight on both sides or very little weight on both sides. We can still be in balance. It's just in one of those cases, it's a little easier to knock out of balance in the future.
Well, there are some arguments starting to arise that the reason that there are fewer jobs being created is because there are just fewer workers here. And if you cut, that doesn't help all of a sudden create more workers in the U.S. How do you see the drivers of this labor market and some of the weaker data that we've been getting? How much of it is about supply versus demand?
I think that's a very real impact that we're going to see, especially later this year. We expect to see negative net immigration this year, and so taking those workers out of the job market, maybe on median doesn't make a big difference, but in certain sectors, certain skill sets, that's going to be a real detriment to labor availability.
You also can't talk about what the Fed does, especially next year, without thinking about who heads up the Fed. Wall Street Journal had reporting over the weekend that you might get someone like Summerlin or Bullard, two more traditional type picks. It shows that maybe we are getting Bessent to run this process. The Kevin's still under consideration, Waller potentially too. Just looking at these names of candidates, Lauren, how much does it change your outlook for what the Fed does in 2026?
I think it's no surprise that we will see a more dovish individual in that Fed chair. So most of these picks, I mean, they're not so far out of kind of the range of consensus. No one is really an oddball from left field. So we'll be watching closely, but they're smart heads. Again, it's just a more dovish tone that will be taking hold.
A more dovish tone, but we were speaking with Neil Dutta on Friday, who said that there's a risk that if Chair Powell stays on the governorship, he acts almost as a shadow Fed chair and tries to kind of navigate the divergence there. If anything, it just shows a more split and more disagreement within FOMC members. Maybe that's something that looks more akin to the BOE. How would that shape policy if it is a Fed that is more divided and has less of the consensus building that we've come to expect from the FOMC?
We've seen this in the past couple of meetings. Already almost like two camps are emerging within the Fed, both in terms of the dot plot and then with two dissents in the most recent decision. So I think there's some amount of dissent amongst the ranks already. However, you have to consider that when there is dissent, even just two dissenters, still the consensus, the vast majority of those individuals are still aligned.
We should probably know that this is tomorrow going to be the first CPI report without a chief over at the BLS. I'm sure Trump will have something to say on Truth Social of what it is, maybe depending on how the numbers are. When you look at the economic data, a lot has been said about fewer responses, maybe less reliability there. If you look at a more political appointment to the BLS, how would you approach the data coming in? Do you still use it? Do you look for more alternative sources? Maybe you already are at this moment. How are you thinking about it?
So with regards to who is in charge, the commissioner of the BLS, that is not someone who has their hands on the data. So I would not expect either the previous commissioner or any future commissioners to really be pushing on the scale one way or another. What I'm actually more concerned about, as you mentioned, the lower response rates, but we've also just seen more imputed data points. Over a third of CPI data points are now being imputed in at least the most recent month of data. So we're looking for that divergence. It won't happen at first, right? Anytime we get kind of a drift away, we would expect that divergence to widen over time. If anything, I think the risk is to understating CPI, just given where the structural factors are. But at the end of the day, all we can do is look for additional data sources to either refute or deny or collaborate what we see coming out of the CPI. But we'll be watching other data sets closely as well.
Lauren, we're going to have to leave it there. Thank you so much for joining. This was fantastic as always. That is Lauren Sadel-Baker of ITR Economics. Coming up on the show, an unprecedented arrangement. Shares of NVIDIA and AMD lower in the pre-market trade after an agreement with the U.S. government that I think few saw coming. We're going to have more on that next, coming up on your brief.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Let's now get you the latest on trade, where President Trump is urging China to quadruple its purchases of U.S. soybeans. It comes just a day before the U.S.-China trade truce is expiring. For more, we're joined by Bloomberg's Brendan Murray, who leads our global trade coverage for us. So, Brendan, a day to go, how are things looking between the U.S. and China negotiations?
Well, it sounds like President Trump is trying to nudge his counterpart, Xi Jinping, to engage. He said, "Thank you very much, President Xi." And here we are, less than 24 hours before that deadline, and we still don't see any movement toward a truce, at least publicly. So we'll have to see how things play out in Washington today. But those tariffs that the U.S. and China had on each other are going to snap back if nothing happens between now and midnight Washington time tonight.
They're going to snap back, and again, the latest call here is for soybean purchases. Brendan, do we understand what some of the sticking points continue to be between the two countries?
Well, they continue to be, and have been for weeks now, the supply of magnets that China controls and the supply of advanced chips that the U.S. controls. So we're seeing some horse trading going on. Commerce Secretary Lutnick has called it as such, and so I think we're seeing both sides trying to position themselves to give a little in that area, but not give too much. And so those are the main things that are bogging down the two sides from reaching any sort of agreement. But we could see something before the end of today. And soybeans is sort of that classic American export that China has traditionally bought a lot of, but has been going to South America more recently. So and the price of soybeans in the U.S. has been pretty flat for a while. So President Trump is trying to offer China a way to kickstart those negotiations while also sort of juicing the soybean market for American farmers who are sitting there looking at their soybean fields going, we're not going to make a whole lot of money this year unless prices go higher.
Brendan, we're going to catch up with one of our tech analysts out of Bloomberg Intelligence shortly about AMD and NVIDIA agreeing to give the U.S. government 15% of their sales revenue to China on AI chips. But can we just hang for a minute on the politics of this, Brendan? Some people look at this and say, okay, we're tariffing exports now. How unusual is this move from the government, from these companies?
Yeah, it's pretty unusual, and the China hawks in and outside of the administration in Washington are going to criticize this as you're basically selling what used to be national security leverage in the way of export controls. President Trump might turn that around and say, look, we need to find a way to deal with China, and why not charge the companies the 15%, and maybe they'll pass that on to Chinese buyers the same way that the president is charging American importers tariffs that he says will be paid ultimately by foreign trading partners.
All right, Brendan, thank you very much. That is Bloomberg's Brendan Murray. And let's get more on that story. And Bloomberg Intelligence tech analyst Charles Shum joins us now for more on this of AMD and NVIDIA giving up 15% of their AI revenue from China chip sales to the U.S. government. Charles, how does this change the business model and where AMD and NVIDIA go from here?
All right, this is actually a very new movement because it actually showcases that the revenue sharing would be actually the part of a new export policy from the Trump administration. So going forward, from the investor perspective, actually the policy risk will be actually a line in their model. They have to actually count how many percentage profits that has to be shared with the government. And also, this actually, the policy risk will be actually a part of the competition games that for both the buyer and also seller have to consider. Because in the near future, now it's actually possibly 15%, but who knows when will that goes to 25% or even more. So that's something that I think from the investor perspective, they have to consider about this.
Charles, just while we're talking about corporate America, tech companies under pressure, there's the Intel CEO too, the Journal reporting that he's going to be visiting the White House. What is the likelihood that Louboutin can stay on? Is there any wiggle room for him at this moment in negotiating with this White House?
Yeah, that's a very good question. I think that's a very big question that the CEO has to answer. It is that whether Intel will continue to maintain its big investment plan in U.S. chip making capability. In the previous CEO era, him actually has mentioned that Intel will actually invest about $100 billion in the U.S. chip making capacity over 5 years. But since the new CEO comes on board, he never mentioned that. Actually, in the latest, in the recent actually the earnings call, he just mentioned that he will actually will focus on bringing the Intel back to the profit-making path, and he will very conscious on all the money he spent. So that he doesn't give a very clear answer on whether the Intel will still commit to the U.S. chip making expansion. So that's actually something that I think the Trump administration, who's actually pushing for more advanced chip capability in U.S., will really want to the CEO to answer this question clearly and also, yeah.
All right, Charles, thank you very much for those updates. That is Charles Shum of Bloomberg Intelligence. Now, meanwhile, gold futures are falling as traders await further clarification from the White House over tariff policy, down 2.1% this morning after a rally on Friday over those surprise tariffs from the Customs and Border Patrol that they were charging on gold from Switzerland. Bloomberg's Jack Ryan joins us for more. Jack, what sort of clarification might we get from the White House today?
Well, that's what everyone's watching for. We're not sure, is it going to come today or later in this week? They said on Friday that they would be issuing an executive order to address, as they said, misinformation in the gold market. And that was basically coming after on Thursday and through Friday, we had this quite dramatic Customs and Border Protection Agency ruling, which essentially said that 100-ounce bars or kilo bars of gold, which are particularly kilo bars, the most common type that's traded in the United States, would be subject to tariffs. And that came as a real shock to the market. And so the White House was quick to kind of address that, but then no one knows exactly what they're going to say.
So what are refiners doing in the meantime, Jack? Is this a market that's frozen?
Exactly. I mean, I don't think there's any gold on the way to the United States now, because from speaking to the refiners myself, they're terrified by this. And essentially, they don't want to take the risk of taking a potentially 39% tariff on gold bars that they're exporting to the United States, because the margins in this industry are super slim. They can't wear 39%. So they are really worried about this and essentially not taking any risks. That's the word I'm getting from the refiners.
If this continues on, we don't get some sort of clarification, or maybe even if we do, just the disruption itself, Jack, how does that change the global gold trade? What happens if we do get something that looks like a 39% tariff?
So I guess the strange thing is that this isn't really a market for goods. It's really an investment asset. So no one, I think, would really be willing to pay a 39% premium on a bar of gold, any more than they'd want to pay a 39% premium on an investment security above the market price. And so really that would make it impossible to ship gold to the United States. Because these bars, kilo bars, 100 ounce, they underpin the biggest gold futures market in the world in New York. There's a lot of people that I've spoken to, people in the market have said this market actually wouldn't function if you had tariffs on gold in this way. Now, the administration has in the past kind of expressed the principle that they don't want to tariff gold. So I think for a lot of people, the expectation is that this has been maybe a misunderstanding and perhaps this will be rolled back. But we still don't know yet, and there's a lot of fear about it.
All right, Jack, thank you very much for that update. We'll see if we get any clarification from the White House in the next coming days. That is Bloomberg's Jack Ryan. You can see there gold in the meantime down 2.2% after its rally on Friday that saw U.S. gold and international move further apart. For this market, it is little changed for the S&P to slightly higher. We are going to hit an all-time high, though, if we close at the level it's currently trading at. The bulls are emerging. Citi upgrading their year-end target to 6,600. Meanwhile, Bank of America's latest fund manager survey says that it is the most bullish investor base since February. Coming up, it's a busy week of data. It'll kick off with inflation in America tomorrow. We'll lay out the market moving events for your trading diary coming up next.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
You are watching Bloomberg Brief. Let's get you set up for your trading week this week, and it is a big piece of data coming out tomorrow. It is your U.S. CPI out on Tuesday. Expectation is for 3% and 2.8% for core. That will be followed by PPI and jobless claims on Thursday. Finally, we're going to be rounding out the week. We'll get retail sales and the University of Michigan Sentiment Survey. Those both come out on Friday. All right, some of the individual movers this morning, both NVIDIA and AMD falling in the pre-market, an unprecedented deal by any stretch of the imagination. The two companies agreeing to pay 15% of their Chinese advanced AI chip sales revenue to the U.S. Intel, those shares are up 1.6%. The Wall Street Journal reporting that Intel CEO Lip-Bu Tan will visit the White House today. He'd come under fire from Trump last week, with Trump saying that he was conflicted, should resign. Meanwhile, lithium-linked stocks off to the races this morning. 10% for Lithium Americas Corporation. They are surging after CATL in China halted their operations at one of the world's largest lithium mines. There are questions whether China is moving back on some of its overcapacity policies. Meanwhile, your bond market this morning, we are looking at a rally. Yields are lower by nearly 3 basis points for your 10-year yield. We moved higher by 6.6 basis points last week. Some soft auctions abound. Again, big data pieces coming up that could yet again shake up this bond market. That is it now for your Bloomberg Brief. Surveillance will take things from here on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to
continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Our near-term outlook on equities isn't great.
Some of those valuations seem much more ephemeral and .com-like.
Overall market's really not that expensive. Once you take out the Mag 7.
A key word for investors now and always is diversification.
It's really about long-term investing.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday with big tech back at all-time highs. A record share of fund managers say U.S. stocks are overvalued. Just one day before a trade truce between the U.S. and China expires, NVIDIA and AMD agreeing to pay the U.S. government 15% of their revenue from Chinese chip sales.
This is highly unprecedented, Jonathan. Basically, the U.S. government is taking a piece of corporate America's pie when it comes to these two chip makers, NVIDIA and AMD. And what makes this so complicated, even from people that served in Trump's first administration as National Security Council, these chips that they're going to be taking 15% from are the MI308 on AMD and the H20s from NVIDIA. And these chips had export controls on them in April, because the Trump administration said they were aiding the Chinese military. Now, these companies are getting the export licenses if and because they're giving 15% back to the U.S. government.
So let's pick up on those two words, national security. Are we putting a price on national security, or do you think the rationale of national security was misleading to begin with?
I think it remains to be seen. And it depends on the pattern of what we see in this administration, though. The fact that you see tariffs go into effect, and the president says, maybe we can have less tariffs if you invest in the United States. Now they're basically saying, okay, we're going to unwind our export controls. You could send them to China, but we're going to have to take some of that money. And I think in this part, from the Trump administration's thinking, potentially they see killing two birds, one stone. We're able to make some money from this, and we were able to use this as a bargaining chip. Remember, the Treasury Secretary told us a mosaic in the trade talks because they needed those rare earth metals.
So we're all waking up this morning with tons of questions. Here are mine. Is this unique to the chip makers, unique to AMD, to NVIDIA? Or is this a new model for the White House to extend beyond this sector to other companies with a business in China?
Remains to be seen, but likely, why wouldn't we be able to potentially see this again? This is what someone who was a China expert who served under Trump's National Security Council in the first administration told the Financial Times, quote, Beijing must be gloating to see Washington turn export licenses into revenue streams. What's next? Letting Lockheed Martin sell F-35s to China for a 15% commission.
NVIDIA down this morning by about 1%. The broader market doing okay. Equity futures positive by around about 1/10%. Coming up this hour, we'll try and answer some of those questions. We'll catch up with Cameron Dawson of New Edge Wealth, looking for a choppy August. We'll speak to the former White House trade advisor, Kellyanne Shaw, as the government strikes a deal with chip makers, and Andrew Honhorst of Citi calling for the Fed to cut rates at its next 5 meetings. We begin this hour with stocks near record highs ahead of inflation data later this week. Cameron Dawson of New Edge Wealth writing, there are reasons to expect continued equity chop in August, with risks rising if the market remains overly calm and complacent. Cameron joins us now for more. Cameron, good morning.
Good morning.
Is this a market that's overly calm and complacent?
Well, we certainly have seen signs of very rabid risk-taking. If you think about leadership in the market over the course of the last couple of months has been in very low-quality parts of the market, which means that investors are very willing to take flyers. But if you look at some of the sentiment surveys, they're not all too stretched. AAII is still pretty middling. You are seeing signs that positioning has certainly chased strength higher, so people aren't nearly as underweight. They're more neutral now, which just means that positioning is less of a tailwind as it used to be. But if you look at valuations, if you look at earnings estimates, these are all signs of that people are expecting a lot of optimism. So there's really no downside that's being priced in, but because of positioning, you still could see a chase.
Let's pick out a pocket of optimism, the big bet right now. The big bet's for 2026.
Yeah.
A pickup in 26. What underpins the pickup in 26?
Well, it is fascinating. If you break down the earnings estimates between revenue growth, which is expected to accelerate into 2026, in what I would say is a decelerating nominal GDP growth environment. So that's question number one. Question number two is then you already have about over 100 basis points of margin expansion already baked into 2026 estimates, which suggests that the market is expecting some kind of productivity boom, whether that's just coming from normal blocking and tackling and cost cuts or some kind of AI miracle. So the 2026 numbers at about $300 a share, there's a lot of optimism baked in, but you have the bulls on the street effectively saying those numbers are still too low simply because of things like AI.
When it comes to revenue streams, though, and you think about next year, Goldman Sachs has a note out today saying the tariff impact is yet to be seen when it comes to consumers, when it comes to corporate America. Isn't that a huge risk for next year?
I think that that is the big risk and wild card, which is that companies have been very hesitant to want to pass on tariff increases to consumers thus far. You've seen pockets of it, but companies are worried that if they raise prices, that they will lose market share, meaning that prices go up, quantity goes down. So we haven't seen this full pass-through of inflation to consumers. Companies have been absorbing it more, taking it more on a hit to margins. So as we see these tariff rates get set in stone, as the uncertainty about where they land starts to fade away, we would expect companies to pass on more of these costs to consumers, and thus you could see that revenue number be more of a challenge because it means you're giving up on quantity.
So then my question is, why is everyone so bullish for 2026?
Because 2026 isn't here yet, and you have this huge liquidity tide that is continuing to support markets. I think it's important to remember that oftentimes we try to ascribe narrative to price action, and that the price action can be driven by things that are not related to what's going on with the narrative or earnings growth. So as we're seeing the market drift higher because of things like liquidity, because of things like positioning, we look around and say it must be because earnings are so fantastic, when in reality it could be those other drivers.
Remember payrolls? Feels like a lifetime ago. More data this week, CPI tomorrow, retail sales later this week. What are you and the team looking for from this week's data?
Yeah, the question will be is how saucy could inflation prints have to be that it challenges the 80% or almost 90% expectations for a rate cut in September. And really the inflation is going to be under the surface that we're looking for. The headline numbers may still be fairly stable and benign, but it's looking in the durable goods line where you're expecting to see that inflation pass through. So the question will be is, are you seeing enough of an inflation pass through that it backs the Fed into a corner where they're having to choose between a weaker labor market versus higher inflation? And we've been calling this environment stagflation light, which is just you're getting a deceleration in growth with sticky inflation. That's something that this current Fed, and that's an important point, this current Fed won't like. The future Fed may not be as much of a problem to deliver cuts.
The dual mandate is in conflict already. Before we get to the future Fed, let's focus with the one we've got. Do you sense they're going to prioritize one half of the mandate over the other by the time we get to September?
Well, they certainly seem to be, members of the Fed are leaning that way, saying that we have the ability to look through the inflation that's driven by tariffs. Even Powell said that at the last press conference. We do expect these inflation dynamics from tariffs to be temporary. So it means that if the labor market continues to show signs of deterioration, even if you see some tariff impacts in the CPI line underneath the surface, they could still deliver the cuts.
Michelle Bowman over the weekend was talking about now she wants 3 cuts before the end of the year. How many cuts do you think the Fed will actually come to fruition?
Well, we've been in this camp that we think that the Fed is going to deliver all or nothing at all, which means that if the labor market remains resilient, which we got data that suggested that that's not the case, that they wouldn't cut at all, but that if the labor market deteriorates, then they start to make a path and a march towards neutral. And so it's very possible that you could see 3 cuts this year simply as they are moving in that direction towards a neutral rate, which we know is, the Fed thinks it's over 100 basis points lower from where it is here.
But we have 2 more CPIs, 1 more jobs print before the Fed meets. What are you putting more weight on?
So we do think that the labor market data isn't necessarily weak enough that they have to step in and do a big 50 basis points cut, but we do think that the inflation data could mean that they have to balance this dual mandate. So it just means that maybe they cut and move slightly towards neutral, but they don't deliver the deep degree of cuts that many bulls are expecting.
That's the data this week. Let's finish on 2 single names. I know you can't cover these single names directly, but I just want to understand what your reception of this news is, how you're receiving it on AMD, on NVIDIA, to basically turn around to an American company and say, if you want to play, you've got to pay. Give us our cut.
Yeah, if we go back to April, we were debating what role these tariffs played. Were they simply just a revenue-raising mechanism, or were they actually intending to rebalance global trade and accomplish some geopolitical types of aims? It seems more and more that this is just a true pursuit of revenue. That means that they stick around. That means that they get baked into budget forecasts. It means that the rate that we have today should be seen as a floor, not a ceiling.
I don't know what this means for equities, but does that make it bullish for bonds?
In theory, yes, because it means that if you're continuously raising revenue, even though you can't put it in the budget statistics, you don't have to issue as many treasuries because you have this external revenue service slush fund in order to pay your bills.
Bond yields lower this morning on a 10-year, down by about 2 basis points. The 10-year 4.26 on 30s this morning, down to about 4.83.
What feels highly unusual about the setup of this, and so far we don't know yet, the Trump administration hasn't said what they're going to use these funds for, where it's actually going to go to. The administration has tried to use this carrot and stick approach with companies and countries to invest in the United States, build a plant, manufacture, please come make this your home. This is outright saying what you said, if you want to play, if you want to do business outside of the U.S., well, you're just going to have to give us a cut.
Cameron, it's good to see you, as always. Thanks for dropping by. Cameron Dawson there of New Edge Wealth. If you are just joining us, welcome to the program. Big inflation print coming up later on this week, going into that very close to all-time highs on the S&P. Equity futures so far this morning pushing just a little bit higher. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Yahara Anand. Hey, Yahara.
Good morning, John. Shares of NVIDIA and AMD are trading lower in the pre-market after the chip makers cut an unprecedented deal to pay 15% of their China AI chip sales to the U.S. government. The agreement will allow them to export licenses to the country and reflects President Trump's effort to engineer a financial payout for America in return for concessions on trade. Meanwhile, the U.S. expects to complete trade negotiations with countries that have yet to secure a trade deal by the end of October. That's according to Nikkei Asia, citing an interview with Treasury Secretary Scott Bessent. He also reaffirmed the importance of the Fed's independence, but said that the next central bank head should be very attuned to forward thinking. And President Trump is preparing to meet with Russian President Vladimir Putin in Alaska on Friday to discuss ending the war in Ukraine. President Vladimir Zelensky said Kyiv won't cede territory to end the war with Russia. European leaders pledged their continued support for Ukraine's sovereignty, saying international borders must not be changed by force. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on this hour. Up next on the program, Pay to Play.
The H20 was the 3rd best chip in the world. The president has decided that the Chinese can buy them, but that's in a balanced way with the Chinese delivering on the deal that we made with them.
Up next, we'll catch up with Bloomberg's Tom McKenzie, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Live from New York City, welcome to the program. Here's your week ahead. It starts with inflation. Tomorrow morning, US CPI just around the corner, 8:30 Eastern Time. More data through the week. On Thursday, PPI and jobless claims. On Friday, look out for retail sales. And then in the middle of all of this, not really been talked about so far this morning, or over the last week for that matter, the trade truce between the US and China expires in the next 24 hours. Now, most people assume there will be an extension of this truce by another 90 days, but we haven't seen that extension just yet.
When it comes to the London talks, Secretary Besson said when it comes to the final decision, that will be left for Trump. Trump hasn't said that yet. What did he do overnight, though? He started truthing about China buying more soybeans on the basically right before this deal is set to expire and we go into harvest season in the United States. What my understanding from this administration, from the Treasury Secretary, is that there's likely going to be another 90-day extension. But to your point, we don't have it just yet.
Look out for that in the next 24 hours. For the broader equity market, coming into Monday, close to all-time highs and adding some weight to the rally. Equity futures up by another 1/10%. We've seen it on repeat over the last week. Upgrades to the outlook for the S&P 500 price target at Capital Economics, at HSBC, at Citi on Friday going into the weekend. What on earnings? Better than expected earnings in America. Even with all the trade friction continuing, the earnings story has been pretty powerful. That's why you see the Nasdaq coming into Monday at record highs. That's the equity market. Under surveillance this morning, it's pay to play.
The H20 was the third best chip in the world, and now it's the fourth best. The president has decided that if things are going well with China, that they can buy them. So I think that decision's been made. We are putting on the licensing mechanism, and we are getting that going. But the president has decided that the Chinese can buy them, but that's in a balanced way, with the Chinese delivering on the deal that we made with them, and they're delivering rare earths.
So here's the latest this morning. Sources telling us here at Bloomberg that NVIDIA and AMD have agreed to pay the US government 15% of their revenues from chip sales in China in order to secure export licenses. Joining us now is Bloomberg's Tom McKenzie. Tom, welcome back to the show, buddy. Let's just talk about how this is going to work. How is this going to work?
15% of sales, 15% of the revenues that they make from those sales into the China market of the H20 when it comes to NVIDIA or AMD's equivalent. Once they start shipping those, they will get the export license, according to this reporting, if they pay that 15% into the US Treasury. That apparently is how it's going to work. There are legal questions around this. If this is categorized as an export tax, potentially there are legal challenges to this, but according to our reporting, this is what NVIDIA and AMD have signed up for. And again, quoting some of the analysts in our own reporting, pretty unprecedented. Hard to think of another example of a US corporate signing up to this kind of export demand from the US government. China, meanwhile, yet to officially comment, John, on this development, but they have in recent days pointed out through state media and through blogs affiliated with state media concerns about what they describe as national security risks associated with NVIDIA's H20 at a time, of course, when China is now showing no signs at all of walking back from its doubling down on building out its own chip sector and ensuring that it has less dependency on those US AI accelerators.
Tom, you've spent years in China. What do you think they're thinking behind the scenes in terms of the U.S. going to corporate America and saying, you can send these chips to China that we originally blocked because of national security concerns, we just want a piece of the pie?
I think if you rewind the clock 6 months, China is in a much better position versus now. The H20s the licenses, it seems, will be approved for those. You look at the movements in terms of the equity markets for China. Yes, they have all the concerns about the domestic consumer and about the real estate and property sector. Those remain. The geopolitical tensions, you talked about the fact that this truce is expected to be extended again by 90 days. China continues to invest. You see the developments coming through from the likes of Huawei at 7 nanometers and Xpeng, according to reports, coming through with a chip of 5 nanometers, not closing in on 3 nanometers that the likes of TSMC are churning out, but closing that gap. So they're going to get access to the H20, but continue to build out their own AI accelerator capacity and try and close that gap. I think China will probably be rubbing its hands at the prospects of potential domestic pushback on this policy as they continue again to try and funnel investments into AI accelerators that they continue to need that underpin the models, of course, of Alibaba, DeepSeek, and others. And it's really high silicon that sits at the heart of Huawei that is leading the charge on this front.
Tom, are you basically saying that China needs the MI308 from AMD and the H20 from NVIDIA just to bridge to basically when they're up to par where the United States is in terms of these advanced AI semiconductors?
China has not spelt out, Anne-Marie, its policy around this, but it is pretty clear that a reliance on US chips is not what China is going to be comfortable with. And the fact that Jensen Huang has essentially said, look to the US and to President Trump, we should be allowed to continue to supply these AI accelerators into the Chinese market, precisely because if it comes to it, we could just pull the plug on those. That gets picked up by China. They're listening to that. So yes, this can tie them over until they have their own capacity. There's the other question about national security. The case being made by the Biden administration and by the Trump administration to allies in the Netherlands and in Japan, do not sell your hardware and software into the Chinese market because of national security concerns. Well, that now has put a big question mark over it, because if you're prepared to pay that 15%, then suddenly national security concerns seem to be being put on the back burner.
Hey, Tom, well framed as always. Tom McKenzie out of London this morning. Tom, thank you. To build on the conversation, Terry Haynes of Pangea Policy joins us now for more. Terry, good morning, sir, and welcome to the programme. Did we just put a price on national security, or was there never a national security risk to begin with?
Good morning, John. And I think I'll take the third door, frankly. Of all the options which you and Anne-Marie have laid out very well this morning, I think the one I find most compelling, or more compelling, is that this was part of the U.S.-China negotiations to begin with, and that's the principal reason why this chip's being let out the door. I'll defer to Secretary Lutnick on whether it's the third best chip or the fourth best chip or whatever, but the fact of the negotiations are really the big deal here, and Bessent's been very upfront about that.
Right. He called it a mosaic in the trade talks, using the chip in the talks as a negotiating tool. But Terry, what about the fact that the U.S. government is now saying you can send those chips over if we get 15%? How is this capitalism and not central planning?
Well, I'm not going to be an apologist for the Trump people, and they have some explaining to do on that front, I think. But I think it's probably a mistake to read this as some kind of a bigger pattern, generally speaking. I think what my instinct on this is that what they did was the final bit of this was to say, well, you know, let's see how desperate they are to actually want to export. Let's see if they'll pay something as the final piece of the puzzle, and they did. But you got the tech industry being humbled on both ends here. On the one hand, the pieces being taken out of the door on these chips, and on the other end, China says they want the chips, and now apparently they might not want the chips because there's an unacceptable backdoor, or they want these companies to parse through the chip to show them that there's not a backdoor. They're therefore showing you where the backdoor would be, that sort of thing. So either way, this isn't exactly the cruise the tech industry signed up for either. So I think they're probably going to be warier of any deal next time.
But Terry, if Trump can get away with this, why wouldn't he do this with other companies and key security products, even things like LNG to Europe?
I'm not saying he would or he wouldn't. All I'm saying is that I think this is the first of a special circumstance, and I wouldn't expect the administration to extrapolate that. And one reason why, frankly, is it makes the ability to export less attractive. So I think in the vast majority of cases, this is not a tool the administration is going to be interested in using in any sense. I don't think we're going full mercantilist here.
Speaking of China, tomorrow the détente between Beijing and Washington is set to end. Do you think we get an extension, and for how many extensions can these two countries go through?
Well, I do, but the reason why doesn't really have anything directly to do with China. It has everything to do with China's client state, Russia. One reason why the United States is playing footsie with China, technical trade term we all know, is that they want to get China to get Russia to stop the war in Ukraine. The way not to do that is to pile a bunch of tariffs on China this week. So the reason, fundamentally, I think the extension continues. And from there, success or failure of the Russian talks will proceed. But and what I said to markets yesterday was, you look at the Russia talks as a canary on the China talks. If they go directionally well, the Russia talks, that means China's playing with the idea, at least, that it's time to wind up the Russian-Ukraine business. But if not, then not. So I think you're going to see directionally how one goes based on the other.
Terry, appreciate it. Thank you, sir. Terry Haynes there of Pangea Policy out of Washington this morning. It's all one big piece of the broader negotiation.
Potentially, and Terry basically pointed to the fact that maybe Beijing is putting the thumb on Moscow now to wind down this war. It is interesting reading some of the tea leaves. Xi Jinping got on a call with Putin on Friday, and in the press readouts in China, there was this idea that they look forward to these discussions between Putin and Trump and would like to see working towards a peaceful resolution.
Are you expecting a resolution this weekend?
No, I think the best case scenario is that you get a process to a resolution. So there needs to be a process put in place to really get to the fundamental issues, a lot of national security issues when it comes to Kyiv and Moscow.
That meeting taking place near the end of this week. Next on the programme, coming up, we'll catch up with the former senior White House trade advisor, Kellyanne Shaw, on the latest movement with NVIDIA and AMD. Plus, we'll catch up with Yahara once again with your morning movers, with Coinbase rallying this morning, mirroring a jump in crypto prices. Coinbase up in a pre-market by 4.6%.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Equities doing okay this morning, positive by 0.1% on the S&P 500, all-time highs on the Nasdaq 100. Equity markets putting up the best week since June last week, following the worst jobs data since the pandemic. It's not just equities, high-yield credit spreads, tighter, Monday, Tuesday, Wednesday, Thursday, Friday. Equity market and risk assets are doing okay. In the bond market, 2-year, 10-year and 30-year bond yields are lower this morning. We're down by about a basis point on a 2-year, down by 2 on 10s to 426.16. The next big stop for this market, about 24 hours away, 8:30 tomorrow morning, US CPI. The big data point just around the corner. That's for tomorrow, 3 hours away from the opening bell. Let's get you some morning movers. Let's cross that back over to Yahira. Hey, Yahira.
Hi, John. We start with our top story today. NVIDIA and AMD both falling in the pre-market after they agreed to hand over 15% of their China AI chip revenues to the U.S. government in exchange for those export licenses. Analysts, of course, are calling this unprecedented, especially because there had been a ban imposed for national security reasons, as you and Anne-Marie were saying earlier. But of course, this aligns closely with the Trump administration playbook of securing financial concessions in return for easing trade restrictions on companies. Next up, we have shares of Coinbase. They are rallying 4.4%, along with other crypto-linked stocks this morning. And this is because Bitcoin is rallying as it gets within striking distance of its all-time high of over $122,000. And what I thought was interesting is that some analysts are saying that some of this buying is in response to the surprise U.S. tariffs on gold bars, which caused chaos in the gold market last week. And we are still waiting on the White House to clarify those tariffs. We may see that today. And we end on Intermex. That is soaring 58% as Western Union announces that it is buying the firm for $500 million as it makes a big push into Latin America with this acquisition. And the reason those shares are rallying so hard is because Western Union will pay $16 a share, which is a premium of over 70% from Intermex's closing price on Friday. John?
Yahira, thank you. Thanks for the update. On our radar this morning, the chip sector in focus, NVIDIA and AMD agreeing to pay 15% of their revenues from Chinese AI chip sales to the U.S. government in a deal to secure export licenses. The move following a White House announcement allowing sales of NVIDIA's H20 chip to the country. Spare a thought for Lip Bhutan, the Intel CEO, visiting the White House later on today. The visit coming after President Trump called for his immediate removal over his ties to Chinese businesses. The Wall Street Journal reporting that Tan hopes to show his commitment to the United States.
So I think when he says his commitment to the United States, kind of money investment we were making in the U.S., especially on the heels of this report that NVIDIA and AMD use when it comes to these high advanced chips to China, to the U.S. government. What's one thing is really interesting, the Wall Street Journal reported this on Friday, it's not just the pressure this CEO is getting from the Oval Office. He's in the hot seat as well when it comes to directors and the board about strategy going forward for this company.
Intel's under pressure, NVIDIA and AMD in focus. Intel's under pressure, NVIDIA and AMD in focus this morning. Let's just talk about those two names. Unprecedented in many ways. We haven't really seen anything like this from this administration or from anyone in the Western universe. I want to talk about where it's coming from. Either you believe there was never a price on national security. Now, Terry Haynes joined us about 5-10 minutes ago. He selected door number 3, and he said negotiation between the US and China, this was always the goal.
Well, here's what I would say. If you look at a letter in June from Matthew Pottinger, who's the president's former deputy national security, he outlines how concerned it would be to the for the United States, for China and China's military hands again on NVIDIA. He's helped China's critical AI ambition. Less chips for the United States. It says it will support China's military and weakens export control. How the United States is going to be using this money. But who is next? Will this now be a strategy going forward this administration will do? Not just carrot and stick approach, but high tariffs will lessen the tariff load if you invest in the United States, but it's going to have to give us part of that profit.
We'll come back to this story in just a moment. Just wanted to draw your attention to the bond market. Yields lower at the front end of the curve, down by a basis point or two on a 2-year to about 375. Governor Mickey Bowman calling for 3 rate cuts this year, saying easing policy should prevent further erosion in the labour market. The comments following the latest Fed meeting where both Bowman and, of course, Governor Waller dissented.
So I think you can view this as 2 ways. One, she really maybe wants that job and now sees more names being added to the list, like James Bullard over the weekend from the Wall Street Journal. She's thinking, I'm going to double down. I'm not just talking about a rate cut in September. I want 3 rate cuts before the new year. But also, the data right now is in her favor with the weakening labor market. This is why the next 2 CPI prints are going to be so important, Jonathan, after the ISM services really saw potentially stagflation undermining in the economy.
The divide at the Fed, I think, is pretty clear right now, and it's around the dual mandate, full employment, price stability. And which side of that dual mandate are you choosing to prioritize at the moment? So Governor Bowman over the weekend, we should focus on risk to our employment mandate. 1. Here's another one. The Fed president, Muslim, saying this: we are missing on our inflation target. We are not missing on our employment mandate. And that's going to be the big debate by the time we get to the middle of September.
Absolutely. And what will we see in the economy by September? Goldman Sachs this morning, I was really struck by this note and some of the numbers they put out with it. The fact that they are saying we have yet to see the tariff impact. Right now, they say consumers in the United States have absorbed an estimated 22% of tariff costs through June, but their share will rise to 67% if the latest tariffs follow the pattern of levies in previous years. What does that mean? Potentially higher inflation.
Andrew Honhorst, the City, just moments away, about 10 minutes away, calling for 5 consecutive rate cuts starting in September. Let's turn back to our top story. NVIDIA, AMD agreeing to pay a cut of AI chip sales in China for export licenses. Bloomberg's Wendy Benjaminson joins us now from Washington. Wendy, the team's been on top of this over the weekend and overnight. What have we learned, and how surprised were you by the latest developments?
Well, we were very surprised here in Washington to see this development happen. The idea, as you both have noted, of pay to play, of if you want to sell your chips to China, national security, don't worry about it, just give me 15%. I mean, the Trump is looking for revenue from everywhere he can. That's sort of what's behind the tariff regime, and also his notion of, everything is transactional. So if you want to lower your tariffs, you pay, you do something, you promise to invest in the United States. Tim Cook brought a gold iPhone and some other, tchotchkes to Trump in the White House and suddenly got a break on tariffs. Wang was in the White House the other day and got this deal to sell the NVIDIA chips. So this is just part of the pattern that we've been seeing over and over again. And we will, see it in every aspect of Trump's presidency.
Wendy, do you get the sense that it's unique to these companies, to AMD, to NVIDIA, or is there more to come?
It is at the moment, But there is more to come. As you noted, the Intel CEO is in town today, is meeting at the White House with Donald Trump. So we'll see what comes out of that. And, we have all these other trade negotiations going on, with Canada, with Mexico, with all these countries. Scott Bessent said over the weekend that he hoped all the trade deals would be wrapped up by October. And for that to happen, there's got to be some sort of deal making like this, because in normal situations, as we've said before, trade deals take months, if not years, to work out. But if you want to work them out quickly, give Donald Trump a percentage of your profits.
Wendy, appreciate the update. Bloomberg's Wendy Benjaminson out of Washington, D.C. this morning. To build on this, the former senior White House trade advisor, Kellyanne Shaw, joins us now for more. Kellyanne, welcome. It's something we've explored over the last 40 minutes or so, whether this is a unique case for AMD or NVIDIA, or a brand new playbook that we'll see more of in the not-too-distant future.
Good morning. Thanks so much for having me back on. Now, of course, what's new about this is not the fact that the administration is allowing sales of H20 chips to China. What's new is this concept of taking 15% of the profits or some amount. We don't know exactly yet what that is or how this will work in terms of operationalizing it. And so it is very unique. This is obviously a president who does not play by the standard rule book. He very much takes approaches that are outside the box and novel. And so looking at export controls in this new way, while it's surprising, I guess the fact that they're doing it this in terms of something novel is not what's surprising.
Kellyanne, have we ever seen anything like this before?
No, I mean, not to our knowledge. This is a very unique approach. I mean, there had been a tremendous amount of consternation and question in Washington about the H20 export controls in the first place. Were they part of the China deal? Were they national security? Are they being traded away? Like, what does this mean? And so this new element of this 15% of the profits, it's really highlighting how transactional the administration is. And this is a president who's willing to take different approaches to all sorts of problems like trade negotiations, trying to incentivize companies to invest in the United States. And now here he's saying, okay, I'll let you sell your technology to China, but I'm going to take a chunk of your profits for doing so. This is something we've never seen before.
What does this nugget mean in terms of the deal that's set to expire tomorrow?
So we don't totally know, but I will say, having watched the phase one deal play out during Trump 1.0, there's a lot happening behind the scenes. So we had the president tweeting or truth posting overnight about the need for soybeans and China's dependence on soybeans. He's previously talked about aerospace, the fact that China needs our engines and our planes to fly for their military. We are obviously reliant on Chinese rare earth magnets and a number of other critical minerals. And now we have these export controls in the mix. And I think that there is a broader set of issues that was part of that framework negotiated in London that we just don't totally have visibility into. And this may be one of the chits being played behind the scenes. And we now have about 18 hours before those 100% tariffs and higher go back into effect. So clearly there's a lot of horse trading happening behind the scenes right now.
You mentioned the president's truth on soybeans. He said, I hope China will quickly quadruple its soybean orders. This is also a way of substantially reducing China's trade deficit with the USA. You were there for this exact deal. Where are we in terms of that phase one agreement?
Yeah, and this is something that Secretary Bessent talked about going into the Sweden meetings, about whether or not the United States was going to enforce those purchasing commitments that were part of the broader frame or a phase one deal. And he said that they would be talking about it. So clearly this is something that's on the president's mind. Farmers are the tip of the spear when it comes to these U.S.-China relationships. We have a lot of national security concerns, including export controls, but farmers are the ones that tend to get hit first in terms of this retaliation. So the president is definitely putting on the table quite publicly what he sees as something that China can do to sweeten the deal.
Kellyanne, are there enforcement mechanisms that you think we need to rethink this time around that didn't work last time around?
Well, the only enforcement mechanism contemplated under that phase one deal was tariffs. And it was this idea that if China doesn't comply with its both purchasing commitments as well as some of these substantive commitments, that we're just going to tariff them and ratchet those tariff rates back up. Here, what we have is a second prong of enforcement, and that's export controls, and that's new. That's why you have so many China hawks in Washington concerned about the fact that export controls can be loosened and tightened as part of a compliance program versus the pure national security concerns that we're used to seeing export controls be used for. So now the president has two lanes. He can either ratchet up tariffs or he can tighten or loosen export controls.
Kellyanne, appreciate the reaction. The former senior White House trade advisor, Kellyanne Shaw, just 24 hours out from the latest deadline.
And this deadline, it likely seems, and this is what the Treasury Secretary has basically insinuated, it is going to be extended. Potentially, though, this is why you see the truth from the president. He knows that this deadline is tomorrow, and he wants to make sure that China is back in focus, and he's looking for potentially more of a grand bargain kind of agreement. Security concerns like chips, soybeans, all of it on the table.
If you're just joining us, welcome to the program. Looking ahead to CPI tomorrow morning, 8:30 Eastern Time, Tuesday morning. Before we get to that, a lot to work out in trade. In this market too, equity futures positive by about 0.1%. With an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. As you guys were talking about, President Trump hopes China will quadruple its soybean orders just a day before the trade truce between the two countries expires. The soybean push comes as U.S. farmers are just weeks away from their next harvest. As of late July, U.S. government data showed China has refrained from booking any cargoes for the upcoming season as those trade tensions linger. Meanwhile, Israeli Prime Minister Benjamin Netanyahu is defending his plans to seize Gaza City despite being met with opposition at home and abroad. Netanyahu says it's needed to, quote, complete the job to defeat Hamas and free its hostages. This as the country faces global condemnation over the growing humanitarian crisis in Gaza. And President Trump will hold a news conference today at 10 a.m. Eastern to lay out his ideas for ending violent crime in the nation's capital. Trump says his plan will include moving out homeless people who camp along the city streets. The president's powers, though, are limited by a home rule law passed back in 1973. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time. Up next on the program, the labor market on thin ice.
I think the labor market are on very thin ice. If you look at the breadth of employment growth, it's basically at stall speed. And, you know, there's also additional weakness in the pipeline.
In just a moment, we'll catch up with Andrew Honhorst of Citi, live from New York City. You're watching Bloomberg TV.
In case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Equity futures positive by 0.1%, building on last week's gains. On the Nasdaq 100, record highs coming into this trading week, just about unchanged so far this morning. Under surveillance this morning, the labour market on thin ice.
I think the labor market are on very thin ice. If you look at the breadth of employment growth, it's basically at stall speed. And, there's also additional weakness in the pipeline. There's more downside ahead. If companies, generally speaking, are a little bit more concerned about their demand outlook, they're not going to be hiring as much or investing as much.
It's the latest this morning. Economic data out this week in focus as Fed Governor Bowman calls for 3 rate cuts this year. Andrew Honhorst of Citi expecting even more in 2026, expecting continued softening in labour markets and officials to cut 25 basis points at each of the next 5 meetings. Andrew joins us now for more. Andrew, good morning.
Good morning.
Have we got a labour market on ice? On thin ice?
There's been something very uncomfortable about this labor market for some time, which is that the hiring rate has been very low. So the unemployment rate is low also. That's usually a good sign. But when you look at the demand for workers, it's just soft out there. And you see new workers that are coming into the labor market, new college graduates having trouble getting a job. So I think we've had this weakness that's been there below the surface. It's been in a lot of the details of the data. Now we see it in the headlines.
The split on the FOMC is pretty clear at the moment over at the Federal Reserve. Governor Bowman over the weekend saying we should focus on the risk to the employment mandate. I'm sure you agree. The Fed President Muslim saying this: we're missing on our inflation target. We're not missing on our employment mandate. How do you think they're going to settle this dispute, this debate, in a few weeks' time?
Yeah, I think that's where Muslim and the committee were in July. That's why there wasn't a rate cut in July. I think where they're going to end up being in September, and remember, we have more data, including the CPI report this week, between now and then, but where they'll end up in September is saying that these risks have become more balanced. So you have upside risk to inflation. You're missing on the inflation target, not by a lot. We were 2.5% core inflation in the second quarter, so you're not too far above your inflation target. On the other hand, employment, yes, the unemployment rate is right around levels that would be consistent with full employment, but you have these downside risks. So if you have balanced risks, where should policy rates be? They should be at neutral. And does the committee think they're at neutral? No, they think they're restrictive. So it would make all the sense in the world to cut in September.
When you look at the weakness in hiring, doesn't that match, though, what corporate America has been telling us, which is that basically everything is frozen at the moment because they were still waiting on some actuality of policy from Washington?
Yeah, tariffs may be playing into this, and uncertainty about policy may be playing into this. But it is a trend that we saw emerging even last year with this weak hiring. I think you have seen that increasingly be the case this year. We've seen in the Beige Book where firms are saying they're really not excited about hiring, to your point, and that they've pulled back on these hiring plans. So some of that coming through in the data now.
Well, let's go back to that data point a few Fridays ago. Was that evidence of weaker demand or a supply-side phenomenon that's been building over the last several months?
So this is what's so tricky about the labor market data is that we know that supply of workers has slowed down, immigration has slowed down. So you don't know what is the break-even level of payrolls, how much job creation do you need to keep the unemployment rate from moving higher. A point that Chair Powell made, which I think was kind of lost on a lot of people in the press conference a couple weeks ago, is that it's still not great news if you have an unemployment rate that's staying low because you have weak demand, but you also have weak supply. So we do have weakening in supply. We also have weak demand. And I think what we're seeing most recently is that demand side is starting to dominate.
Well, let's pick up on that. Okay, there's evidence of weaker demand. Is there evidence of increasing slag, which is the more important feature of this conversation for the FOMC when they get together in the middle of September?
So this is the classic problem of econometrics, is how do you disentangle demand from supply? And one way that you do it is by looking at prices. You look at wages and you say, is there a lot of wage pressure that's building out there? No, wages have slowed. So the fact that wages are slowing are telling you that there's not an issue with lack of supply.
Price pressure in focus tomorrow morning. What are you and the team looking for?
We think we're going to see something more in goods inflation. I think that's the consensus also, that more of that's going to bubble through. We have 0.29% month on month on core CPI. That would round to 0.3. That's where the consensus is. I think even if you get a 0.4, if it's focused on goods inflation, that's not too concerning for Fed officials. What you really don't want to see is this broadening out and becoming a broader inflation.
The White House rejected the labor report and said the data wasn't reliant when we saw the last NFP number. Do you think this is going to be an issue when it comes to CPI?
I don't think we're going to see the same thing talked about for CPI, because you don't have those kinds of revisions to CPI, and really with the jobs report, the focus
But it's still
was
the
on those
BLS,
revisions.
and right now
It's
there's
still
no
the
chief.
BLS. It's still the same statistical agency. Look, at the end of the day, these are the best statistics that we have on the labor market, on inflation. We can talk about whether there should be changes to the methodology or not, ways to improve things, but right now these are the best numbers we have.
So you trust the numbers. We're going to get them tomorrow. Goldman Sachs put out this. Consumers in the U.S. absorbed 22% of tariffs so far through June. They say that's going to go up to 67% when we have these new rates. How concerning is that, and how much of a pickle and a conundrum does that put the Fed in?
And so it does look like most of the absorption of the tariff costs so far has been by domestic firms and not by the consumer. I wouldn't disagree that more of this is going to bubble up, and we'll probably see more of this in coming months. We really haven't seen anything in apparel yet, for instance, and that could take a couple months before we see that. Optically, it creates some issues because you have some stronger inflation prints, and we might see one of those this week. But again, if you think about the fundamental economics of it, what we should be concerned about is, do we have a persistent uptick in inflation, or does this look more like a one-time rise in the price of certain goods? The broader dynamics in the economy are actually disinflationary. We have a housing sector that's in contraction, house prices that are flat to down, you have wages that have cooled. All of this would tell you that price pressure should be cooling. Yes, we're going to see something more in goods, but I wouldn't be particularly concerned about it.
Do you expect to see the offset coming from services still in the months to come?
I think, if anything, we have downside risk to services inflation, shelter in particular.
Andrew Honhorst of Citi. Andrew, appreciate your time. CPI inflation data just about 24 hours away, 8:30 Eastern time, setting the stage for the big debate taking place at the Federal Reserve in September. Before we get there, of course, they've got one more stop in Jackson Hole.
Exactly, and I think Jackson Hole has become so much more important now, because you want to hear where Jay Powell is when it comes to the diverging news, and more individuals lining up with the double dissenters, the likes of Neil Kashkari and others saying, there is concern, Lisa Cook, there is concern when it comes to this labor market.
Every time there's pushback, you know what I hear and what everyone else hears, they're running. They're in the running to become the next Fed chair. Where are we in that race?
Well, in that race, we also had more names added to the list. Former Fed Governor James Bullard is apparently under consideration, according to the Wall Street Journal. It does seem like the Treasury Secretary is taken out, so it's the Kevins, the two Kevins. We do have Myron now joining the board. That's going to help them out. And potentially James Bullard now is a name. And then, of course, Governor Waller. And maybe now Mickey Bowman is trying to push ahead, adding, I actually want 3 rate cuts before the end of the year.
There's a few names in the mix before we get to year end. Coming up next on this program, in the second hour of Bloomberg Surveillance, we'll catch up with Peter Oppenheimer of Goldman Sachs. We'll speak to Henrietta Trays of Veda Partners. The former Boston Fed president, Eric Rosengren, will be joining us. Plus, David Rogel of BlackRock. If you're just joining us, welcome. Equities coming into a brand new trading week, very close or at all-time highs. On the S&P 500, on the NASDAQ 100, higher once more. On the S&P by 0.1%. From New York, you're watching Bloomberg TV.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What we do need to be prepared for is more volatility in the data.
There's more downside ahead.
The consumer doesn't feel good right now.
What matters is what's going on in the rest of the inflation basket.
It's a risk, and it can certainly complicate things for the Fed.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now, and your week ahead looks like this. Tomorrow morning, 8:30 Eastern Time, inflation data in focus. Throughout the week, more economic data. Jobless claims on Thursday, retail sales going into the weekend, and in between, squeezed in between, a deadline between the US and China and their current trade truce. For the equity market at the moment, coming into a brand new trading week at all-time highs and adding just a little bit more weight to it this morning, up by 0.1% on the S&P 500, up a similar amount on the NASDAQ 100. On the NASDAQ, two names in focus, NVIDIA and AMD in the pre-market. If you want to play in China, you've got to pay.
Exactly, and this is according to a Financial Times report that basically the Trump administration is saying if you want the export licenses to have the H20 or the MI308 from AMD go to China, you're going to have to put 15% of those revenues, give them back to the U.S. government. Now, this is very unprecedented. Everyone we've spoken to has been unable to give us another time and place in history where this has happened, or as Kellyanne Shaw, who was at the negotiating table with China during the first Trump administration, said it's a unique approach, a diplomatic, constructive way of looking at what we're seeing right now.
Those names down just a little bit. NVIDIA down by 0.6%, AMD down by something like 1.7% so far this morning. We keep going back to the same question. Is this unique to those two names, or are we going to see more of this in the next few months?
We don't know yet, but if the Trump administration is successful when it comes to AMD and NVIDIA, what's to say that they won't do this with other names? Why wouldn't they? They have used this carrot and stick approach time and again when it comes to tariffs. tariffs. High tariff walls. Okay, well, lessen your tariffs if you invest in the United States. We've seen this with a number of companies. Build here, bring your manufacturing, your product here. Now they're saying it different. If you want to play in China, which we have issues with, you're going to have to pay. What I find more complicated for them in Washington, D.C. is going to be the pushback, not just from Democrats, from within their own party, China hawks saying, you are putting revenue streams over national security concerns.
Mentioned this deadline between the US and China a few times. Coming up fast, the trade truce set to expire in the next 24 hours. Most people just assume that's going to continue. We'll get an extension of 90 days. I keep wondering why we haven't seen the extension just yet. I remember that extra round of talks between Secretary Bessent and the Chinese delegation. He came out of it and basically said it's up to the president to decide whether we get an extension. Well, here we are. What are we waiting for?
I guess the president, or Secretary Bessent, was giving the president maximum optionality when it comes to when he wanted to pull the trigger. Maybe there were still some things that needed to be discussed between Beijing and Washington. But when I spoke to the Treasury Secretary before he went to those talks, he said it was likely that we're going to have this 90-day truce have an extension, another 90 days. All of this potentially leading up, in my view, reading some of the tea leaves and reports out of Beijing, a meeting between Trump and Xi Jinping. They've invited him to China, but potentially they can also meet on the sidelines of the APEC summit.
A few signs of fear in this market, both in equities and in credit so far. Record highs, tech-driven rally in the equity market, on the S&P, on the NASDAQ. In high-yield credit, tighter spreads throughout the whole of last week. So following the worst jobs print we've seen going back to the pandemic, every single day after that, Monday through Friday, we had tighter credit spreads. No sign of any fear in this market right now, that's for sure. Coming up this hour, Peter Oppenheimer of Goldman Sachs as stocks kick off a key week nearing all-time highs. Henrietta Trays of Vader Partners as investors eye the looming trade deadline with China. Plus, we'll catch up with the former Boston Fed President Eric Rosengren with stagflation concerns continue to rise. We begin this hour with stocks near record highs as markets await more clarification on the trade story. Peter Oppenheimer of Goldman Sachs writing, it's possible that tariffs could hurt equity prices even if the US agrees on deals with key trading partners. Peter joins us now for more. Peter, welcome to the program, sir. Before we talk about the risk, let's talk about the price. The rally we've seen on both sides of the Atlantic on the S&P and the Euro Stoxx 50 of close to something like 9%. Peter, when you break things down, let's just talk about breadth. Compare and contrast the story in the United States to the story you're witnessing in Europe.
Well, very different story. At one level, it looks very similar. As you said, both markets are rising, but they're rising in different ways. The contributions are quite different. In the US, very much driven, again, by the power of the biggest tech stocks, which are really leading the market. As you say, S&P is at an all-time high. The median stock is around 12% below its 52-week high. So very, very concentrated. Whereas in Europe, actually, there's significant breadth. Unusual breadth, actually, in the market, you're seeing much, much less concentration, although, of course, you are seeing and have seen stocks that are disappointing being very heavily punished, and that's happened on both sides of the Atlantic.
So, Peter, let's just pick up on the US tech story and the narrow breadth that I've heard so much about, and I'm sure you have as well, whether it is necessarily unhealthy. If I think about the dominant risks at the moment, they're largely cyclical, they're related to trade, and in many ways, some people might look at the US stock market and say that's a source of stability, not necessarily downside risk. Pete, how would you counter that?
Look, I think it's right that, if we step back and think about economies which are still growing, albeit at a slower pace, certainly in the US, but interest rates coming down, that's broadly a supportive environment for risk assets. And the fact that in the US, the tech-heavy largest companies have been dominating the rally is a function of their very, very powerful continued profit growth. It's not been about speculation. It's really been about very, very strong fundamentals. And there's nothing wrong with that. The only problem, of course, is that as you get an increasingly concentrated market, it becomes harder to diversify risks, at least domestically. And that's one of the reasons why we've been arguing that investors should take a more open mind view of diversification geographically to improve risk-adjusted returns.
Well, Peter, where is the opportunities in Europe? Because I'm looking at the Bank of America Fund Manager survey out of Europe, and they say European investors, 35% expect stronger European growth over the coming 12 months, but it was 44% last month. So isn't that European story actually starting to dwindle a little bit?
Yeah, and we've seen that to some extent in the relative performance, very much the first part of the year. Europe outperforming both in terms of underlying assets, but also on a dollar-adjusted basis as the dollar weakened. And that difference has moderated to some extent. But I think it is right to say that from a very low base, European growth is improving somewhat, and an important driver of that is the expansion of fiscal policy coming from Germany. And we do also have a couple of other themes that are encouraging interest, particularly increased defense spending, which is powering ahead, more infrastructure spending across Europe, and also some of the value areas of the market which are doing really very well, banks being a perfect example. And I would say that is another difference between Europe and the US. The US is still being driven by growth-dominated themes, particularly related to technology, whereas in Europe and some other markets, value is actually outperforming.
The risk of tariffs, though, still exists, and the team at Goldman Sachs had a note out about how the impact has yet to hit. Consumer prices, when it comes to tariffs, that hit is just getting started. What could this mean for Europe and some European corporate names?
Well, I think that it does complicate the picture because we haven't yet seen the full effect of tariffs on either side of the Atlantic, and it is likely to weigh on consumer confidence to some extent and the ability for consumers to continue to drive economic growth. And we're already seeing some evidence of that slowing, particularly in the US, and alongside it, some weakness in the labor market. The offset, I think, is that you will see lower rates, at least in the US. We think for the ECB, they're done for now. They've already cut rates more aggressively. And I think there's less room for that to continue, given that we're going to see some effect of tariffs still yet to come through.
Peter, you mentioned the rally we've seen in US tech, validated by the earnings. The earnings have been really powerful. I believe you said the same thing. For the banks and the run-up we've seen in Europe, this rally of more than 40% for European banks so far year to date, has it been justified also by the earnings you've seen so far and the outlook coming from the C-suite?
Yeah, very much so. And we have to emphasize that this is a huge turnaround from the trend that we saw really for a decade after the financial crisis, where banks came under huge pressure, particularly in Europe. They had to delever, raise capital, cut dividends, and although they were cheap in terms of multiple, they kept on underperforming. But we've seen a dramatic change in circumstances. Now they have strong balance sheets. You mentioned earlier that the credit cycle is benign, and more confidence in the economy means less risk of loan losses and credit losses and provisionings for the banks. And we have steeper yield curves, which are very supportive of their profits. So in Europe, the very powerful returns that we've been seeing in banks is justified by very strong fundamentals, just as the technology companies have been supported by fundamentals in the US.
Can we just touch on the rates backdrop for Europe? For a long, long time, they complained about negative interest rates. We got away from that. Now it feels like rates have started to come back down again, Peter, and maybe they don't stop at 2. Perhaps they don't stop at 1. How important is the rate outlook for the long story on banks?
I think the most critical factor is going to be growth. If we avoid recession, that would be our central view, then the risk of a provisioning cycle that could be damaging for earnings is moderated. Of course, what's been very helpful for the banks, and this has been true in many regions, particularly in Europe, is that yield curves have steepened. We've seen already a lot of progress on short rate cutting by the ECB, but long rates have been edging up, partly driven by growing deficits and spending, particularly in Germany, and that spread has been very helpful for banks. It may moderate a little bit moving forwards, but I think if we continue to get economic growth, the outlook is still reasonably benign for the banking sector in Europe.
Peter Oppenheimer of Goldman Sachs. Peter, appreciate your time. As always, the difference between the US and Europe right now. Anne-Marie keeps going back to this story from Jan Hatzius and Goldman Sachs, the investment bank here stateside, and what's going to happen with tariffs. And ultimately, who's going to pay the costs? Who's going to have to shoulder, carry some of this? This from Goldman. Consumers in the US have absorbed an estimated 22% of tariff costs through June. That share, according to Hatzius and the team, will rise to 67%. American businesses have eaten a lot of this so far, taken around 64% of the hit from tariffs. They believe that share is going to fall to less than 10% in the months to come. So this story's not over. Watch this space.
It's certainly not over, and this is why the Fed is in this conundrum, and this is why individuals are concerned that potentially what you could see is, or as Cameron Dawson talked about it, stagflationary light environment. And this is going to be really challenging for the Fed. They think they have a weakening labor market, but say we get hotter CPI prints, what do you do with that kind of data to make sure that you have your dual mandate basically working against each other?
It might be a story for later on in Q3 going into Q4. Equity futures this morning positive by about 1/10% on the S&P, with an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. We start with our top story. Shares of NVIDIA and AMD are trading lower in the pre-market after the chip makers cut an unprecedented deal to pay 15% of their China AI chip sales to the U.S. government. The agreement will allow them to export licenses to the country and reflects President Trump's effort to engineer a financial payout for America in return for concessions on trade. Meanwhile, the price of lithium is spiking this morning. The surge comes after battery giant Contemporary Amperex Technology halted operations at a major mine in China. That's spurring speculation that Beijing might move to suspend other projects as it tackles overcapacity across its economy. And AMC shares are surging 5.5% in the pre-market after the entertainment company reported second quarter results that beat estimates. Revenue for the quarter came in at 36% higher than the same period last year, showing strong consumer enthusiasm for this year's lineup of movies. Movie theater attendance also rose 26% compared to last year at just under 63 million people. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara later this hour. Up next, quid pro quo in China.
The H20 was the third best chip in the world. The president has decided that the Chinese can buy them, but that's in a balanced way, with the Chinese delivering on the deal that we made with them.
In just a few minutes, we'll get the view from Washington, D.C. We'll catch up with Henrietta Trays of Vader Partners, live from New York City this morning. Good morning.
Headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Stocks are positive, up by 0.1% on the S&P, up by 1/10% on the Nasdaq 100. Under surveillance this morning, quid pro quo in China.
The H20 was the third best chip in the world, and now it's the fourth best. The president has decided that if things are going well with China, that they can buy them. So I think that decision's been made. We are putting on the licensing mechanism, and we are getting that going. But the president has decided that the Chinese can buy them, but that's in a balanced way, with the Chinese delivering on the deal that we made with them, and they're delivering rare earths.
Well, here's the latest this morning. Sources telling us here at Bloomberg that NVIDIA and AMD have agreed to pay the US government 15% of their revenues from AI chip sales in China in order to secure export licenses. Bloomberg's Wendy Benjaminson joined us now for the latest in Washington, D.C. Wendy, welcome back. And just to go back to the top of the story once again, I think we keep exploring the same theme, whether ultimately we've just put a price on national security, or whether for this topic, and this topic specifically, maybe the national security rationale was misleading to begin with.
It's entirely possible. We do know that Trump runs a sort of pay-for-play operation, and as the Commerce Secretary just said in that clip, that the administration has decided that China can buy those chips, but that comes at a 15% cost to NVIDIA and AMD. So it's unprecedented as far as we can tell so far. Transaction. I mean, I certainly don't remember anything like this in many years, and I'm sure you don't either. And it's just part of this. If you are nice to me, I will give you a job in the administration. If you are loyal to me, I will endorse your campaign. If you pay me 15%, you can sell your chips in China. It's all part of, it's all part and parcel of the approach this administration takes.
I'm not seeing the stocks get hit too hard this morning. Wendy, thank you. NVIDIA's down by about 0.6%. AMD a little bit softer. Certainly something we haven't seen before here stateside. Henrietta Tracer, Veda Partners, joins us now for more. Henrietta, can you think of another example of something like this playing out in your lifetime?
Certainly not at BIS. Wendy points it out exactly. There's not another example like this. I think the most interesting way to look at this is to see the president sort of expanding out beyond something that was a very real concern for him on Friday. If you followed his Truth Social post, it was very much about these court cases that are pending around the IEEPA tariffs. So if the president is going to be stripped of his authority to impose tariffs via IEEPA, is he giving himself some sort of additional leverage point with export controls and selling them to effectively the basic way of just getting trade flowing and having some sort of card to play with China? I think that's an interesting angle to think about. I think the IEEPA court case story is the most critical here, and the president obviously was focused on that on Friday, and then this announcement makes sense in that context.
Henrietta, if you're in a C-suite of a massive American company and you see what's playing out right now with NVIDIA and AMD, is this a new risk that you need to contend with, that potentially if you want to export your products to outside the United States, you might have to pay the U.S. government?
I think it completely stands to reason, and every single one of these trade deals has some sort of payment component. And what happens is we get these original announcements and then they get materially walked back. So this one's pretty cut and dry, 15%, in the event that that's where it lands. But think about the Japan deal, for example. The White House said that's $550 billion worth of investment that's going to flow to the United States, and we get 90% of the returns. But the reality is that only $11 billion of that $500 billion that Japan committed to is going to come from the Japan Bank. Everything else is going to come from private sector that you have no control over. So there are these big numbers floated, and then they're almost always revised. Another example, to give you another one, John, would be the gold tariffs that are happening right now. This, sort of rampant confusion before there's an ultimate clarity is really the prevailing theme of this administration.
Okay, but when you're talking about pay components when it comes to other trade negotiators, it's about investing in the United States, because that means money and jobs for Americans coming into the United States. This is purely about just paying some of your profit streams for chips that at one point you're already sending to China to the U.S. government. How is this in line with what the Trump administration and the campaign ran on?
Well, it's definitely not consistent at all. Either there was a national security threat exposed to these chip sales, which is something that we've been dealing with for at least a decade, or you can just pay your way around it and it's no longer a national security threat. They are two mutually exclusive developments. And I think, again, it goes back to the president needing more chips in the China negotiations because, for example, the export of U.S. soy and agriculture goods is down 50% in just the last 6 months, dropped from like $11.5 billion worth of sales to $5.5. The president needs more ammunition. And if he can somehow create a reliance, which is what we've heard from the NVIDIA CEO, on U.S. chip sales, then that gives some additional leverage perhaps down the line. But it is definitely mutually exclusive to the national security argument.
How much leverage do they have right now, Henrietta? I think that's worth exploring. If you look at the Chinese export numbers, they seem to be doing okay. The export numbers are up. The exports are just going to other places. Is this important to them in the same way it was maybe 6 months ago, maybe several years ago, 4 or 5 years ago?
Yeah, absolutely. And this is what you always have heard from China very consistently. The United States is a bully. Come do business with us. We're seeing it operate in Africa right now, and the EU and other nations in the Southeast Asian region. And one of the things to be mindful of as we get into this is that the president has threatened 145% tariffs. 80% would be the rate that goes into effect on August 12th if they don't reach a détente. But China plainly has the president in a corner around magnets and rare earths that debilitate the automobile and defense sectors in one fell swoop. So the reason that the 90-day pause is the base case on the street is because the president threatened too much, and he's not going to get it. We don't have the capacity for that. Goldman's coming out with 67% inflation hike to the U.S. consumer and prices being passed on. We do not have that ability right now. It's the same reason, not to go to too many places, but it's the same reason you're not seeing the Russia sanctions go into effect. You cannot mess with oil and gas prices when we have this risk of inflation coming.
What would be helpful is if the Europeans and other trade partners got on side with the United States to put the pressure on China, to put the pressure on other trade partners. Henrietta, do you see those pieces coming together anytime soon?
I don't. And think about what we have pending. You've got Section 232 pharmaceutical tariffs, automobiles, automobile parts, semiconductor chips, all those outstanding components. And the EU is not at all thrilled with the deal that was reached a couple weeks back with the United States. So that block is fractured to the point where we don't even have legally binding text, and we might not for months now. So I don't see that coming around. We don't have Canada even, so I think we're quite a ways away.
What kind of weight does the U.S. have when it goes to Brussels and say, really put the screws to China, given the fact that now the United States is saying, well, actually, we'll send some chips that we thought were national security concern, but you just have to give us some of the profit?
This is really the underlining issue that all of our trading partners has had. Who is the ultimate decider? Where is the line in the sand? What are we even negotiating? And that's been a consistent theme that we've seen from Japan and Korea and the EU is what is it that we can offer? What can we commit to and write into legally binding text on our end that we can then go and operate with around the world? And that's not something that they have any ability to even get in the room in a timely manner to have that conversation. And there are so many outstanding issues. And I would just say one more time here, the market is not the inflation is not a one and done situation. We're still going to get lumber tariffs on Canada on top of the ones that the president put into effect on Friday. We still have outstanding sectoral tariff risks with all of these major trading partners from Switzerland to Ireland. There's no certainty here, and I don't have any reason to think that would end in the next 3 years.
Just briefly, how much money is coming in the meantime, Henrietta? Just how much are we taking in month on month at the moment?
I think last I saw was $27 billion a month. So ultimately, this is a $2.7 trillion revenue raiser that the United States consumer pays for. And the inflation numbers are going to get compounded because, again, this is not a one and done event. Tariffs have increased at least a dozen times just in the last 6 months. And there are 9 on the horizon just in the sectoral tariffs, without even getting into 301s on Brazil or the IEEPA tariffs and whether or not those can be maintained. And then we're going to throw export control restrictions on top. There's a long way to go.
Henrietta Trace, Aveda Partners. Henrietta, thank you. Thank you very much. A lot of money coming in. Some debate about what to do with it.
Well, yeah, and I think when you look at what this administration is trying to do is they want this External Revenue Service, basically bureau, to try to bring down the deficit. Big question about money coming in potentially from these chips. What are they going to use it for?
Up next on the program, we'll catch up with the former Boston Fed President Eric Rosengren on the risk of stagflation, plus Yahara Anand with your morning movers. AMC trading higher in the pre-market as consumers head back to the movie theaters.
ready.
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Remember that jobs report? A lifetime ago. Since then, the best week since June in the equity market, all-time highs. And in high yield, credit spreads tighter for 5 consecutive days, every single trading day through last week. This morning, equity futures positive by 0.1%, adding some weight to the rally on the Nasdaq 100, just about positive also. 2 hours away from the opening bell with your morning movers. Here's Yahira. Hey, Yahira.
Hi, John. We start with Intel getting a bid here, up 1.7% as the Wall Street Journal reports that Intel CEO Lip Bhutan will meet with President Trump at the White House today, with Tan in a delicate position as President Trump calls for him to resign over his ties to China. So not only is this company in a tough position as it's missed out on the AI chip boom, now it's caught in the crosshairs of this Trump administration. And the natural question now is whether Intel will commit more money to its U.S. investments. And get out your popcorn because AMC results are out and they were strong. So you are seeing the stock pop nearly 10% here. Results showed a 35% jump year over year in admissions revenue as audiences keep returning to theaters despite all those media companies spending so big on their streaming. People still want to go to the theater, and while they're there, they are spending with food and drinks with that category up 36% year over year. So consumers still willing to spend $10 on a bag of popcorn. And we're sticking on this theme. We're seeing Warner Brothers Discovery up 1.5% after their horror film Weapons topped the domestic box office this weekend. And this marks Warner Brothers' 7th #1 debut this year. And according to ComScore, overall U.S. box office revenue hit more than $130 million for the weekend. That pushes the yearly total up 7.5% from last year, echoing the strength we heard from AMC. John?
It's good to see. Yahira, thank you. Thank you very much. Very good to see. I think we even got Anne-Marie into a movie theatre, didn't we?
Yeah, I did.
In the past few months. Nice.
I went to go see Mission Impossible.
First time in 5 years?
About, yeah.
How'd you bet?
But I didn't really enjoy the movie. But now it's nice to get out.
It's good to see you encouraged. Get out there. Spend some money. Support the U.S. economy. On our radar this morning, the government striking a deal with chip makers. Sources telling us here at Bloomberg, NVIDIA and AMD agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. in order to secure export licenses. Those two names trading slightly lower so far this morning.
So this one was a real surprise. I mean, how many times can we say this is unprecedented? This is highly unusual. You put it best. Paying to play. And this whole saga is interesting to me because these chips that they're now going to be making money off of, the U.S. government first deemed were unwilling, should not be sent to China because of national security concerns. They said this was helping the Chinese military. Then they used them as a chip, a negotiating tool to get those rare earth magnets from China. And now they're saying to the companies, well, we're going to give you back the licenses, which we know you can make billions of dollars off of China, but we need to get profit from this. I think what's interesting about this story is what happens next. Who next could potentially be one of those companies that the U.S. government is going to call and say, you need our help with something? Well, you're going to have to give us some of the revenue.
Still waiting for chip tariffs, aren't we?
Yes,
Sectoral
semiconductor
tariffs.
tariffs.
Yeah, what's happening with that?
Well, what's interesting about the sectoral tariffs when it comes to semiconductors is President Trump came out last week and said it's going to be 100%. Shock and awe moment. Tim Cook standing next to him. 100% fine print, you know, that little asterisk, unless you invest in the United States. Now, all these semiconductor companies have some money investment in the United States, so guess what? They're not going to have a semiconductor tariff.
We'll get to Tim Cook and Apple a little bit later in the program. 8:15. We'll catch up with Dan Ives of Wedbush. Look out for that conversation. Wanted to turn to this story. Lithium prices and stocks spiking after CATL halted operations at a major mine in China. This coming after weeks of speculation that authorities wouldn't extend the mine's license. The move sparking concerns that Beijing might suspend other projects as well.
So this comes that we have this supply glut, and it has been exacerbated by demand headwinds for EVs, especially given even the Trump administration rolling back some of those incentives to want to go buy an EV. I also view this potentially as another moment of a tea leaf when it comes to Beijing and Washington. What has been consistent from Treasury Secretary Scott Bessent is what China's been doing in terms of overcapacity and basically just flooding the market, the U.S. market, the European market, et cetera, with cheap goods. Maybe this is part of that agreement and the talks that are happening behind the scenes when it comes to these two economies.
Possibly, but I think they'd prefer they went to things like steel, things like autos. There's a long, long list of things where this administration and others, because they agree with them, would like to see things happen on Chinese overcapacity and overproduction.
Absolutely. But potentially, maybe, this is an olive branch and a first step when it comes to China. But again, this is also just the fact that the demand just isn't there at this moment because of the headwinds facing that EV market.
That's the latest between the US and China. I wanted to turn to the latest between the US and Russia. President Trump planning to meet with Russian President Vladimir Putin in Alaska on Friday. Sources telling us here at Bloomberg that European leaders are hoping to talk to the president before the meeting takes place.
Because the European leaders want to make sure that they are saying to the U.S. president their concerns about what potentially could be agreed upon. And there's been a number of discussions, even with J.D. Vance, the vice president, sitting down with European counterparts. What comes of this, we do not know. We do know that Trump, though, has gotten very impatient with Vladimir Putin. And to that respect, maybe this is why the Russians are willing to sit down. I think for Putin, and based off some conversations I had with individuals who watch Russia closely, this is a win-win. If you can get Zelensky to agree on the territorial mapping that we have right now, which is basically give up the entire Donbass, and Ukrainians need to get out of Luhansk and Donetsk, then that's a win for Putin. If they don't, then Putin just continues fighting. But he could say, I gave it a try.
So one to watch later this week. That story will kick off on Friday. Let's turn back to the economy and the Federal Reserve. Governor Mickey Bowman favouring 3 interest rate cuts this year in a speech produced over the weekend, promising to prioritise the Labour side of the dual mandate. Bloomberg's Mike McKee joins us now for more. Mike, good morning, sir.
Good morning, John. Well, Anne-Marie was saying a minute ago about talking about all the unprecedented stuff that's happened lately. This is precedented because Mickey Bowman was one of the two who dissented at the last meeting, and she's making the same argument that she made before and the same argument that Chris Waller is making. If you wait too long to cut rates, the labor market's going to collapse on you. She's ready to cut rates 3 times before the end of the year, saying a proactive approach would help avoid a further necessary erosion in labor market conditions and reduce the chance the committee will need to implement a larger policy correction should the labor market deteriorate further. That's the same argument, as I said, that Chris Waller has made. Mary Daly making a similar argument last week as well. So we're starting to get some people turning in the direction of the dissenters. We're looking at on board to cut those 3, not yet. Bostic, Hammack, and Musalem. Musalem saying he's still worried about prices a little bit more than he is about the labor market. And Cook and Collins last week saying they're in the maybe camp now. Of course, we've got Stephen Myron coming on board, but I'm guessing he's not going to be there for the September 17th meeting, not confirmed yet. But if he was, that would be 4 people. The only trouble is we may not have any dissents in September, because if tomorrow's CPI comes in relatively restrained and we continue to get some bad news on the labor front, then the rest of the Fed is probably going to be on board with at least a cut in September. So a lot of ground to cover between now and then.
Mike McKee, thank you, sir. Let's build on that. Joining us now, the former Boston Fed President, Eric Rosengren. Eric, welcome back to the program, sir. Some healthy debate at the Federal Reserve. Let's call it what it is. It is healthy. Do you think September is too early to settle the debate?
I think it depends on how the data comes in. We have 2 CPI reports, 1 PCE report, and 1 employment report. The data can be pretty noisy, so I think we need to see what things look like as we get into September. But I agree that if the CPI and PCE are reasonably well restrained and the labor market looks weak, then it would be appropriate to ease rates. However, it's also quite possible that we'll see a slowly increasing inflation rate. I'm expecting the CPI will probably be, the core CPI will be above 3% when it comes out tomorrow. And if we start seeing numbers that look higher than the market's expecting, sentiment can change pretty quickly. So I think it's a little too soon to call September. I think the Fed was acting appropriately when it wanted to wait and see, because right now, while the payroll employment was weak, the unemployment rate was 4.2%. And the labor market has had a labor supply shock, so you probably want to focus a little bit more on the unemployment rate than the payroll employment numbers.
Eric, as you look at the dual mandate at the moment, and this really speaks to the divide of the Federal Reserve, there are some individuals who want to focus on the employment side of the mandate, others who still want to focus on the price stability side of the mandate. Can you share with us your experience? Did you prioritize one side over the other? Are they created equally?
So everybody can vote and weigh. I mean, you're not given the weighting function. So each person can kind of choose for themselves what they think is most important at the time. But the framework document actually talks about what you should do when both elements of the mandate are not where you want it. And in that document, it argues that you should look at how far away you are from where you want to be and how long it'll take to get there. So on inflation, if you look at the core PCE, we're at 2.8%, and most people think it's going to take quite some time for us to get back to 2%. If you look at the unemployment rate, we're right at 4.2%. So despite the weak labor supply that's been happening, the labor market doesn't look to be in that much trouble. You don't see initial claims rising rapidly. So while I know a number of participants at the FOMC are talking about concern about the employment mandate, it actually is exactly where they forecast they want it to be, which is at full employment.
Basically, what you outlined there says that the Fed shouldn't be cutting just yet. So is there a bias to a weakening labor market?
So it depends on a forecast. And I would say private sector economists do not see a rapidly rising unemployment rate and do not see an elevated risk of seeing a recession. So I would think the rhetoric around the labor market would be more consistent if the private sector was seeing more evidence in the data that the unemployment rate looked like it was going to rise, that initial claims was going to rise. So I think at this case, at this time, it's a little bit odd to overweight the employment part of the dual mandate.
Eric, can we just sit on the data? And I want to avoid the politics. Don't worry about that. Not going to include you in any of that whatsoever. We're always dependent on the data, and there's been a question for a long, long time about how dependable the data actually is, particularly the labour market data prone to very large revisions. We saw that last year. We've seen it many times in the past as well. Eric, how did you manage that situation? Were you less sensitive to incoming monthly reads, knowing that at some point in the future they would be revised? How did you approach it?
So if you focus on a forecast, month to month doesn't matter nearly as much as where you expect things to go over time. And as you point out, the labor market data, particularly the payroll numbers, can be pretty jumpy. And the reason for that is not because anybody's manipulating it. It's because they do a survey, and if people don't fill out their survey forms on time, then in the revision, they pick up the additional surveys. And so depending on what the response rate is, and the response rate has been going down on many U.S. government surveys, it becomes less accurate, and the revisions can be larger as they get additional data. So you never should put too much weight on any one data point. You're really looking for a trend. You're not actually looking for, while Wall Street focuses on beating expectations and having a number, comparing the current number to what they expected, the central bankers should really be worried more about long-term trends. So long-term trends don't get affected as much by a single data point. So you should smooth through most of that data, and that's what most forecasts end up doing.
Eric, do you think there's concern, though, that now the U.S. data is no longer considered the gold standard, given the fact that the president ousted the commissioner of the BLS?
Well, it depends on who replaces at the BLS, but it would be very disturbing if you didn't have reliance on the data. And the U.S., not just the BLS data, but the GDP data, the inflation data, all that data is critical to making good policy choices. And if that data is manipulated in some way so that you can't rely on it, it becomes very problematic for policy. And while the initial changes are probably not going to be that noticeable, over time it can create havoc. And I think you see examples of that. The Wall Street Journal did an article on what happened in Argentina when they started manipulating the data. China has been famous for dropping series that didn't work in the way they were hoping. So, for example, youth unemployment is not reported anymore on a consistent basis. But you see young people coming to the United States because they can't get jobs in China. So you can conceal to some extent data, and for month to month you can get slightly better numbers. But over time, if you're manipulating the data, it becomes obvious to the public.
Eric, the president's nomination to fill Governor Kugler's seat, Stephen Myron, is an individual that is already working with him as one of his economists, the head of the CEA. Less than a year ago, Myron was against cuts at the Fed. Does he look purely political now, potentially, to his new colleagues at the FOMC?
I think there is a consistency problem. He has traditionally been somebody very concerned about the inflation part of the mandate. And so his newfound interest in the labor market and the need to lower interest rates looks somewhat out of character from what he was concerned about over time. He's written about being concerned that there's too much politics at the Fed. He obviously has been a strong proponent of this administration's policies and seems to be a proponent of lowering interest rates, which has been advocated by the administration. So if what you're looking for is an independent Fed, he probably is not the perfect choice to ratify an independent Fed.
Eric, appreciate your opinion. Thank you, sir. The former Boston Fed president there, Eric Rosengren. Stephen Myron, of course, will have plenty of opportunities to explain his views in due course. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. The U.S. expects to largely complete negotiations with countries that have yet to secure a trade deal by the end of October. That's according to Nikkei Asia, citing an interview with Treasury Secretary Scott Bessent. They said Bessent reaffirmed the importance of the Fed's independence, but said the next central bank head should be very attuned to forward thinking. Meanwhile, Palantir is now the most expensive stock in the S&P 500 as it trades at 245 times forward earnings. The stock has soared about 2,500% since 2021 and closed at a fresh all-time high on Friday. Palantir has been boosted by growing AI use, its business ties to the U.S. government, and stellar earnings. And President Trump continuing his attacks on Fed Chair Jay Powell while announcing he would hold a press conference today on making Washington, D.C., quote, safer and more beautiful. He also vowed to stop people from spending billions to fix up a building when there are other problems to solve. Of course, referring to the renovation of the Federal Reserve Building. That's your Bloomberg Brief. John?
Thank you. Thank you very much. More from Yahara in the next hour. Up next, upside, inflation risk.
There are still risks to inflation. We are going to see more inflation in terms of core goods, but we're seeing disinflation on the services side that is offsetting some of the inflationary forces on the goods side.
In just a moment, we'll catch up with David Rogel of BlackRock, live from New York. You're watching Bloomberg TV.
I think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to 0. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, upside inflation risks.
There are still risks to inflation. We are going to see more inflation in terms of core goods, but I think the reason that the market has been able to digest it and the Fed is going to be able to look through it is because we're seeing disinflation on the services side that is offsetting some of the inflationary forces on the goods side.
So here's the latest this morning. Investors are waiting inflation data this week, CPI and PPI on deck. David Rogel of BlackRock writing, we still think services inflation is an ongoing improving path. Tariffs are likely a one-time price boost. David joins us now for more. David, good morning.
Good morning. How are you?
Will the FOMC agree with you in mid-September?
I'm not sure. I think, but I do think the case for maintenance cuts has improved in the last couple of months. For the last 5 months, we've seen inflation around 2%. I think what you're seeing is that you're going to see in the next few months goods price inflation move up a little bit off of low levels. The last month on July data, we saw the goods price data move up to around a 7% annual rate, but we saw services inflation offset that. I think on the next few months, you might see some of those services prices stay a little stickier than they have been. You're likely to see some more tariff impact, although we're not sure exactly how much. But I think overall, my view is that tariffs are more of a consumption tax. They're really more of a supply side shock. The fear, I think, with the Fed is that tariff inflation alters inflation expectations. You've seen some of the inflation expectations move higher. But I think at the end of the day, we're talking about a consumption tax. Unclear how much of that is absorbed by price, margin, and exporter, but I think the large majority of it will be absorbed through higher prices.
Let's push these views through the bond market, and what we saw last year take place was pretty clear. Fed drops rates 100 basis points, long end rejects it, and yields rise 100 basis points on 10s. Are we set to see a repeat of that in the months to come into year end?
Well, it feels eerily similar to last year, honestly. Even the July data, with the Fed waiting in July, getting a rise in the unemployment rate last year, then to this year we saw the revisions. It feels eerily similar. I think what you're seeing is in the front end, we have a fair amount priced into the market, particularly around Fed transition. We're now pricing policy rates at the end of next year around 3%. And when I talk to people about where they think neutral rate is, that's somewhere in between, the kind of the 2.5 view and the 3.5 view around neutral policy rates. And so I think there's a fair amount in the price. We're still focused on that 2 to 5 year part of the curve relative to the long end because we still think there's going to be more term premium. The supply-demand imbalance in fixed income is not as favorable as it used to be. And so we're still sticking to that part of the curve. Relatively fully priced at the lower end of the range, but I think you still see bonds relatively well supported overall.
The Fed has obviously bruised what happened with COVID and inflation and the whole transitory debacle. What makes this time different?
I think the difference, it's really interesting. It's very possible that tariffs are more of a transitory price impact, whereas before, I think with COVID-era inflation, what we saw was this helicopter money stimulus. It was demand-driven. It was also driven by the mix shift. We had this rapid mix shift from services to goods, and global supply chains weren't ready for that. This is very much like a tax, and consumers probably reorienting their spending. Interestingly, in the CPI data, you've seen discretionary spending, I think, pull back a bit this year. We've seen very weak travel demand, weaker travel prices. That's part of what's been bringing down services inflation alongside somewhat stickier goods price inflation. So I think the shock that we're going to see here, we're still not sure of the magnitude, is much more similar to a supply side or a consumption tax effect than it would be a demand-driven inflation surge.
Right, but for corporate America, if they have to potentially cut costs because consumers are unwilling to pay higher prices, is that going to potentially mean layoffs?
It's really hard to say so far. I mean, so far, earnings have been okay, and the economy's been pretty resilient. The labor market has slowed. It depends on how much can be pushed through in price. I mean, some sectors have more pricing power than others. I think what we're seeing in the auto sector is that pricing power is more limited. But our view is still that the majority will be passed through to higher prices.
No sign of markets carrying at the moment. Equities at all-time highs. Some people might say that's just equities, that's just tech. High-yield credit spreads, though, keep getting tighter. What do you and the team see in high-yield credit?
Well, we remain pretty constructive on the economy overall, notwithstanding some of these forces that are slowing things down, like immigration slowing, uncertainty on tariffs, tariffs as a consumption tax. We see a lot of positive offsets with regards to deregulation, business-friendly policies, healthy corporate balance sheet, healthy consumer balance sheet. We're on this big CapEx boom related to AI and infrastructure spend. So I think there are a lot of positives. We still like high yield. I think corporate credit spreads in aggregate, risk premiums relative to treasuries, extremely tight historically, lower decile, but then the all-in yield is probably above where median levels are over time. So I think investors are very focused on the all-in yield. We've been focused on moving, we're overweight high yield in our portfolios.
Yeah.
We've been focused on moving that regionally outside the U.S. into Asia and parts of EM where we're seeing much more credit selection opportunity. We see credit dispersions pretty low in the U.S., and so we see more security selection opportunities. It's part of a broader theme in our portfolios, which is to really try to tap a broader set of opportunities in this environment.
David, appreciate your time. It's good to see you, sir. Thanks for dropping by. David Rogel there of BlackRock.
A cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
AI is definitely in the center of it. And we're looking for how do we spend time and which industries do you invest in? Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Our near-term outlook on equities isn't great.
Some of those valuations seem much more ephemeral and .com-like.
Overall market's really not that expensive. Once you take out the Mag 7.
A key word for investors now and always is diversification.
It's really about long-term investing.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, the third hour of Bloomberg Surveillance starts right now, live from New York City this morning. Good morning to you all. Equity futures on the S&P 500, pretty stable at the moment, positive by 0.2%, coming into another trading week at all-time highs on the Nasdaq 100, up by 0.1%. Your week ahead includes an inflation print coming tomorrow morning at 8:30 Eastern Time, retail sales on Friday, sandwiched in between this deadline for a truce between the US and China, widely expected to get a 90-day extension for all of that. But once again, the focus on that relationship and the chip makers and their ability to access that market.
Absolutely. This comes when it comes to export licenses and these export controls we saw from the administration in April. There was a U-turn on them when it comes to the H20 and NVIDIA and an AMD's MI308 chip. And now what we are hearing is that the administration is going to start the export licenses once again, but to get those licenses, you need to give the U.S. government 15% of the revenue you're getting from selling those chips into China. This is unprecedented. This almost has a feel of central planning in a capitalist society, which has the business community, I think, a little bit concerned. And on the other hand, you have China hawks in Washington, D.C., incredibly concerned. Not because of the 15%. They were concerned when you started using these high-tech chips at the negotiating table with Beijing.
Who else should be uncomfortable beyond AMD? Beyond NVIDIA, how many other companies are facing the same situation through the rest of this year?
Well, this is the big question. If the Trump administration is successful in getting AMD and NVIDIA to give them 15% of their profit for allowing them to sell into the Chinese market, then who's to say that there's not going to be other companies that are, what you said, Jonathan, all morning, and exactly correct, paying to play?
A lot of friction being introduced into the global economy. Equity still doing okay, close to all-time highs. A week of gains, the biggest week of gains since June just last week, following that ugly payrolls report. A distant memory. Coming up this hour, David Leibovitz of JP Morgan Asset Management with stocks near record highs. Dan Ives of Wedbush as the White House takes a cut of chip sales in China. And Stephanie Roth of Wolfe Research looking ahead to the latest read on inflation. We begin this hour with Stock Steady as traders await a key week of data. David Leibovitz of JP Morgan writing the following: we continue to expect a slowdown of growth in the back half of 2025, and that is beginning to materialize in the economic data. However, this is an economy that is slowing and not stalling. David joins us now for more. David, good morning.
Good morning. How are you?
Does that mean we can look through it all?
So I think the big question here from my vantage point is, one, when you think about the jobs report that we got for the month of July, it was actually a reflection of some of the other data that we had begun to see come through. If you think about the past couple of months of personal income, personal spending, retail sales, all looking a little bit soft, but hey, the jobs numbers were okay until they weren't. I would point out, though, that the jobs numbers weren't terrible. We still added, 86,000 private sector jobs in the month of July. The revisions caught people's attention, but the one silver lining to that report is the fact that hours worked increased and wage growth remains right near 4%. And so what we're seeing in this economy is not a whole lot of hiring, not a whole lot of firing, but we can treat it as a going concern because individuals and consumers are getting that cash flow, which they will turn around and spend. And so we are looking for growth to soften a bit here, but not necessarily shoot off the edge of a cliff.
How relevant is that data for where the equity market trades?
So I think this is one of these environments where the stock market is not the economy. That's what's really come through to me. You think about the second quarter earnings season, more than 80% of companies beating estimates, year-over-year growth, quarter-over-quarter growth, both positive. You look at the economy, we had no growth in the first quarter. We had 3% growth in the second quarter. We're kind of just humming along at trend. And so against this backdrop where the labor market is kind of in this equilibrium and the economy is moving back towards its long-term trend pace of growth, you're seeing this profit story, which is still very robust. Companies are making money despite an economy that somewhat is uninspiring.
And they're making money despite higher tariffs.
Exactly.
What's going to happen when the higher rates actually start to bleed into this market?
So I think it's a timing issue more than anything else. And the problem with people in my line of work, right, is we like to shock the model. We assume that it's all going to show up at the same point in time. This is going to be much more gradual than I think people anticipated. And furthermore, as we've seen, there's room for things to move around even once they've allegedly been set in stone. And so what I think you're going to see here from a growth perspective is an economy that kind of bumps along into the end of the year and then reaccelerates in the beginning of 26 as we get the sugar rush from the fiscal stimulus. You're going to have inflation that is just kind of sticky, but you're not necessarily going to see a big pop. And what our work has shown over time is that it's really the inflation surprise rather than the level of inflation itself, which can be problematic for both stocks and bonds. And so I think equities are just focusing on the profit story, and I do think that there's some durability here.
Do you think they're ignoring maybe some of the signs we were seeing, like that ISM services report?
The survey data has been mixed in terms of its track record since COVID in terms of tracking the actual data. I think what you're seeing, and if you read through some of the commentary that came through in the ISM services report, you had concern about tariffs, but you also had concern about labor. And so I think that could well be the bigger issue as we move into 2026. We've seen this massive reduction in immigration and labor supply. What does that mean for wages, and what does that mean for inflation? Because that's what's going to make the Fed uncomfortable if they see wage growth reaccelerate.
If you're watching this right now, you've heard people get crazy about tariffs, about the data, about the Federal Reserve, and then they watch Microsoft come out and put up massive numbers. And they keep asking a question I've already asked, which is, does any of this matter? Should we care about it when it comes down to a handful of names of the S&P 500, which make up a big weighting and keep delivering?
So I think that there are a couple of dynamics to keep in mind. One is where we were back in April, right? So all of this feels much more comfortable than what we were dealing with around Liberation Day. Two, at that point in time, there was no information. And what you're hearing from companies today is, hey, there are going to be tariffs and we have a plan for dealing with those tariffs. And then you get the big tech names in the S&P 500 that have a plan for dealing with the tariffs. They're growing their profits. They have a tremendous amount of cash on their balance sheet. It's tough to get too negative about those types of businesses in this environment. And so from a portfolio perspective within the U.S., we've really been leaning in more to things like tech and communication services, trying to use a bit more of a scalpel as opposed to a sawzall when allocating to the U.S. equity market.
Clearly, we've got concentration risk in the United States, but I'd be asking a question repeatedly whether that is downside risk or a source of stability for a lot of investors at the moment.
I think more than anything, it's a source of stability. These are not your father's tech stocks. This is a very different environment than where we were in the late 1990s. There are profits behind these businesses, and they clearly want to play ball. I think, what we saw last week in terms of, various tech CEOs kind of coming to the White House and being alongside the president, they recognize that the path forward for their company is going to be dependent on navigating an uncertain political environment. But, the administration views uncertainty and volatility as an arrow in their quiver. It's a tool that they use. And so I think from a business perspective, what you're seeing CEOs say is, okay, this is the world that I'm going to be operating in. How do I most effectively operate in that world?
What are the companies you want to avoid? What kind of companies, which sectors?
So I think where you're going to see things get hit the hardest are really obviously in the goods space, but more specifically in areas like consumer staples. If you look at where consumer staples margins are relative to their long-term history, they're at the lower end of the range. That means that any increase in input costs stemming from tariffs is going to get passed directly through, and we've seen the consumer become more sensitive to the prices they're paying, right? In some of the earnings reports, companies talking about trading down, focusing more on private label, pricing power, right? I think the prior guest said it. It's those industries with pricing power where you want to lean in. It's those industries where maybe I buy, these paper towels instead of these paper towels that you may want to steer a bit clear.
Besides the 7 versus the 493, what else do you like?
We like financials. We think financials here are particularly interesting, one from a deregulation story, but also just from an economic growth story. And with consumers getting effectively a raise next year, given what's been passed in the big, beautiful bill, we think that that could stoke demand for credit and help traditional banking, who are obviously trying to take share back from things like private credit and very keen to get money in motion.
The deregulation story is a little bit harder to track.
Yes.
How far along are we?
So I think it's one of those issues where it's being worked on in the background, and it comes out in conversation when markets start to get a little bit rocky. So we're still going to be dealing with the carrot and the stick, and I think that that's just the environment that we're going to be in going forward. But I do think that you'll see deregulation begin to gain pace, particularly as we get more clarity around what's going to happen at the Federal Reserve. And obviously there are some questions there right now, and I think we need to be sensitive to the fact that I think it was being said earlier, central bankers focus on the trend, right? Central bankers don't focus on what the monthly data print is going to be. And if you look at some of the trends in inflation, yes, they look okay, but I'm not really sure that inflation is where the Fed wants it to be, and the labor market still looks okay. And so these calls for 2, 3, 4 rate cuts, they need to get going, they're already too late. I think that those are a little bit displaced, and I do think that while the door to 2 cuts is more open than it was a couple of weeks ago, I think that it would be inappropriate to get too excited about a massive Fed easing.
Stuart Kaiser of Citi saying the best case might be the base case. And the base case at the moment is 2 cuts this year.
Exactly.
And if you end up with more, it's not for good reasons. And if you end up with less, it's not for good reasons.
Exactly.
Is the base case the best case?
I think that the base case is the best case. I think markets would be... It's a question of surprising investors, right? And the Fed at the beginning of the year said, we think we're going to cut twice. If the Fed ends up cutting twice, there are no surprises there. The Fed cut once, I think that the market can digest that. But I think the bigger risk is that we get more of these cuts coming through, because the only reason that you're going to have a Fed cutting more aggressively is because they see some problem in the labor market, and that's going to be a problem for the economy, despite the stimulus that's coming through in 2026.
David, it's good to see you.
Thanks for having me.
Thanks for dropping by. Thank you. David Lovitz there of JP Morgan Asset Management. Equities positive by 0.2% on the S&P, with an update on stories elsewhere with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. NVIDIA and Advanced Micro Devices, known as AMD, have agreed to pay 15% of their revenues from AI chip sales in China to the U.S. government in a deal to secure export licenses to the country. The arrangement reflects President Trump's effort to engineer a financial payout for America in return for trade concessions. Meanwhile, President Trump is preparing to meet with Russian President Vladimir Putin in Alaska on Friday to discuss ending the war in Ukraine. Meanwhile, President Volodymyr Zelensky said Kyiv won't cede territory to end the war with Russia. European leaders pledged their continued support for Ukraine's sovereignty, saying international borders must not be changed by force. And Justin Rose won the FedEx St. Jude Championship in Memphis yesterday with a sensational performance on the back 9. Rose made up a 3-shot deficit over the last 5 holes against Tommy Fleetwood, including 4 straight birdies. He then made 2 birdies in a playoff against U.S. Open winner J.J. Spahn to take home the trophy. That's your Bloomberg brief. John?
Yahara, thank you. Thrilled for Justin Rose. Shout out Tommy Fleetwood. Never won on the PGA Tour. Keeps coming so close. Keeps missing out. Still speaks to the press afterwards. That guy, I just have so much respect for, week in, week out, for showing up, delivering at some ridiculously high levels. Just that close at the moment, that close, and can't get over the line.
That's sad, isn't it? Go so close, but yet so far.
Thanks,
I
Amber.
don't really know what you're talking about, because
Okay.
I did not watch this.
Up next, the morning calls. I talk to myself in future with regards to golf. You know what I mean. Up next, we're getting the morning calls. Plus, Dan Ives of Wedbush as NVIDIA and AMD agree to give up a cut of sales to China. That conversation just around the corner.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
This new element of this 15% of the profits, it's really highlighting how transactional the administration is. And this is a president who's willing to take different approaches to all sorts of problems like trade negotiations. Here he's saying, okay, I'll let you sell your technology to China, but I'm going to take a chunk of your profits for doing so. This is something we've never seen before.
That was the former senior White House trade advisor, Kellyanne Shaw, weighing in on what we've seen with AMD and NVIDIA over the weekend. This morning, good morning, equities doing okay. Equity futures positive by 0.2% on the S&P, positive also on the NASDAQ 100. That's the price action. Here's some morning calls. First up, Melius downgrading Adobe to sell, calling AI a growing competitive risk. Your second call from Wells Fargo, raising its price target on NVIDIA to 220, citing upside from new China export license agreements. And finally, Bernstein reiterating its market perform on AMD, noting renewed licenses in China offer upside potential. Sticking with both NVIDIA and AMD, sources telling us here at Bloomberg the chip makers have agreed to pay 15% of revenue from sales in China to the US government. Joining us now is Bloomberg's Ed Ludlow. Ed, welcome to the program, sir. What's the reaction been from both NVIDIA and AMD?
It's not hugely surprising, right? That's what you hear in the semiconductor industry, because front and center of the president's effort to use the tariff tool as a levy, right, as sort of piece of fiscal policy, the emphasis on the AI industry has been to go after those corners of activity that are capital intensive, where there's committed investment. As you rightly point out, and our sourcing suggests, this is a quid pro quo. It's transactional, where the 15% revenue share is in order that AMD and NVIDIA get hold of export licenses for the specific AI chips that are designed for that market. That's the price of access. But I was on MODL, and I, reading the notes, the most bullish side of the street sees them returning to growth in that market quickly if they can shift the gear. So in NVIDIA's case, if they have a fiscal quarter where they're doing $7 billion of China AI accelerator sales, the United States will book $1 billion out of that transaction. It's unprecedented in the modern era. And the final bit that people talk about is, is it a good thing for NVIDIA and AMD? Well, you should note that in the rest of the technology sector, you have US officials flying around the world dissuading companies from doing business with China. But China's a critical market for data center, and it's the price of access.
Ed, appreciate the update and looking forward to the coverage later on this morning. Ed Ludlow, Caroline Hyde at about 11 a.m. Eastern Time. With us around the table, Dan Ives of Wedbush. Dan, good morning.
Great to be here.
Did the price of an H20 chip in China just go up overnight?
By 15%. I mean, look, the reality, it's the cost of doing business, right? And I think when you look at Jensen, you look at anyone in the semi world, you need access to China. And it comes down to this is ultimately the path that they're going to have to go through. And look, in investors, it's a headline, sort of risk or shocker. But the reality is that you need to get into China. It's what you got to do.
Given where we were a few months ago, is this an improvement?
Oh, it's a massive improvement. I mean, if you go back to some of those dark days, where we were in April, some of those Armageddon days, it's showing at least now there is negotiations, right? And in that, it's essentially a game of high-stakes poker. So when you look at what's happening in tech, just like we saw with Cook at the White House and everything else, it's like, okay, if you play nice in the sandbox, that's going to be how this is going to work, at least for the next 3.5 years. And I think for big tech, you don't want to be on the outside looking in. And it's essentially the deal you can't refuse, right? I mean, to quote Godfather, it's like this is one where tech companies need to go down this route to get access to China. And I think on the other side, Trump administration recognizes, hey, if we don't give them access, it's going to make China that much stronger, Huawei, everyone else.
Is this the new rules of the road, though? You have to basically pay off the U.S. government?
Look, I mean, it definitely, we're in unprecedented territory, and I do think you're starting to see big tech CEOs better understand the rules. And I think that's why if you're on the outside, it's not a good spot to be. Now, from an investor perspective, you'll pay the 15% tax to get access to China.
And that's worth it.
It's worth it because relative to the market, relative to the opportunity. And even though it will obviously there'll be a lot of questions in terms of what this means, I think overall, relative to the last few months, it's much more bullish for U.S. tech and semis and NVIDIA and the godfather of AI, Jensen, and everyone else to have access to the China market.
NVIDIA's got a strategy, and investors like it. Apple's questionable. You've come out and said this is the BlackBerry moment for Apple. Why?
The reason it's a BlackBerry moment is that when it comes to AI, it's invisible, the strategy that Cook and Cupertino have. And right now, this is essentially, in big tech, it's an F1 race in Monza. And Cook is on a park bench drinking lemonade, watching it go by. Internally, it's not going to happen. Like, there's no development that's going to happen internally to get Apple into the game when it comes to AI. And we've talked about it, whether it's Perplexity, whether it's despite regulatory doubling down on Google in terms of a Gemini partnership, or getting new blood in, getting new leadership under Cook. Because look, this is, I think when you think about Cook's legacy, which has been so historic, this will tarnish his legacy.
When I think of his legacy, I think of buybacks and supply chains. Is he the right man to lead this company?
Look, I think it's a key moment for him. I believe he is to be CEO, especially for the coming years. But you cannot be the biggest consumer base in the world, 2.4 billion iOS devices, 1.5 billion iPhones, and miss the fourth industrial revolution. And that's why it comes back to those WWDC events that we are at. It's a back to the future moment. You feel like you're back in 2016.
They like being late. Is being late an option on this one?
No. And look, being late is one thing. Being casually late, this is something where you can miss the moment. And that's why the reason we call it a BlackBerry moment, because it's not just going to be about, okay, we have an orange iPhone this year, and this is the little
You think he needs to bring in new talent, but they've already lost top talent to Meta. Why do you think he's going to last till 2030?
Because this is, I believe they got to rip the Band-Aid off, change the DNA in Cupertino. Look, no one could argue, and we've been one of the biggest supporters of Apple to where they are today. But you got to recognize the game's change. And in the AI revolution, in wartime CEOs with Zuckerberg and Musk and everything you've seen, obviously from Nadella and Jensen, you cannot just sit there watching this go by. And even if they did a Perplexity deal, and you talk about, and that was a $30 billion deal, it's a drop in the bucket relative. But the longer they wait, that continues to be the overhang. A huge overhang was lifted last week in terms of tariffs and obviously in terms of what they did in the White House. But the elephant in the room continues to be AI.
What about the Google Gemini partnership?
Look, it comes down to, as I covered Microsoft in the late 90s, you could add, Gates' bomber biggest regret was during all the regulatory DOJ, they didn't go after some of the biggest technology trends, and they ultimately won that case. Now, for Google, and it comes to Apple, you cannot just sit here and just be on that treadmill at 2.5 speed. They got to focus, and I believe when it comes to partnership, that's something that they're going to have to seriously, aggressively consider.
What is this investment commitment all about? Who are they kidding here? How much money are they actually going to invest in this country?
Well, look, that's why, if you go back to, we've always said, the chance of them making an iPhone in the U.S. is a fairy tale.
Okay, so that's not going to happen.
And the reality is, they'll continue to invest more in AI and some of the other investments.
What do they consider as investment? How much are they currently spending on CapEx on any given year? Look, can they hit the numbers they're trying to say they're going to hit when they sit in the White House with the president?
It goes back to 4 years ago, what they talked about and where they are today, right? It has a lot of that come to fruition. I think for Apple, that was we talked about it, Cook, 10% politician, 90% CEO. That was a smart move. But I do believe this administration is watching carefully their investment. And if they feel that there's a little look over there moment, they will come.
You're the analyst. Do you think there is?
I think there's definitely risk here. And I think the elephant in the room. I think the bigger thing is it's not necessarily even about investment in the U.S. It's about make the big AI investments, and you could kill two birds with one stone. Do it in the U.S. That's where you're going to innovate, because iPhones are not going to be made here. You could also do that with an acquisition, and you could have happiness in 202 as well as on Wall Street relative to what Apple needs to do.
Final question before you go. You've got a new clothing line. Congratulations. A lot of people responded to this in the obvious fashion. They responded, excuse the fun. They're coming out and saying, if Dan Ives has a new clothing line, then this must be the top.
Sure. I get the whole Ives clothing line at the top. But again, this is also because I believe, for years, I've wanted to create clothing that, many could go out of the box, more color. But as I've said, in this AI party, it's still 10 p.m., was 9 p.m.
Okay.
Party goes to 4 a.m., and now you have some new clothes that you can wear.
Okay, and we might be blinded along the way. Dan, appreciate it.
Thank you.
Congrats as always, sir. Dan Ives there of Wedbush on the latest with big tech, on AMD, on NVIDIA. Up next on the program, we'll catch up with Stephanie Roth of Wolf Research on why tariff impacts on inflation may be worse than expected. With inflation data just around the corner, CPI tomorrow morning, the main event on the data front at 8:30 Eastern Time. Going into that data print, equities are doing okay. I keep saying this. We're coming into the week at all-time highs on the NASDAQ 100, close to those levels on the S&P 500, and the gains continue. Up another 1/10% on the S&P, on the NASDAQ up by 0.1, on the Russell, the small caps up by 0.3, and in the bond market, starting the week with a bit of a rally. Firmer, yields lower. We're down 2 basis points on 10s to 4.26.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The open in about 60 minutes away. Equities are firmer on the S&P 500 and on the Nasdaq, likewise on the Russell. Futures up by 0.13% with your morning movers. Here's Yahira. Hey, Yahira.
Hi, John. We start with the latest company to report results, and that is Weight Watchers. Shares are soaring up 10% after it issued a full-year revenue forecast, signaling confidence in its turnaround after the company filed for bankruptcy back in May. It had been rocked by the GLP-1 craze, but now it's leaning into that area and having some success. Clinical revenue in the latest quarter surged more than 50%, driven by growing subscriptions to its semaglutide-based treatment. So the future for this company appears to be less about points, more about shots. If you know, you know. Next up, we have shares of AMC. They are also rising after a strong showing in earnings. They are rising 8.5% here. The results showed a 35% jump year over year in admissions revenue as audiences keep returning to theaters. And while they are there, they are spending on food and drink, with that category up 36% year on year. And we end on CoreWeave. That stock is also higher, up 3.6% on a new bullish call over at JP Morgan, which raised its price target to $135. We are almost at those levels. They highlighted CoreWeave's massive AI data center deal with OpenAI and long-term growth potential. This is a company that went public back in March, and it is up 220% since then, and the next catalyst could be tomorrow when it reports results. John?
Yahira, thank you. Appreciate it. Thank you for the update. Looking ahead to tomorrow, inflation data on deck, a key week of economic data. With your preview, here's Bloomberg's Michael McKee. Good morning, Mike.
John, I thought it was very nice of the government to wait till you got back to release all of this data, because it is going to be a very big week, and one number to rule them all is the CPI. If the CPI comes in relatively benign, we are probably going to be more on track for a rate cut. If it jumps, and watch the 3% mark for the core, it's going to be a problem. Tuesday and Wednesday, we get Fed speak, and we'll hear from Barkin and Schmidt and Goolsbee, who haven't spoken since the jobs report came out, and we'll get an idea of what camp they're going to be in after all of this. Thursday, we get PPI and jobless claims, always an eye on jobless claims. And Friday, our consumers hanging in there. We get retail sales and the University of Michigan, and we get import prices. Now, tariffs aren't reflected in import prices, but if exporters are raising prices ahead of the tariffs, or even lowering prices to absorb some of it, that may show up in the numbers. And all of this will lead us Friday afternoon to check this chart one more time, and that's the odds of a Fed rate cut right now at about 84%, 85%. That could go up significantly if we get a decent CPI report and no problems in the rest of the economy. Otherwise, we may watch it go back the other way. So a lot to keep an eye on, and we can do that now because John is back.
Mike McKee, I build my vacation around their data. You know that, not the other way around. Mike, thank you. Appreciate it. Thanks for the update. Looking ahead to tomorrow's CPI report, Stephanie Roth of Wolf Research writing, we're looking for 0.31% core CPI, but risks to the upside. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
Upside risk tomorrow, or upside risk through the rest of this year?
Tomorrow and then the rest of the year. And more so perhaps for the rest of the year. I think tomorrow's print could be a little bit elevated, but then as we move to the next couple of prints, that's when we might start to see the real tariff impact start to show up.
We've seen this tension between goods and services. Will we see that tension again tomorrow morning?
I think the problem is we're going to start moving in the same direction. So for a lot of this year, you've seen softer on travels in particular. That's putting downward pressure on services and then upward pressure on goods. They help to offset one another. For the next couple of prints, it might go in the other direction, in which case travel might start to pick up at the same time goods are inflecting higher, and that could pose a risk for some scary-looking inflation prints in the next couple
Sounds
of months.
like potentially stagflation. What does the Fed do with this?
It's a tough backdrop for them. Perhaps when they're sitting here at the September FOMC, They might just take kind of what the market's giving them. That's kind of a question. That said, I think in the next couple of weeks, the markets might price in a lower odds of a September cut. So at this point, in our view, it's kind of 50-50. But the next couple prints might not look so great for the Fed to be able to cut.
Before the labor market report, it was a 40% chance of a September rate hike. Now it's like 95% chance after the labor market report. Now then we have 2 CPIs and 1 more jobs report. What do you think is going to be most important going to the September Fed meeting?
They're all going to be important. I think, and not just, if I had to pick one, I would say maybe the labor market report, just because the extent of the backward revisions were so significant. And our base case at this point is that we'll start to see the data inflect a little bit higher and the picture will look a bit brighter. We think the backward revisions were partially tied to the extent of the extreme uncertainty in May and June, specifically in June. Payroll processors submit their, companies that submit it via payroll processors, they might not have fully updated a lot of the job loss that happened within the month of June, then they went back and revised it. So that explains the downward revisions. I don't think it's necessarily indicative of what's happening in the future. You're starting to see job postings pick up, claims remain stable. The picture looks a lot better than at least the most recent 3 months.
Yeah, forgive the snark. This is the chairman of the Federal Reserve who anchored his view on the labour market around one data point, unemployment. He should feel pretty comfortable, even with the revisions a few Fridays ago, shouldn't he?
I think so, but I think you have to just wonder, to the extent that you're starting to see the significant downward, momentum in terms of payrolls. I think what we'll see after the next payrolls print, though, is an unemployment rate that still remains fairly stable, and then the last at least 2 months of jobs looking a little bit better, something around the 60 to 70,000 range, which is okay.
You've been warning about this for a while. Get comfortable with 60 to 70, maybe even 50, perhaps even lower. Just explain that a little bit more.
Yeah, so the steady state growth of payrolls has slowed down substantially. If you look at the last couple of years, it was running significantly above trend because of immigration. Now immigration has slowed down substantially, not only slowing, but they've also ended 500,000 visas overnight from May to June. So that's one thing that might help explain the extent of the revisions that happened in the month of June. The steady state pace of hiring has slowed down because of this. We were bringing in 75,000 people per month on Biden's parole programs. Those have been cut off, and those people holding visas are getting expired. So that should dramatically lower that steady state pace from something above 150 to something half that.
So you're saying that basically labor market's more frozen than it is weak?
Yeah, I think it's partially frozen and partially just some funky labor supply issues that are playing out. You're starting to see lower demand in certain areas, but I think that might be just a function of the economic environment that happened in the past couple months as well. Looking forward, companies might start to realize that the backdrop is looking a little bit better than what they thought, and they might start to proceed with their hiring plans, which might mean the pace of hiring in the next couple months might be a little bit better than expected.
If the pace of hiring does get better, does the Fed then have more of a bias towards anchoring inflation?
Yes, I think that's fair. The September FOMC is tough because we're just coming off the bad revisions. They only get one more labor market data. But I think there's a decent chance that they end up potentially cutting in September and then it being forced to sort of stay on hold for a little while because the inflation data will start picking up, and that will really challenge the backdrop for them.
What do you think this Fed's going to look like in 2026? Is any of this relevant? How big a change are we going to see to that committee?
I think it'll be at the margin. We'll have someone a little bit more dovish at the top. But I think what we're starting to see with the list that has been percolating is they're looking for a more establishment type of chair, it seems. They're leaning in that direction. Certainly Besant seems to be pushing for that because that's better for markets. Perhaps he's getting the message across that that's probably the better outcome for markets. I think what we'll see is a couple of additional more dovish members. It doesn't change the median that much, perhaps maybe 1 or 2 more cuts than would otherwise be the case.
What's priced for 26 relative to what's the median dot at the moment? What's priced for 26 at the moment? How aggressive are investors relative to what you're expecting too?
Yeah, I think investors are expecting 5 cuts maybe for the next couple of prints. And I think when we're talking to people, when I'm talking to clients, they seem to be a lot more worried about the labor backdrop than would otherwise be the case. So, yeah, maybe it's mixed sort of readings out there, but when you're talking to actual investors, the last payrolls print really jarred them, and they're wondering whether we've rewritten history and there's actually the significant unraveling in the labor market.
Are they just not convinced by the supply side story?
Yeah, I think that's probably the case. And people weren't necessarily paying attention to this whole immigration story for quite some time. The focus had been on deportations, which is a sideshow to some extent, because deportations is not really what's going on here. It is the expiration of visas of people who are here legally, And now the administration has terminated those programs. So the parole programs in particular, it's about 1.5 million people whose visas are going to be expired in the next year.
And what industries are those people in?
A lot of it's blue-collar type industries, construction, retail and hospitality, meatpacking is another big one. So these are the areas that we should start to see some tightening in the labor market, which is perhaps one reason that we're starting to see a little bit of wage pressure. And this has been our call, that we'll see a very low, steady-state pace of hiring, unemployment that's kind of steady, and then wage pressure start to build, at least at the margin.
So you can see a situation where payroll growth steps down, but slack doesn't increase, because that's a really important distinction.
Yes, exactly. And that's kind of what we're looking at, because there's a real tightening in labor supply. Yeah, slight slowing in demand, but perhaps not massively so. And this is kind of the backdrop that we're living with, and it's hard for the market to digest that. And I think that's what we're sort of facing in the next couple of weeks. And it might be challenging for equities in the next couple of weeks as we digest some of the stronger inflation prints at the same time. But net, the economy is fine, and we're going to be running it at a place where growth is potentially inflecting a little bit higher. At the same time, inflation is also as well.
Stephanie, it's good to see you, as always. Thanks for dropping by. Stephanie Roth there of Wolfe Research with an update on stories worldwide with your Bloomberg brief. Let's cross back over to Yahara Anand for more. Hey, Yahara.
Hi, John. Colombian presidential hopeful Miguel Uribe, who had warned that the nation was slipping back into its violent past, has died. Uribe's wife confirmed his death 2 months after he was gunned down while campaigning in Bogota. Uribe had been hospitalized in critical condition and underwent several neurosurgeries. Meanwhile, President Trump hopes that China will quadruple its soybean orders just a day before the trade truce between the two countries expires. The soybean push comes as U.S. farmers are just weeks away from their next harvest. As of late July, U.S. government data showed China has refrained from booking any cargoes for the upcoming season as trade tensions linger. And Micron shares are rising 5% in the pre-market. The company boosted its fourth quarter revenue and earnings outlook, citing improved pricing. Micron has been one of the best performing chip stocks this year, up more than 40%, but it disappointed investors back in June with an outlook that fell short of lofty expectations. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with the Flexport CEO, Ryan Pedersen, on how supply chains are managing a brand new trading landscape. Live from New York City, you're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do, we'll end up doing more as a company as well.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
I think we need to see what things look like as we get into September. And if the CPI and PCE are reasonably well restrained and the labor market looks weak, then it would be appropriate to ease rates. However, it's also quite possible that we'll see a slowly increasing inflation rate. I'm expecting the CPI will probably be, the core CPI will be above 3%. And if we start seeing numbers that look higher than the market's expecting, sentiment can change pretty quickly.
That was the former Boston Fed President Eric Rosengren joining us a little bit earlier, looking ahead to the September Federal Reserve meeting and looking forward to what we could see tomorrow morning at 8:30 Eastern Time with U.S. inflation data. Here's a snapshot of the price action going into the opening bell about 45 minutes away, building on last week's gains. A big weekly gain, the biggest, in fact, going back to the end of June. Equity futures positive this morning by around 1/10%, building on all-time highs on the NASDAQ 100, just about in the green so far this morning. If you turn to the bond market, 2-year, 10-year, 30-year, let's compare the front end to the long end. At the front end of the curve, the 2-year, anchored around the view that maybe this Federal Reserve is about to reduce interest rates. 2-year rates at about 375.60 this morning. At the longer end of the curve coming into Monday, yields higher, just a grind higher for 4 consecutive sessions. Yields a little bit lower this morning by a basis point at 427. But the big bet emerging on Wall Street is that maybe you see a snapshot, a brief pop in the long end compared to what you might see at the front end. Perhaps a repeat of what we saw last year and a much steeper yield curve. Front end rallies, long end sells off as this Fed gets maybe a little bit more aggressive on interest rates and the long end of the curve begins to push back and push back a little bit more. We saw this play out last year. Will we see a repeat later on this year? That's the price action in the bond market. This is what you can look forward to through the rest of this week. At 10 a.m. Eastern Time, President Donald Trump holding a news conference. Tomorrow, the big data point, inflation just around the corner, plus the current trade truce between the U.S. and China is set to expire. Looking ahead to Thursday, PPI data and another round of jobless claims in focus. Friday, President Trump and Russian President Vladimir Putin meeting in Alaska, plus we'll get some retail sales data and UMich consumer sentiment numbers going into the weekend. Let's turn to trade. The Flexport CEO, Ryan Peterson, writing the following. U.S. ports are bracing for a tariff-fueled surge. The new wave of reciprocal tariffs is driving last-minute shipping activity, especially from India, Taiwan, and semiconductor suppliers. I'm pleased to say the man himself joins us now for more. Ryan, welcome to the program, sir. Just describe, if you can, the activity that you've seen over the past few months, the rush to secure air freight, all kinds of things, Ryan. What are you seeing?
Yeah, hi, thanks for having me on. Wow, it's been crazy volatile ever since the Liberation Day tariffs were announced. You had immediately after that, you had a 60% decline in ocean freight bookings from China to the U.S. That lasted about 5 weeks, so just a massive decline of freight coming out of China. You then had, once the tariffs were relaxed, a surge to 80% above the pre-tariff level of volumes. That's what I was describing in that tweet. And now I think that was from a couple of weeks ago because things have been settling in, and now we're seeing the real effect of tariffs, which is people shipping less stuff. Prices of ocean freight are coming way down, back to, we're probably over the next few weeks going to see prices back to levels that we haven't seen since after the pandemic in like 2023 when prices were quite low. So I don't know if you call that normalizing or just like doing what you would predict, which is tariffs should lead to less freight, which should lead to lower prices. And it's not great for companies involved in the business.
Geographically, Ryan, what ports are dealing with really soft demand?
I assume that it's pretty evenly distributed across all the ports. I don't think there's a trend by port. It's actually one thing that has happened here is the airports, because when the tariffs are announced with such short deadlines, you see this huge rush to ship air freight in. And that sort of ended a couple of days ago at the end of last week when the new tariffs took effect. But in the prior 2 or 3 weeks to that, there was this huge switch from ocean freight to air freight. So I met one customer who said they saved $2 million by switching 4 containers from ocean freight to air freight just by beating the tariffs.
We've seen this administration really try to go after transshipment. How is that affecting the supply chains and what you're tracking?
Yeah, this new transshipment rule is quite interesting. So like basically what they've said is that if you have one duty rate, which is around 20% for goods from, for example, Vietnam, but if the goods are determined to be transshipped from another country through Vietnam, then the duty rate is much higher. This is a very strange policy because historically, in all precedent of country of origin rules, then Vietnam has nothing to do with the duty rate. If they're transshipped through Vietnam, the duty rate is still China. China's duty rate is not Vietnam. So it's quite a confusing rule from those in the industry. What we're basically saying is, hey, in addition to going to jail for committing customs fraud, you're also going to have to pay a higher duty rate. So I mean, I guess it's effective, but it's very strange policy.
But have you actually seen it work when you're tracking all of this cargo?
No, it's not. I mean, because it's a sort of a nonsense. It's basically saying, hey, if you're committing fraud, then you have to pay a higher duty rate. Well, the penalties were already much worse for committing fraud than a higher duty rate. So no, we haven't seen anything like change because of it.
Ryan, how creative are people getting? What kind of mitigation strategies are they introducing? What are you suggesting? What are you advocating for?
Yeah, I mean, the first thing I'm advocating is don't do anything illegal. And there's a lot of incentive to break the rules now because and you do see people who are breaking the rules. Now, for example, if you import goods from China and the Chinese company serves as the importer, and all you do is the American company that used to import them, and now you're just saying, hey, I buy them in America. The Chinese company imported them, and they happen to cheat on the customs duties. That's not my fault. Well, guess what? Customs will hold you liable. That's not a loophole that you can get out of so easily as that. What's legal and what we're advising people to do is look very closely at 3 things. 1 is the valuation of the goods. 2 is the country of origin. And 3 is the classification. Now, all of these seem like black and white, but they're not. This is the law, this is regulation, and therefore there's a lot of room for expertise to come in and identify what is the gray area and what is the legal gray area. How do you stay on the right side of that legal area? And some of it's not gray, it's just like sophisticated. So on valuation, if you provided CapEx assistance to your factory, or there's other rules that you can say how that lower the value of the goods, you would pay less tariff. You got to do it legally, though. Make sure you have an expert. On the country of origin, similar things. How do you classify this? How do you qualify this as being a country of origin that has a lower duty rate? There's a lot of sophistication in that as well of saying, hey, did you apply enough new value added, either materials or labor in that other country to change the country of origin legally? Not markets are saying on this. This administration is sort of inscrutable from my perspective. I don't really make a lot of predictions on that. So,
well, are people front loading and rushing before tomorrow from China or no?
I mean, at this point, it's too late. So people were moving stuff in, but no, I didn't see a lot of front loading on the China one. Yeah, fair enough. From the behavior of the actual actors in the market, it seems like they think it'll get extended.
Ryan, appreciate your time and your insights. Super valuable. As always, sir, thank you. Ryan Peterson there, the Flexport CEO. It's just been this never-ending stimulus for global trade over the last several months. Get ahead of the next one, get ahead of the next one, and then get ahead of the next one.
And it's constant. And what we saw on Friday was potentially this concern about gold bars. You can imagine some people getting very creative when it comes from gold bars, maybe in Switzerland or in Hong Kong, now having to pay the duty. Well, maybe there's some way you can sneak them in, not sure.
Any reason to believe we won't get that 90-day extension in the next 24 hours?
At the moment, I don't have any reason to believe that unless Trump wants to use it as a negotiating tool to try to ramp up the heat and the rhetoric with China, especially as it goes into this meeting on Friday in Alaska with President Putin.
Trade in focus in the next 24 hours, that's for sure. The trade bump that we might see in goods inflation will be in focus tomorrow morning at 8:30 Eastern Time. At the moment, going into the opening bout, stocks doing okay, better than okay, at all-time highs on the S&P 500, around those levels, at those levels on the NASDAQ 100 going into the opening bout. Coming up tomorrow, we'll catch up with Keith Lerner of Truist, Torsten Slock of Apollo, Stuart Kaiser of Citi, Katie Kaminsky of Alpha Simplex to break down tomorrow's inflation data, look forward to retail sales data later on in the week, and maybe witness more all-time highs in this equity market. This market keeps on shrugging in the face of elevated policy risk down in Washington, D.C. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Day 4 at the Cincinnati Open. Coco Gauff lifted the trophy in Cincy 2 years ago on her way to the title at the US Open. And the American got off to a perfect start as she dispatched China's Wang Jingwu in straight sets. She moves on to face Ukraine's Diana Yastremska for a place in the 4th round. And don't forget, you can watch all the action live daily on Tennis Channel.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles, all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a 3-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss the close, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Equity futures just about flat near record highs with 30 minutes to go until the official start of trading. I'm Katie Greifeld.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, chipmakers NVIDIA and AMD make an unusual deal with the U.S. government that's raising alarm bells. And gold futures slide. Traders waiting for the White House to clarify last week's surprise tariff on bullion bars, and crypto stocks rally. Bitcoin nears a fresh all-time high as big investors pile into digital assets, Danny.
There is one story and one set of stocks to watch this morning, Katie, and it is NVIDIA and AMD. The two of them have reportedly agreed to pay 15% from their China AI chip sales to the U.S. government. The company sold about $23 billion in chip sales to China in 2024. So, Katie, NVIDIA down 0.5%, AMD down just more than 1.5%.
So many different angles on that one.
Yeah.
We're going to tackle them all, but let's take a look at another chip maker, Micron, raising its revenue forecast due to favorable pricing for its memory modules. You take a look at Micron shares right now in the pre-market, higher by more than 5%, Danny.
Yeah, it's a lot of moving parts and a lot of different fates for different tech companies, but let's begin with NVIDIA and AMD. Joining us now for more is Bloomberg Tech co-host Ed Ludlow. Ed, it's hard to put into words how strange and unprecedented this is. What do we understand of the deal struck by the Trump administration and these two companies?
Yeah, it is a quid pro quo. It is transactional. That's the way that sources describe it to us, right? That is the price of access to the Chinese market in order that NVIDIA and AMD can sell AI accelerators or high-performance GPUs to Chinese AI model makers. 15% is probably more interesting in NVIDIA's case than it is in AMD's, right? You know, when I spoke to AMD CEO Lisa Su last week, they hadn't yet managed to claw back any of the inventory that they'd written down because they were unable to export to that market. AMD's not commented on this latest reporting. NVIDIA has, and in their statement, they don't talk about the 15%. They do address the idea that to date, since the bans came into effect or export restrictions came into effect, they have not yet shipped any H20 chips. But there's like this really wide range of estimates on the street, right? Where AMD has a higher proportion of historic revenues from China. NVIDIA is just a much bigger beast. It's 95% of that market. And if they're able to return to business there, you're looking at, what, $7 billion in a fiscal quarter? The United States is going to get $1 billion of that. And that's the unprecedented part.
Well, let's talk a little bit more about what exactly the chip makers, NVIDIA, AMD, get out of this. It makes sense what the U.S. government gets out of it. 15% of China chip sales doesn't sound that bad. But we were just looking at that graphic where 13% of NVIDIA's revenue, I believe, comes from mainland China. So I guess you do the math. It's more painful to give up that than it is to give up 15% of their revenue from those sales.
Yeah. Historically, but the status quo is that NVIDIA in this current period is not shipping H20s to China. The part of the calculus that Jensen Huang, in both the public domain and behind closed doors, has been trying to impress upon the president is that if NVIDIA and AMD are not able to sell their technology into China, then China has a domestic champion that can fill the vacuum. That domestic champion is Huawei. And the argument that NVIDIA in particular has made is that Huawei is catching up. It has a level or generation of accelerator that is more performant, better than those that are subject to export restrictions, the H20, the MI308 anyway. And so that's the risk that America's running. But I'll leave it to AMH and those in DC to talk to you guys about fiscal policy. The president did talk for a long time about the idea that specific tariffs on specific industries would be revenue generating for the United States. And if you read the Bloomberg terminal on any given day, the flow of capital is most concentrated right now in high performance GPUs that go into data centers. So a good bit of business for the president of the United States. But the cost of doing business for NVIDIA and AMD, they want to be in China, which for a very long time was a critical end market for data center.
All right, Ed Ludlow, great reporting as always. That is Bloomberg Tech co-host Ed Ludlow joining us from London, which is a little bit fun. We'll see what he's up to there. But let's talk a little bit more about Micron, raising its forecast thanks to favorable pricing for its memory chips. For more, we'll bring in now Bloomberg Intelligence semiconductor analyst Jake Silverman. So you can see the reaction pre-market in shares. Some good news here. This is a different setting than we were in June when we got that disappointing outlook from this company.
Yeah, and really it comes down to supply and demand balance. So I think high bandwidth memory is actually having a pretty important impact, but not necessarily from near-term upside related to AI, but actually just its constraining impact on overall memory because of the fact that high bandwidth memory is accounting for more revenue and requires more capacity than standard memory. If demand for standard memory grows, that allows for higher pricing.
How does that offset some of the pricing concerns and some of the tariff-related concerns?
Yeah, as of right now, it doesn't seem like Micron is going to be directly impacted by tariffs. They're trying to expand their capacity and their U.S. footprint in Idaho and eventually New York as well. So there is a potential impact for higher pricing in the U.S. on some products, but it doesn't really seem like Micron or their peers, SK Hynix or Samsung, are really going to see that impact. And so therefore, right now, we're not overly worried about higher memory pricing impacting demand for products. That could be more so downstream. So if there are higher pricing for smartphones or PCs, which as of right now, it's a little bit more in limbo, obviously, you know, that could have a lower, that demand could be lower.
All right, Jake, thank you very much for that. Micron shares at the moment up 5.2%. Jake Silverman from Bloomberg Intelligence. Now on to politics, where the tariff truce between the U.S. and China expires tomorrow. Treasury Secretary Scott Bessent is hopeful that a number of trade deals will be completed by October. Joining us now with the latest is Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. Anne-Marie, great to see you. How close does it seem to getting either an agreement or some sort of extension between the U.S. and China?
It's likely going to be an extension. The Treasury Secretary has said to me likely they'll be rolling this forward, probably 90-day increments until they get a final comprehensive deal. Then when they left the latest trade talks, they were talking about the fact that they pretty much have an extension in place, but it was the president to decide. And so far, we have not seen Trump come out and decisively say that they were going to do this 90-day extension. What we have seen him come out, though, overnight is talk about soybeans and how China needs to up their purchase of soybeans, which was critical during the first Trump administration when you look at the phase one trade deal and these purchasing agreements. And this is politically important for the Republican Party, especially the president, given the fact that we're going very much so, we're going close to harvest season. These are Republican states that this could potentially affect, and we are just about to go into this truce deadline tomorrow. Most people think it's going to be extended, but yet again, we haven't heard that from the Oval Office.
I want to focus in on soybeans because that post overnight urging China to quadruple their purchases of soybeans, there's not a lot of indications that the nation plans to do that.
No, there isn't at this moment. They haven't been living up to the phase one purchasing agreement since it was signed during Trump's first administration. We should note that agreement in itself took about 18 months. And now when you look at the dialogue between Washington and Beijing, this time around, the list of issues that they are getting through, export controls. You just talked about this when it comes to NVIDIA and AMD with Ed Ludlow, rare earths. What's happening with the TikTok deal that the CCP, China would have to potentially sign off on? Potentially the U.S. is also asking and imploring the Chinese to put their thumb on the scale when it comes to Russia's invasion of Ukraine and on Moscow. And the president's going to go into this meeting on Friday with Putin. Is China potentially trying to put some pressure on Putin to wind down this war? There's a host of issues that the U.S. administration is dealing with right now when it comes to China, but it was kind of shocking the president decided overnight to talk about soybeans, I think potentially because we're going into harvest season, because that was so critical of the first administration and hasn't been the center point second time around.
Well, to the point of Trump and Putin's meeting on Friday, it's something that already the Europeans are starting to sound the alarm bells with Trump talking about a swapping of territories. How much can be agreed upon if Europeans and Zelensky of Ukraine have already started to push back on the initial sounds they've gotten from what the two might discuss?
Well, this is very challenging for Zelensky to accept because this would be giving up Donbass region, the whole Eastern Front, which means he would have to pull Ukrainian troops out of Luhansk and Donetsk, parts of Ukrainian territory that they have control over. So this is, as someone described to me over the weekend, the third rail in Ukrainian politics. And this is just talking about territory, not even the major fundamental issues. What does Ukraine's future NATO look like? Is that not going to happen? What is going to be on the table to make sure that Putin and Russia does not invade Ukraine again, that they can walk away with long-term security guarantees. And I think that's what a lot of European leaders want to try to implore on the president if they are able to speak with him before going into this meeting on Friday. Someone described Friday to me as potentially the best outcome would be an agreement in place to start a process to get a long-term peace agreement.
All right, Anne-Marie, it's definitely going to be a busy week. Appreciate you setting it up on the political front. That is Anne-Marie Hordern. Meanwhile, we're about 20 minutes away from those opening bells. A quick check on futures right now. Pretty much flat, but we're very, very close to all-time highs on the S&P 500. And you remember last week, we actually posted a gain of 2.4% on the S&P 500. It didn't quite feel that way, Danny.
It didn't feel that way, but it is ridiculous that amid all that, we're basically a rounding error away from an all-time high. I think it's less than 0.01%.
Just a sneeze.
We don't need to do a lot to get there today. We'll see if that happens. But coming up on the show, Barrick Mining slips. It posts a $1 billion charge as the entire industry gets rattled by tariff rhetoric. We're going to look at all things metals coming up as Barrick falls more than 4%. This is Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get you some high interest stories. A look at what's making headlines around the world. First up, Intel CEO Lip-Bu Tan set to visit the White House later on today. The Wall Street Journal reporting that Tan hopes to show his commitment to the U.S. The visit comes after President Trump called for his immediately removal over his ties to his Chinese businesses. And lithium stocks, they are spiking this morning. Battery giant CATL halted operations at a major mine in China. It comes after weeks of speculation that authorities wouldn't extend the mine's license. The move sparked concerns that Beijing might suspend other projects. And shares of Barrick Mining are falling in the pre-market trade after the company reported disappointing earnings. Both gold production and sales volumes estimates for the second quarter missed. The company also posted a net charge of over $1 billion related to the seizure of its gold mine in Mali.
And for more on Barrick and all things metals, we're joined now by Bloomberg's economic statecraft reporter, Joe Doe. And Joe, we heard from the CEO of Barrick earlier today saying that the gold industry is waiting for clarity on U.S. tariffs. And I think we all are after sort of the back and forth we got on Friday.
Yeah, I mean, the White House, we had a report late Friday that from a White House official saying that they were going to give clarity to the market regarding quote-unquote misinformation. I think what they were referring to was the CBP's ruling, which is a government agency's ruling that, yes, 100-ounce and 1 kilo gold bars would be tariffed. The expectation is that the clarification will say, no, actually, there's not a tariff on those. But until you get that announcement, I mean, the trade is where it has to be.
Well, Barrick maybe not as directly exposed because they're a miner, not a refiner, but in general, for the entirety of this industry, how vulnerable is it to some of these disruptions? And how quickly can things get back up to speed if we do get that clarification that, no, there's not tariff?
Yeah, I mean, this is piping, right? Like, if you just destroy the pipes, then the water never runs. If you cannot clarify that gold bars, I had mentioned before, gold bars are constantly going between New York and London, right? They're flying back and forth. The underlying exists for the paper that's traded on the screen. And so when you have to move gold from COMEX warehouses in New York to bullion banks in London, there actually has to be a change in the way that bar is put into those bullion vaults. So you have to remelt it in some place, which happens to be Switzerland, that can change it from a 100-ounce bar to a 400 gold ounce bar. If you're suddenly putting tariffs on that, you have just a massive dislocation in the market. That's what you saw late Thursday and into Friday morning.
Yeah, it was just dizzying trying to follow all the different tentacles that could come out of this. Let's talk specifically more about Barrick, though, because the reason that you have shares falling today is chiefly related to that $1 billion charge that they took on their mine in Mali. And this is a situation that has been simmering for some time.
Yeah, I mean, you have a military junta that has effectively taken over the mine there. Suddenly, you just don't have any control of a mine that's a significant part of your revenue. The $1 billion net charge, I mean, they did point out, listen, we did get a gain from selling 50% of a mine in Alaska at $750 million. But, I mean, you got a situation here where already 4 Barrick employees have been apprehended. I mean, this is a bit messy. And it is a reminder that mining globally is not just like doing business in the United States. It's not just running a steel mill, you know, in Pittsburgh. You always have to be worrying not only about bottom line, but government relations, actual diplomacy from companies with statewide country officials.
Unfortunately, Joe, that seems to be a growing thread amid all types of companies these days. We'll save that for later, but another one of these instances is just looking at what's happening with lithium today, with stocks related to lithium, lithium itself spiking, with CATL closing down a mine. How much of this is about a shift in Chinese policy?
Yeah, I think the question is that, will there be a shift? Are we seeing this move by the Chinese government to address quote-unquote overcapacity? The overcapacity issues are across the spectrum in China. It's not just lithium, it's steel, it's many other industries. The idea being that you run manufacturing facilities and mines all out because essentially underlying all of that are jobs, right? And you want to keep people in those jobs. The question is, are we starting to see the Chinese government say, okay, the overcapacity is a problem long term, we need to rein that in. That's why we're seeing the lithium market move in a way that we haven't seen in a long time. And the questions of, okay, well, these gluts that have been around because of the Chinese overcapacity, will that suddenly disappear? This is at least the tip of the iceberg, I would say.
The tip of the iceberg. Certainly a lot of big questions hanging over the lithium markets as well as the gold markets. Joe Doe following all of it for us. That is Bloomberg's Joe Doe. And in the next hour, I'm pleased to say, we'll be joined by Barrick Mining CEO Mark Bristow just about at 10:30 a.m. You don't want to miss that conversation. But let's take a quick look at equity futures right now. 12 minutes or so to go until the opening bell. Again, small moves overall, but when you're at record highs, it's hard to complain about green on the screen. You have a little bit more direction when you go down the list. The NASDAQ 100, I'm going to call that unchanged, actually. But the Russell 2000, those small caps, higher by about 0.2% right now, Danny.
Yeah, maybe happy that bond yields are coming down, or that apparently everyone seems to be a bull these days.
There you go.
Yeah, well, we're going to talk about that and more. Citi among those bulls, boosting its S&P 500 call after strong earnings. HSBC's Jose Rasco also optimistic. He's going to be joining us next on Bloomberg Open Interest.
case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
A record share of fund managers see U.S. stocks as too expensive. 91% of respondents from Bank of America's monthly survey say that stocks are overvalued, but they also see the lowest probability of a hard landing since January. Certainly haven't heard that term for a while. This comes as Citi strategists raise their year-end S&P 500 target to 6,600. They argue that tax cuts should offset the negative earnings impact from tariffs. Let's make sense of it all with Jose Rasco. He is CIO for the Americas at HSBC Private Banking and Wealth Management. Jose, great to see you in person.
It's great to see you as well.
So let's talk about that setup. Okay, perhaps U.S. stocks are overvalued, but how are you weighing that factor against the corporate fundamentals, which seem pretty strong still?
It's not just the corporate fundamentals. You also have the onset of a Fed easing. And historically, going back to 1990, there have been 7 instances where they had begun to ease after a pause of about 6 to 9 months. And the S&P rallies in the following 12 months about 23% after the onset of easing again. That's one factor. The other thing is the tax rate, which you touched on briefly. And third is the secular themes we see. Inflow of capital. The U.S. is the #1 destination for foreign direct investment since 2018. It's almost double the second country in the world, which is the Netherlands. So there's something going on.
So that Sell America trade, that just wasn't truly a thing?
You know, at the end of American exceptionalism, I don't see it. I'm sorry.
There is another twist in this, Jose, and it is another consideration if you are a chief executive in corporate America, and that is the government intervening in your business model, if you're AMD or NVIDIA, or outright telling you should go if you're the Intel CEO. Does that not make you pause in your bullishness, or at least reassess things like profitability if the American government is asking for a share of your revenue?
So, yeah, a share of revenue, but a share of expanded revenue and large expansion in revenue, hopefully, right? So hopefully they've done that arithmetic. I leave that to the CFO of those companies. But if you look at the broader question is government interference or shifting in government policy, definitely. Last year we had more elections than we've ever had. This year we're dealing with the aftermath of that. And in the U.S. we're feeling it for sure. But I think if you look at the quality of earnings, and more importantly, I'm old enough to remember the 90s, not you two, but old enough to remember the 90s.
We were alive.
We were
well, you were alive, but
yeah.
you were in grade school. I was actually doing this on this set, actually. And in the 90s, companies, PEs soared, but they had no earnings. We talked about 5-year forward earnings. It was ridiculous. Today, these quality companies, trillion-dollar companies, they're making money, and a lot of it. So.
Yeah.
No, and we haven't still seen the deflation from the tech revolution, which is coming after the productivity.
So you add it all together, it sounds like you're fairly bullish here, Jose. What would be the fly in that ointment?
Well, I mean, clearly policy error, government or the Fed. Look at the auctions last week, right? Troubled auctions at the long end of the curve. We saw interest rates back up. That could be problematic. Max Kettner, who I know you've both worked with in the past. I love Max, dear friend, brilliant guy. And he's talked about the danger zone of rates shooting up too high. I don't think we're going to see that, but we are seeing term premia rise, and we're seeing that the long end of the curve is stickier, right?
Jose, literally a minute here, but you talked about deflation in tech, but what about things like utilities and energy getting more expensive as these AI players hoover up all of the energy needs?
Yeah, no, they are using that energy, but that's why we're going to see a lot of increase in production. More importantly, increase in energy efficiency. That is going to be a term you're going to hear a lot of in the next couple of years.
All right, Jose, we are just getting started. You're sticking with us through the opening bell. That is Jose Rasco. Let's take a quick check at the setup with just about 4 minutes ago until those bells ring. The S&P 500 hanging on to its pre-market gains. I can't say the same about the NASDAQ 100. Now unch on your screen. Even that rally we were talking about in small caps fading a little bit on this Monday morning, of course, close to record highs. And we saw a big rally last week, maybe losing some momentum here. We'll bring you through all of the opening action up next. This is Open Interest.
Single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also, the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
All right, we are moments away from the official start of trading on this Monday morning. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. You take a look at where we stand on futures. Not too hot, not too cold. The S&P 500 pretty much flat in the pre-market. The NASDAQ 100, it's the same story. The Russell 2000, a little bit more green, but still contained at these record highs. We know we have a big week ahead of us. CPI coming out tomorrow. We're still in the thick of earnings season, and there are a lot of questions about geopolitics at this stage of the game. But you take a look at the opening bells over at the New York Stock Exchange, down at the NASDAQ. The bells are ringing as we greet a new week after a big rally on the S&P 500 last week. And chips particularly in focus right now, Danny.
Yeah, maybe this is what will prevent us from getting to all-time highs if we attempt to do that. Again, 0.01% away from it as the close on Friday. But here's what NVIDIA and AMD are doing. Both of them agreed to pay 15% of their revenue from Chinese AI chip sales to the U.S. government. The companies, just to put in context, they sold about $23 billion in chips to China in 2024. We're just speaking with HSBC, Katie, who says, yeah, they have high revenue, so they can handle this.
Yeah, absolutely. And you can see traders trying to make sense of the news. NVIDIA shares just about flat. I have to imagine that'll change. But let's talk a little bit about Micron. Also in the chip space, Micron raising its revenue forecast this morning due to favorable pricing for its memory modules. That is a different setup than what we saw in June when we got a disappointing outlook from the company. But Micron shares at the opening bell up about 7%, Danny. That is certainly helping.
Yeah, it's helping a lot, 6.6%. And it's a lot to digest in this market, and we're trying to make sense of it. We're back with Jose Rasco, CIO for the Americas at HSBC, Private Banking and Wealth Management. So, Jose, I mean, Micron is an example of one of these companies that post-earnings have moved a lot. On a headline basis, as Katie was pointing out, we're barely changed today. You're seeing huge swings. You're seeing companies getting punished massively for missing. What do you make of just the volatility of this earnings season?
So one of the things we haven't talked about, and you asked before, what are some of the negatives? What are the potential hazards? In the short term, remember, September, October, not great months for stocks. More importantly, growth value, the Magnificent Seven versus what I call the Forgotten 493, right? I should have patented that, damn it. But long
not
story
too late, Jose.
Not too late. We'll do it together. But long story short, growth value, that disparity, you're going to see mean reversion. And even though I would argue valuations are up, but they are not excessive. We've done the work on valuation cycles. We are sort of middle of the range in terms of the expansion in multiples, forward multiples, and where they sit relative to history. They're middle of the pack. It is not excessive relative to history. People may not be comfortable, but remember, these companies are making money, and the long-term secular themes are all in place. That's why we like industrials, we like energy, and we haven't even seen financials kick in with M&A, with stock buybacks. This is all, when you see a market that's up a lot and the Fed starts cutting rates, those stocks are weaponized to go out there and create activity in the market, right?
I do want to talk about the Fed, but I want to talk a little bit more about the Forgotten 493. We'll make that happen. There was a note
The
from
three of us.
the three of us on this show.
We need royalties, basically, Jose, when we start using it, yeah.
There was this stat from Goldman last week, though, talking about earnings growth. The Magnificent Seven apparently grew earnings by 26% year over year in the second quarter. You take a look at the 493. That number was just 4%. That seems like something to forget.
So I'm a big believer in not looking where you've been. Let's look to where we're going. And where we're going, 23% for the Mag 7 goes to 15, 4 quarters out. The Forgotten 493 from 4% goes to 15, 14 and a half. I lied. I rounded. But long story short, that's going to almost quadruple in terms of the Forgotten 493. Easy comps, I know, but it's also productivity. In fact, one of the things we do, we look at a portfolio where we don't look at tech. We look at the beneficiaries of tech. Who's going to use tech better, company X or company Y? That's the company we want to invest in. Productivity, profitability.
But it's a changing business model. If a company becomes more productive, they need less employees, they become more asset light, whereas the big tech players, we used to value them because they were asset light, and that's changing. They're investing in huge data centers. Does that mean the way that you value some of these companies needs to change?
Absolutely, and that's why interest rates matter, and that's a great segue to the Fed, maybe.
Yeah.
But the other thing I would say about AI, which nobody's talking about, AI, yes, will reduce employment for basic jobs, but it's also going to make the average employee smarter because the tech is going to reach down and pull you up. It's going to enable you to be smarter in what you do day to day. It's going to, technologically, it's going to take away some of those responsibilities, making you more valuable to the company. So
It's an optimistic take versus it's just going to take all of our jobs. But I'm gonna take you up on that segue to the Fed.
Yeah.
It seems like we're coalescing around September is finally when we're going to see the next rate cut from the Fed. But you look at the trajectory of the rest of this year, 2 cuts, 3 cuts, where do you land?
So we think for the next two cuts this year, September, December, and then 1 in March. That's what our economics team has said. And the problem you have is what concerns me with the Fed, quite frankly, is when Jay Powell came out and said, we're looking at the unemployment rate, that is not a leading indicator. You want to look at claims and you want to look at what the companies are telling you through other indices, not the unemployment rate. And if they're going to wait for inflation to see the whites of the eyes of inflation, we may have policy error. I'm concerned about that one because tariffs have been delayed.
How important that you get more than 1 cut for this rally to continue?
It's helpful, but it's not significant. Remember, in the 90s, we didn't have 1 rally. We had 4 market rallies in the 90s. And the average Fed funds rate, 5.3%. Interest rates help, but they matter on the margin. If there is demand and if the consumer is out there, remember, real disposable incomes are still positive, right? So we're not raging bulls, we're not Robert De Niro, but we are cautiously optimistic on where we go. But remember, this mean reversion still has to take place.
Well, the concept of policy error, you listed it as a concern of yours. Is that investable? Are you protecting and hedging your portfolio for that possibility? What does that look like?
So from an asset allocation perspective, getting away from equities, right? Yeah, we're telling clients to take protection in the market, number one. We're telling them to diversify into the alt space, whether it's hedge funds or private markets. And I know private markets have had their share of issues. Credit in particular has done well. We like it. And I think if you look at the hedge fund space, it's done pretty well. So we continue to like those uncorrelated asset classes.
All right, Jose, really enjoyed this conversation. Can't thank you enough for kicking off the week with us. That is Jose Rasco of HSBC. Meanwhile, we're just about 7 minutes into the session. Let's get a check on this market right now. For unchanged on the S&P 500, breadth is actually fairly good right now. You have nearly 400 names in the S&P 500 in the green, and it's all the names that you would want to see. Tesla up top there, that is your biggest contributor to the upside. You also have Eli Lilly, Micron helping out as well. As discussed, United Health also punching higher as well. Haven't seen that in a bit. Then you take a look at the downside though, and this is where it starts to hurt. Apple, your biggest loser on a points basis in the S&P 500, followed by Nvidia, Amazon, Alphabet, Microsoft. A real tug of war going on with big tech between Tesla and Apple, and then what else is going on. Let's take a look at the sectors in any case. And as we were seeing on the individual level, the breadth is pretty good. There's a lot of green bars on this screen right now. Healthcare, your biggest gainer, followed by energy and consumer discretionary. So it's not just big tech running away with it. In fact, big tech is your biggest drag on the downside, down about 0.5%. Danny, we'll see, of course, what the S&P 500 does with this over to 4 p.m.
Yeah, it's all about AMD and Nvidia dragging that down. It's kind of surprising you're actually not seeing more losses given the fact that they're going to have to give 15% of the revenue to the U.S. government. Coming up, we're going to have more on that story. Again, Nvidia and AMD agreeing to pay the U.S. government a portion of their chip sales. Shares are down just under 1%. We're going to take a closer look next on Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Morgan Stanley upgrading Freeport-McMoRan to overweight, saying that markets are failing to appreciate the potential benefits from President Trump's copper tariffs. Maybe not appreciating it too much this morning. Shares only up about 0.1%. Next up, HSBC downgrading Trade Desk to hold. The analysts turning more cautious after the company's lackluster results. Shares actually higher right now, but really took a beating last week. And finally, we have Melius downgrading Adobe to sell, warning that artificial intelligence could become a growing competitor for the company. That has been haunting Adobe for some time now. Shares down about 0.6% right now.
You need that AI in Photoshop, or else you just can't get those fancy pics, you know, of us with like rainbows and dolphins jumping over us. It's very necessary. Let's stay on tech, but not that, a different flavor. A more important story this morning, NVIDIA and AMD agreeing to pay the U.S. government 15% of revenue from some chip sales to China. The news sending both of them into the red, but off of the lows, down less than 0.5% for both those companies. Joining us now is Bloomberg Tech co-host Caroline Hyde. The shares aren't off a lot, Caroline, but this is unprecedented. This is maybe even strange for these companies to reach an agreement like this.
Yeah, call it what you will, whether it's pay to play, whether it's quid pro quo. Many people looking in astonishment at what has just been agreed. Led by the charge, it feels that Jensen Huang went to the White House on Wednesday and came back with this sort of a negotiation, AMD playing along here too. But for Mizuho and others in the market saying 85% of something is better than 0% of nothing. And so this is only going to be a revenue contributor for the short term at least, when they start to be able to bet those H20s back into people's hands, those MI308s back over from AMD into China. I think people are seeing the positives from a revenue perspective and indeed from an American revenue perspective. Look, if you're going to be making $1 billion a quarter on NVIDIA's 15% tax rate alone, and then you add AMD on top, this is really, from I can imagine, the US government perspective, a bit of a win-win. They're able to, from their perspective, be able to track what semiconductors are still being sold to China. They're able to talk tough, but they're also able to rake in a revenue share here. So it is unprecedented, and their spillover effects are going to be far and wide, but thus far, people actually coming off of their share lows, I think, when it comes to AMD and for NVIDIA in particular.
Absolutely, and we were just having this conversation with Jose Rasco that probably the CFO over at NVIDIA did that arithmetic and came to the same conclusion. 85% is better than, you know, what it is right now, and put that into context for us, just how important the Chinese market is for the likes of NVIDIA, AMD, and what is the current state of sales when it comes to the nation?
Well, when you think about $7 billion in a quarter alone for NVIDIA, that's the power of the amount that they were shipping over to China. And I think for AMD, you saw the beating that the stock took last week on its earnings because they couldn't give us the intricacies of when they were going to be able to get MI308s back into the market, when we were going to be able to start revenue generation there. Investors care a lot about that particular end market. Now, I think the longer term perspective is, well, what does this ultimately mean for breeding competition in China? And what does it also mean for China's own pushback on this? Look, you saw the reports coming out from those that follow state media, really trying to say that they're still worried about so-called backdoors, the ability that US seem to be talking about of ultimately tracking where these chips go. China have not liked that. That's why they summoned Jensen Huang himself to come and explain about whether or not there'll be any information they don't want to be seen taken. I think longer term, China is looking for self-sufficiency. But in the here and now, of course, US wants to see ultimately it owning the tech stack in China as well as in the United States.
But Caroline, even listening to you describe how China is dealing with this, summoning Jensen Huang to the White House, I think not to the White House, to China. I think you might know where I'm going with this. And it's to the White House. Instead of China's economy and how they liberalize it moving to the US, there's flavors of the opposite happening, of the US looking more like China, summoning the Intel CEO to the White House to explain, having more controls over revenue of companies for the long term. Is that not a more troubling outlook for these big tech players?
I think everyone in the global markets, in technology, are looking in fascination at how these stories dovetail together. On the one side, you have AMD and NVIDIA going and discussing with the administration and ultimately playing by these rules and understanding that there is some ultimate pay to play here. When you look at what happened with ultimately Intel, it looks as though the memo hadn't been taken by the CEO. In fact, he was pulling back on manufacturing, on fabrication in the United States. Is this in some way, as Lynx equities have been putting in, a way for Intel to recognize and indeed perhaps pushed by the administration, but also by Apollo, for example, like investors who are investing in Intel to make fabrication units over in Ireland? Well, if they're pulling away from that, what does that mean for the companies that put in some of their own money? Do they lose out? So are we going to see people lean on the CEO of Intel to say, look, the American viewpoint here is that, and yes, he's a citizen, it might be reminded, but to keep on fabricating in the US. Don't pull away from that just from a overall profitability perspective and business model perspective. We want you to align yourself with what the grand plan of US politics is here. We'll see as to the reporting from the Wall Street Journal is Lip Bhutan is going to the White House himself to have this discussion, and we'll see whether or not suddenly some of the spigots get fired back on in Ohio and the like.
Well, you make a good point about the daisy chain, the Apollo of it all. Of course, Intel has these deep-pocketed investors who are relying sort of on Intel having a future, but Intel also needs the White House, needs the U.S. government. When you think about the various, investments that they've gotten
Chips
from...
Act.
Exactly.
$8 billion or so, and actually you heard from Pat Gelsinger. He came on Bloomberg TV network when he was still in control, frustrated that he wasn't able to get the money out of the then Biden administration to be able to be building and hitting the quotas that he needs to meet to be able to get the money in return. Yeah, you are going to hear basically more and more CEOs perhaps read into what's just happened, and investors and analysts are putting this out, that you do need to be close to the administration if you want your businesses to do well. And maybe that's something that Lip Bhutan is learning the hard way at the moment.
Apple, a case study there. Caroline, great context. Really appreciate that. That is Bloomberg Tech co-host Caroline Hyde. You can catch more on BTech at 11 a.m. today. But don't go anywhere, because coming up next, Bitcoin and other cryptocurrencies surging as more institutions buy into the industry. We'll discuss next. This is Open Interest.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Welcome back to Open Interest. Let's take stock of this rally. We are 20 minutes into the session, and I call it a rally, and maybe that was generous. You do have green on the screen when it comes to the S&P 500, a little bit more when you take a look at the NASDAQ 100, but small moves overall. We're at record highs right now. We know we have a lot to get through this week between the economic data and the earnings coming up, but you can see that we're trying to hang on to gains here. I will have a lot more to talk about when we take a look at some of the individual movers right now. NVIDIA, AMD really in focus right now on reports that maybe the U.S. government will get 15% of their China chip sales. You can see investors trying to make sense of that. These names were down pre-market, now edging a little bit higher. A lot of focus on Intel as well, with the CEO reportedly going to meet with President Trump at the White House today. Intel shareholders seem to like that. Micron boosting its outlook. Again, a lot going on when it comes to the chip space, and you add it all together, it looks pretty good right now. But we also want to talk about crypto here. Bitcoin at fresh all-time highs, similar to what we're seeing in the stock market, Danny. And as you might expect, these crypto equities, Circle, Coinbase, also rallying very hard to start this week.
Yeah, they are, again, as you say, Bitcoin up there at all-time highs. Institutional investors, corporate treasury, they are all adding to their exposure. Year to date, we're up just under 30%. Bloomberg cross-asset reporter Isabel Lee joins us now with the details. What are the details? Do we know the details? I mean, sometimes this thing rallies and we're like, okay, yeah, sure, Bitcoin's up again. What's driving it this time?
Actually, yes, I was like, whoever knows. But I feel like it's a perfect storm. You have digital asset treasury companies, ETF flows, my favorite topic and Katie's favorite topic, and just really a pro-crypto administration. On top of the stable coin bill, it's like really just a perfect environment for Bitcoin. And you see risk assets also edging higher, and we know that they're correlated. So Ether also, the second largest coin, is also in the green. So really lots of things to excite the crypto market.
I feel like I'm stealing this joke probably from Joe Weisenthal, but whenever crypto's up like 5% or something Bitcoin, it's like, oh, I guess they must have reported really good earnings, right? This must be a fundamental story. Perhaps not, but it is a supply and demand story. You mentioned ETF flows. Let's go right there. There is a lot of demand for this asset class.
A lot of demand. You see ETHA, the largest Ether ETF, and IBIT, the largest Bitcoin ETF, both by BlackRock, really just seeing inflows after inflows. Inflows drive price. So, of course, those feed into each other. And we also have the news that crypto might be in 401ks. So a lot of people are excited. You have really bullish financial advisors saying you can put as much as 15%.
That's a lot.
That depends on your risk tolerance, but more conservatively, some say, like I think BlackRock has said 1 to 2%. So again, that depends on where you are in the whole risk spectrum. But can you imagine Bitcoin being in your 401k? So obviously, whenever Bitcoin is up, my Twitter feed lights up, or my X feed lights up. And when Bitcoin is down, it's kind of quiet.
The future is now.
The future is now, and maybe terrifying. I don't know, Isabel, how many details do we actually know about adding crypto to 401ks and what protection there might be and just how big that demand could really be?
For now, we have the directive by Trump, but it still remains to be seen. Like, how are you going to do that? It's a very, very volatile asset class, but we do know that we have the backing of big people like Eric Trump, the son of Donald Trump, who, by the way, over the weekend said, oh, it's a good time because Ether is high up. So you really see a lot of big push there by institutional investors, and you can see how intertwined a lot of these insiders are, including Trump's family, with the crypto industry. So, I mean, you can make your own inference, but then it's really a lot of animal spirits going up. But also, I feel like it raises the question of what is Bitcoin in a portfolio? It's not really a haven play anymore because it behaves more like a risk asset. We have some articles saying Bitcoin is up because risky assets are up.
Yeah, I don't know if anyone is necessarily buying Bitcoin as a hedge versus sort of a place to find some alpha, but you do make an interesting point when you said that, you know, some financial advisors are saying put up to 15% of your portfolio in crypto. You have to wonder where you're taking that 15% from. Is that coming out of your stock exposure, alternatives? Is that coming out of bonds? It's an interesting question.
I feel like for now, it's still kind of seen as a digital gold when it doesn't really behave like gold. We have Bank of America in their fund manager survey saying that just 9% of investors have exposure to crypto. And I looked at the word just, so maybe they expect it to be higher because in an alternate universe, you would think 9%. So it really depends how you look at it, half glass full or empty. But I guess it has more runway to grow if it's just 9%.
Yeah, there's certainly a lot of people who would say as much. Isabel, great reporting. That is Bloomberg's Isabel Lee, with the latest on what's going on with Bitcoin, and there's certainly a lot. Let's check on stocks, though, and what's going on there, though. It's not a lot. The S&P 500 pretty much unchanged at this moment. Same story if you take a look at the NASDAQ 100. The Russell 2000 up a little bit more. It is going to be an interesting week. You think about the fact that we have CPI tomorrow, all eyes on that September Fed meeting and the finite amount of data we get between now and then.
I just wonder how much CPI can derail this rally, because when you had a weak jobs report, we are still in this regime of bad news being good news. We cheered that we're going to get cut, so if CPI comes in hot, does it derail all of the all-time highs that we are slowly melting up into?
Well, we know we're going to get real-time reaction from the president on social media, so that will
That's for sure.
Certainly be interesting as well. Coming up in the next hour, I'm pleased to say we have Banrian's Shanna Sissel talking about crypto in your 401k. Excited to continue that conversation. We'll also speak to the CEO of Barrick Mining on that possible gold tariff. A lot of question marks there. And we'll discuss the tariff hit on small businesses with the CEO of Zero. This is Open Interest.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience streaming live on YouTube. Head over to youtube.com and search Bloomberg Live Radio. That's where you'll find us. Lisa Mateo, Paul Sweeney in with you for the Bloomberg Intelligence Program. In just moments, we're waiting on an appearance by President Trump, who'll be making some comments on crime in Washington, D.C. from the White House press briefing room, and we will bring those comments to you live when the president begins. And we're also going to talk to Ed Ludlow, Bloomberg Technology co-host on NVIDIA and AMD. They're paying 15% on China AI chip sales in a deal with the United States. So a pretty unique situation there. We'll break down the reporting there. Carol Schlief, Chief Market Strategist at BMO Private Wealth, will join us to talk about the market. Mike McKee is going to join us. He's the International Economics and Policy Correspondent. About the economic news, we're going to get a lot of inflation data this week. We'll get a little bit of a preview there. And Holly Frum, Bloomberg Intelligence litigation analyst, will give us the latest on all things on the tariff front. So a lot going on over the next couple of hours. But right now, let's go to Charlie Pellet and get a Bloomberg Business Call.
Hi, thank you very much. Welcome back, Paul Sweeney. We're looking at a record right now with the Dow, the S&P, NASDAQ all advancing. S&P 500 index at 63.93. That is a gain this Monday morning of about 0.1%. This Bloomberg Business Flash is brought to you by IBKR. Will August 2025 be the warmest August on record? At IBKR Forecast Trader, the yes was recently at 36%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is September 11th. The Dow up 20 now. That is a gain of just about 0.1%. We've got NASDAQ up 20, an advance there also of 0.1%. Our Mag 7 index, though, on the minus side, little change, down under 0.1%. 10-year at 4.27%, with the 2-year 3.76%. Gold is tumbling 1.2%, 33.57 the ounce, while West Texas Intermediate crude right around 64 a barrel, up today by just about 0.6%. As for the market backdrop, specifically the record-breaking bull run that we have seen, is the party drawing to a close? That question this morning for Callie Cox, Chief Market Strategist at Ritholtz Wealth Management, who was a guest on Bloomberg Surveillance.
We think that we're in the later stages of a bull market, at least, from a bird's eye view when you're looking at the economy. If you have a slowing job market and not a lot of policy support or flexibility, then, chances are there's going to be a lot of pressure on future growth. But that doesn't necessarily mean you need to run for the hills. You just have to be a little more thoughtful in where you're putting your money.
Callie Cox of Ritholtz interviewed here on interviewed this morning on Bloomberg Surveillance. At this hour, Intel CEO Lip Bhutan set to visit the White House after President Trump called for his removal last week over ties to Chinese businesses. That, according to the Wall Street Journal, Intel shares, they're up by 4.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Appreciate that. As Charlie was just reporting, we got a little bit of green on the screen. Not going to overdo it here, but let's take a look at some of the stocks on the move today. I'm Paul Sweeney with Lisa Mateo, and we're joined by Bloomberg's Tatiana Darrier. Tatiana, what are you looking at today?
Let's start off with NVIDIA and AMD.
AMD. Those stocks are on the move after the companies agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government for export licenses. And we're seeing sort of divergent reactions. NVIDIA lower by about 0.5%, AMD higher by about 0.5%, because this is a really sort of a mixed story when it comes to immediate revenue, right? It's better than an outright ban, which we have seen in April, but it caps sort of the revenue boost because you'll have to give away 15% of it to the U.S. government. The deal raises a lot of eyebrows on Wall Street. Obviously, it's an unusual agreement. It is making a lot of people nervous, and there's still a lot of uncertainty about how China will take it. Analysts saying that Beijing, which has grown increasingly hostile to the idea of Chinese firms deploying the H20 from NVIDIA, is unlikely to warm to the idea of a chip tax. But when it relates to the revenue, it is a significant portion of their revenue. China is about 13% of NVIDIA's total sales, while 24% of AMD. So the potential there ranges from somewhere between 3 to 5 billion for AMD or 5 to 7 for NVIDIA. But there's still a lot of uncertainty of how much of that they can actually generate in the near term.
Thank you for breaking that down, because I was wondering how much of a percentage is that. So we stick with chips. One of the best performing chip stocks this year, Micron, their shares are doing better.
Micron Tech, up about 4% right now. This is the maker of a high bandwidth memory, a sort of key component in AI computing used alongside NVIDIA processors. And they came out and raised their fiscal fourth quarter revenue and earnings outlook, citing improved pricing as demand for AI remains robust, but supply is constrained, which allows them to raise pricing. And this comes as a relief because Micron disappointed investors back in June with its outlook that fell short of expectations. So this is when they reported earnings. Today, they're kind of coming out with disclosures in regards to a conference they'll be attending, and they're coming in with this more bullish forecast, which is relief for investors. Shares up about 4%. Your ticker is MU.
That's tech story, the AI story, it's in full force. I don't think, it just hasn't lost anything, in my opinion. I don't know.
The AI theme leaves on.
Exactly. All right, Tiffany Brands, little blue box thing.
Tilray Brands, actually.
Tilray,
We'll be looking at cannabis stocks, yes, because an important story there for them at Tilray. Your ticker is TLRY, up about 21%, and its peers, Kronos Group and Canamy, are also up a similar amounts. This is after a Wall Street Journal report that President Trump is considering reclassifying marijuana as a less dangerous drugs. And the reporting comes from a fundraiser at Trump's New Jersey Golf Club earlier this month, where he sort of hinted that he was interested in change. This would obviously be a big milestone for cannabis companies, which have been lobbying for this for a long time. As a reminder, marijuana is legal at the state level, in some states illegal at the federal level, and these companies have been lobbying very hard to reclassify it to a Schedule III drug, which wouldn't make it totally legal, but it would make it subject to less restrictions. So would be a big milestone for cannabis stocks here.
Weed.
If true.
Weed stocks. Very good. All right, Daria, Tatiana, thank you so much for that. Tatiana Daria, she covers all the markets for Bloomberg News. And remember, folks, for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. One of the names that Tatiana was talking about was NVIDIA, AMD, these companies, chip companies, cutting a deal potentially with President Trump to pay 15% on China AI chip sales in a deal with the U.S. government. And I can't recall seeing similar type deals before, but let's get the latest on this. Ed Ludlow, he covers all the technology stuff for Bloomberg. He's out there in London, but he's back home in London right now. Ed, thanks so much for joining us here. Can you break down kind of this deal for NVIDIA and AMD? How did this whole thing come about?
Yeah, I mean, it's an unprecedented arrangement if you consider it simply an export tax. You know, what we understand from sourcing is like this is a quid pro quo, that export licenses for NVIDIA and AMD to be permitted to sell a specific chip. that each of the companies had designed for the Chinese market, they will give up 15% of future revenues. And, you know, the math's important. You know, historically, those numbers you were going over in the past segment, prior segment, 24% for AMD, 13% for NVIDIA, those are from the last fiscal year. And the state of play has been that NVIDIA and AMD have not been allowed to sell product directly into China. They haven't done. You know, NVIDIA is the only company that's commented on this reporting and story, and they did so very purposefully, saying we have not yet shipped any of our so-called H20 chip. But, you know, the market, in one hand, sees this as really positive. You know, they have been campaigning to be able to sell into China. And on the other hand, you know, there's a cautionary tale because they'll pay a levy on it, you know, in the billions of dollars on a fiscal year basis. And China may have something to say about it. But this is all according to people familiar, of course.
Hey, and what could this mean for NVIDIA and AMD pushing, I mean, even deeper into the Chinese market?
So NVIDIA in particular, Jensen Huang, the CEO, has been very consistent that it's important to have access to the Chinese market because 50% of all of the research in the world that goes into AI is either being done in China or it's being done by a Chinese national. You know, there is a deep research, R&D, development footprint, call it what you will. And if you look at the sell side reaction this morning, the analysts all back Jensen on this line of argument that if you're not allowed to sell American technology into China, you're handing that market over to a domestic champion. In this case, it's Huawei. And that's not a new warning. Jensen Huang has come on Bloomberg Television and made a very explicit warning on that. Behind closed doors, as we've reported, he's met with President Trump in the White House and discussed that. But before all of these restrictions came into place, the important bit was that China was a really big end market, and the policy of the current administration kind of took that away with immediate effect from, in NVIDIA's case, America's most important technology company. They would love to be getting back to booking billions of dollars of revenues on a fiscal quarter basis. But the really key, they're not yet currently able to. This reporting around a deal that would allow them to is very interesting, but again, unprecedented.
It seems like there's a thread here, if you think about President Trump and his ability or willingness or need to generate revenue from some of our exports from the technology companies, whether it's a direct investment by Apple into U.S. manufacturing or these export type taxes here. Is this kind of a theme that's developing in Silicon Valley?
The administration loves big round numbers, especially when it comes to investments by technology companies into domestic operations. The thing about this specific piece of reporting, 15% of China-specific revenues, is you can model for it. You know, Paul, you know better than anyone, the sell side must be having a field day this morning because they can start doing the math and they'll say, okay, in the most bullish scenario, NVIDIA might book $7 billion of revenue in fiscal 2Q 2026. Oh, my goodness. America's going to book $1 billion of tax or $1 billion of cost on that. And so, you know, the president is getting it done his way. But, you know, the question that we don't know and we don't have the reporting on it is whose idea was this? The companies themselves, or was it some deal making by the president? You'd expect that giving up 15% is better than having zero, and they'd rather have that China market access.
So how is China expected to react to all this?
So in two different ways. There is the concern that is emerging out of China that having American technology come into the country in the form of a high-performance GPU or an AI chip gives some security risk to China's national security because of the accusation that NVIDIA and AMD have engineered some sort of backdoor access into that technology, something that both companies dispute and refute unwaveringly. So that's the first part. And then you go back to the domestic champion bit. You know, the H20 in NVIDIA's case and the MI308 in AMD's case were specifically engineered for the Chinese market to make compromises to both sides. They're very low performance chips relative to what is at the cutting edge for both of those companies. And Huawei is the leader in China, domestically speaking. It has chips that are better than those chips that our American companies have for export. So they also don't want to give up some of that momentum. And it will be interesting to see, because you guys probably will have seen what's going on with lithium and CATL in the markets this morning as well. This has become a point of bargaining and negotiation between two countries. Technology going into China in exchange for raw materials going the other way. But there are pros and cons that each side's weighing up, and it's not a perfect swap right now.
So, we have any sense of timing here, Ed? This kind of came out of nowhere. When do we think this can be implemented?
Yeah, really great question. It did kind of come out of nowhere. And again, AMD have not commented publicly on this. NVIDIA put out a very purposeful and pointed statement. They don't address the 15% at all. They're neither acknowledging it nor denying it. But they do say we follow US rules, which they say every single week at the moment. But there's a part in the statement that says we haven't shipped H20 to China for months, but we hope export control rules will let America compete in that market. So that makes it sound like they're saying just to Wall Street, don't model this into your top line assumptions just yet. But we think that we're getting closer for sure.
Now, you mentioned timing. So, I mean, the U.S.-China trade truce, that's expected to expire tomorrow, correct?
Yes, but again, you know, hey guys, give me a break. I'm in London, usually San Francisco technology focused. I ain't covering this White House necessarily, but the point is that semiconductors have had an ad hoc arrangement, haven't they? Not just in the context of China, but in other markets as well. India and electronics has been one. And what's so interesting about NVIDIA and AMD and semiconductors is that we have so much reporting about the rest of the technology sector where American officials have been flying around the world saying to our trade partners, don't do business with China, except in the case of chips. So, you know, the deadlines, I think the president's talked about being extended in various cases anyway, but it is, pardon the pun, but that's where we stand. AI chips are Trump's bargaining chip, right, and what he wants to achieve with China.
So, Ed, when you talk to people in the Valley, are they just saying, this is the new world order, we need to be open to cutting deals with this administration, again, whether it's a commitment to invest in the U.S. or, you know, paying a tax? Is this kind of the new world order, do you think?
Yeah, it's a difference between the companies that are zigging with the president and those that are zagging against the president. You know, Intel is a good example of that. You know, the reporting is that Intel's CEO will be headed to the White House to get a good old-fashioned dressing down today. You know, their strategy has not been in line with what's happening with NVIDIA and Apple, which is we're committing, Mr. President. Here's hundreds of billions of dollars. Actually, those numbers are worth looking at with a microscope. They're a little bit sort of made up. But, you know, that's kind of what corporate America's got on board with. But with the Huawei example really quick, as I look over my shoulder to see where the president's at, it's not just that if you don't sell American tech into China, they won't use it, they'll use Chinese tech. China wants to sell its tech into international markets as well. And so, you know, the position of the Valley is flood the world with American technology and just drown out the competition wherever it comes from.
Ed, thanks so much for joining us. Always appreciate getting a few minutes of your time. Ed Ludlow, Bloomberg Technology co-host, joining us remotely from our London office there in Queen Victoria Street in the city of London. EcoGo, another big week of economic data. This week, the focus is in part on inflation. CPI data out tomorrow, PPI at the producer level out on Thursday. Let's get a little bit of a preview. Michael McKee, he is International Economics and Policy person for Bloomberg. Are we going to see inflation this week, Mike? We haven't really seen it too much at this point.
Well, it's not just whether we see inflation, because the forecasts are we'll see a little tick up in inflation. A big tick up would worry the Fed. A little tick up is something to keep an eye on, but it's going to be underneath the hood to look at what categories show increases and to see if we are seeing both goods prices that are tariffed go up in price and to see whether service prices are still going up at the same rate, because if goods prices start to go up again, then, you know, that's all going to contribute to inflation. So at this point, it's going to be a matter of parsing the data rather than having it smack you in the face. I say that, though, given that the jobs report smacked us in the face, and we were going to parse that one, and it just happened.
Yeah, that was a little bit surprising. And then you move from CPI to PPI on Thursday. What catches your eye? What are you looking for?
Well, there you're going to look a little farther down the production chain and see if intermediate goods, the things that companies use to make other things, parts, a widget maker who sends the widgets onto a machinery factory kind of thing, see if those are going up in price, because a lot of the stuff that's made out of steel would already be going up in price because of the steel tariffs, that sort of thing. Again, with both of these indicators, it's not likely to be a huge increase because the tariffs just started last week. On the reciprocal tariffs just started last week, and we haven't had the semiconductor or pharmaceuticals or all those things. You might see some companies trying to raise prices ahead of time just to get ahead of the game, but we still have yet to see the full impact.
And then on Friday, we'll get retail sales. I'm looking at it, the control group, up 0.4%, a little bit less than last period, but still, I don't know, pretty darn good on the retail sales. Consumer seems to be in okay position. Would that be?
Well, we had Amazon Prime Days.
Well, yeah, that's one of the big things is the Prime Days, and then Walmart and Target and everybody matches those prices, and so in the middle of July you get a consumer bump. Now, retail sales are recorded in dollar values, so if there were big discounts, you might not see as much of a move as the number of people who actually went to the stores, but you should see a bump in July. Now, they've been doing this for a few years, and in theory could seasonally adjust for that, but we've seen that seasonal adjustment's been a problem coming out of the pandemic, so I wouldn't guarantee that would happen. I think that we may see a bit of a bump. It'll be interesting to see in what categories. What were people buying? Were they buying staples? We know gasoline went up in price, so we'll see some gasoline impact, and you sort of discount that, but were people buying gardening stuff at Home Depot and Lowe's, or are they buying clothes? It's a little too early for back to school. Were people maybe flying out to golf courses? Anybody we know?
It's never too early for back to school. My daughter sent her list already to me.
Oh, really?
Thank you. So that all ties into Fed interest rates, of course. But then you have Fed speak, too. You had Michelle Bowman saying she favors, 3 interest rate cuts this year. So how does that play into what other Fed speak we've heard lately?
Yeah, well, after the jobs report, we saw the odds of a September rate cut go up to something like 90%. They've dropped off a little bit to something like 85% this morning. Look at the end of the week after all these numbers, and we'll see whether that holds, whether if we got a bigger increase than expected in inflation, you might see close to 100%. If we get a weak inflation report and you get a stronger retail sales report, then the odds might go down a little bit because people feel the economy isn't so quickly needing a rate cut. I don't think it'll change too much, but the jobs report reminds us that you could never tell.
Next week, you'll be heading out west, I presume, to Jackson Hole. What's the scuttlebutt about what Federal Reserve Chairman may do?
I live by Horace Greeley's command to go west.
Yes.
Well, it's going to be interesting to see what Powell ends up doing, because they have been working on their framework review for how they make monetary policy for some time now, and the word was that he might use Jackson Hole to lay that out. But if there's all of a sudden an economic tipping point, crisis point, or even something that's really got the markets focused, he may be forced to do some kind of triage by talking about where he thinks the economy is and what the Fed might do. Now, I don't think I'll guarantee you this. He's not going to say we are going to go in September and cut rates, but he might sound more open to it in the way that some of the other Fed governors have in the past week, besides Mickey Bowman and Chris Waller, who still want to cut rates. Some of the others have sort of gotten on board, as I put it, in the mushy middle, that, yeah, well, we could maybe if the data pushes that way.
And where are we as far as Fed Chair Jay Powell's position? I mean, it's a Monday, so who knows? A tweet could have came out over the weekend. I mean, what's the latest?
You got to check every day.
Yeah.
It looks like the president is going to just leave him in place and continue to insult him at a regular basis. And now the focus will be on whether they can get, or how quickly they can get, Stephen Myron confirmed for the open Fed seat. I don't think they can do it by September 17th. It would be.
So tell us about this guy. What
Congress
you mean about Stephen Myron?
Well, Myron is a guy who, he's a Harvard PhD, and he's written some controversial things, including a call for completely remaking the Fed to give more power over the Fed to political actors, which is, of course, something the Fed hates the idea of. And he's the guy who came up with the Mar-a-Lago Accord to weaken the dollar and get the rest of the world to pay for it. But he also was quite hawkish. And last year, when the Fed cut rates 50 basis points in September, he was very much against that and saying the Fed needs to keep rates up and get inflation down. Obviously, how you view things depends on where you sit, and he now sits at the right hand of the president, and so his views have adopted the president's views. So his confirmation hearing could be kind of interesting. I would imagine Republicans would confirm him in any case, but Democrats will certainly ask some interesting questions.
Now, what about, I know Michelle Bowman was talking about a couple of things too, but she also mentioned a community bank conference. So where are we as far as bank regulations? I mean, what is this conference exactly?
The community bank conference is, these are things that they have every year, and they are, at this point, her point was they're communicating with the community banks. We've been through this process of trying to increase bank regulation that went on under the former vice chair, Michael Barr, and he was going to be very strict and raise capital requirements for the biggest banks, and they were going to just bring more regulation into it. Now the policy has changed, so they had to pull back the regulations they had issued for comment, and they're going to be putting out new ones for comment. And one of the things that concerns the small banks is that we're small banks. We don't take the big risks like everybody on Wall Street does, and it costs a lot to do this compliance stuff. So we needed to sort of have the rules be different for us. And Michelle Bowman, being the community bank representative on the Fed, agrees. And so there's going to be a lot of change in what the regulations are. And most people are going to be looking to see what happens with the biggest banks and where they will settle on the idea of the additional capital requirements for the big risk-taking banks. And then the other question is, when will we see something? Because this has gone back and forth for a while.
All right. Mike McKee, thanks so much for joining us. Michael McKee, he's international economics and policy correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. We are waiting for President Trump. He's scheduled to hold a press conference on crime in Washington, D.C. This press conference is all set to take place from the White House press briefing room. We do have a shot of the press briefing room, and the press is there. The podium is set up. We're just waiting for President Trump. So when he emerges, we will bring that to you live. But right now, let's get a little bit of a reset on these markets. We'll go with Charlie Pellett in a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. Little change right now on the S&P 500 index. Yes, at a record up 1.6390 where we stand. That is a gain of under 1/10%. Dow Industrials, though, turning lower since our last update, down 99 now for the Dow Jones Industrial Average, a decline of 0.2%, while NASDAQ is up 0.1%. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. The 10-year, 4.27%, with the 2-year, 3.76%. Gold down 1.3%, 33.55 the ounce. West Texas Intermediate crude flat on the day, 63.88 a barrel. Bitcoin now at 119,912 for Bitcoin. That is a gain of 1.3%. Just getting word from AMD. It is confirming it has received China AI chip export licenses. AMD shares Advanced Micro Devices up 2.7%. NVIDIA right now higher by 0.5%. And Micron Technology has raised its fiscal fourth quarter revenue, earnings, gross margin, and operating expense outlook, citing, quote, improved pricing, particularly in a key memory product category. Right now, we got Micron up by 5%. So recapping, the Dow lower, S&P little changed, up by 3 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. As always, Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. We are awaiting President Trump. He is scheduled to hold a press conference on crime in the District of Columbia specifically, and that's going to come from the White House press briefing room. And it was scheduled for 10 a.m. Wall Street time, but I guess when you're president, you can kind of do it whenever you want. So we, along with the assembled press corps in the press room, we will await President Trump, and we will bring those comments to you live when he emerges. Let's talk about these markets here. I'm just looking at the S&P 500 and the earnings performance for this quarter here. You know, up 11.3%. That's pretty darn good. But let's remember, folks, I think companies took down their estimates and analysts took down their estimates pretty significantly once we saw the beginning of the tariff situation back there in April. So it's kind of setting expectations low and then exceeding them. I don't know. Carol Schleif, she does this stuff for a living, Chief Investment Officer, BMO Family Office. Carol, how are you viewing earnings? Again, the headline is earnings grew kind of double digits, but expectations were kind of low here. What do you make of it?
Well, expectations were low, and we've been calling for this ever since the first quarter when we saw companies pulling guidance or bringing it down or giving us multiple scenarios to deal with. I mean, all of that was really trying to do what company management should be doing, is figuring out how to adapt and dodge and weave. And they've done a really good job of it so far, because as we all know, the headlines change minute by minute, and especially over the weekend. And so there's lots of different stuff for them to keep track of. And companies, by and large, are doing what they can. Now that we've got a bit more clarity, at least to frameworks and the way things are going to go and the way deals are being cut, and the One Big Beautiful Bill Act being passed, companies have more ability to be able to guide both investors, figure out what they're going to do with tariffs, as well as figure out what they're going to do with policy. So it does tee up a stronger second half, hopefully.
Yeah, and companies also giving a lot for AI spend. I noticed that's one of the themes that you say you talked about. What surprised you the most about how these companies are spending in AI?
I think the interesting thing is to remember, because there's a lot of people that are really nervous here, especially long-term clients and long-term investors who lived through the dot-com bubble. And it's really important to remember that these companies are self-financing. I think the thing that's really interesting, one of the things I want to probe into more deeply in the piece I write for this week, is that the big are getting bigger, and they're gobbling up a lot of the small companies. So it's tougher to be a small company unless you're the bait, if you will, in terms of prepping yourself to be bought by one of the big companies. So watching those big companies spend the way they are, sooner or later, they have to continue to show in more vehement fashion, if you will, that they're profiting from all of that. And some of them are showing indications of that, how they're working it in. But the U.S. in general is going to benefit once we get that infrastructure up and we all have access to it.
Carol, we're having the markets hit seemingly daily all-time highs here. How concerned are you about valuation here?
Well, the interesting thing is it's also important to remember that valuation is a poor timing tool. You know, that stocks, industries, markets can stay overvalued or undervalued for significant lengths of time. And the spending that's happening and the earnings that are coming through from it is being self-financed so far. So that's an important thing to watch. And markets are going to be very headline driven because of the fact that valuations are full. They're not necessarily egregious. And it is important to remember, too, that you've got S&P 500 in aggregate margins close to all-time highs as well. And so balance sheets are in good shape as of yet. We've seen some companies start to intimate, if you will, that they'll be accessing credit markets to help support that in a lower rate environment. But investors are also looking at the fact that whether it's September or later in the year, you've got a Fed whose likely next move is down 25 to 50 basis points.
Yeah, and a lot of that has to do with economic data, too. Big reports coming out this week. CPI tomorrow, PPI Thursday. We even have retail sales Friday. We were just talking about our Michael McKee with this. What are your expectations, and how do you think the markets are going to react?
It's tough to put an expectation out there. You know, we all thought we had a labor market in pretty good balance, and it turns out it was a little more fragile than we even thought. And so watching those CPI and PPI, and that could definitely introduce some volatility into the markets. We would expect that you're going to see less of it translate through to CPI because companies know consumers are really exhausted from the price levels that they've been paying for the last 5 years. Inflation aside, they're exhausted by the price levels. The PPI, it'll be really interesting to parse through that and see who's already eating it, because many of them told us they laid out the amount that they're already paying in tariffs, and that was before the final numbers are set.
We're seeing a lot of companies, most recently Apple, say they're going to increase their investments in manufacturing in the United States. A lot of people say you need to get on this infrastructure bandwagon. How do you guys think about that?
We like the infrastructure play and have for a very long time. We actually were early on it for different reasons under the Biden administration when you had various bills and acts passed to support that. But if you've driven any of these northwestern or northern cities in the summer, it's definitely the season of construction everywhere. And there's a lot of roads, bridges, things going on. And there's obviously, with all the data centers we're putting up, you can't put them up in a vacuum. You have to hook them to a grid or create something local that's going to feed those data centers. And so that activity is not likely to cease. And when you actually parse out and look at the charts in that, the data center construction has continued. The other private sector spending on manufacturing and infrastructure leveled off, waiting for some of this clarity. And now we've gotten more clarity, particularly from the One Big Beautiful Bill, which added some benefits for domestic construction.
All right, so infrastructure, yeah. So what are you less fond of?
Probably less fond of some of the consumer staples, because I think, like they have done in prior, it's tough for them to be able to pass price increases on, and yet their cost of goods is going up, whether it's cocoa for a lot of those companies, from things that aren't tariff related to all of the tariff related inputs, even the packaging that they're putting it in. So it's tough for the consumer staples companies, and it can be kind of tricky for some of the others. And one of the things we're keeping an eye on is some of these services companies, because you're seeing tangential blowback, if you will, in services spending. That's because if you're trying to preserve margins, you're going to cut back a lot of any area you view as discretionary, and that tends to be some of the services and consulting and things like that that come through for companies.
Hey, Carol, just from a short-term trading perspective, August, September, maybe even October tend to be kind of volatile months for the market. Do you worry about that at all?
Well, I think the important thing to remember is our lens is taxable individuals and those individuals in the highest tax brackets. So yes, we give them heads up that these are notoriously volatile months, August in particular, because it tends to be really light volume. So a random headline can push the markets around, particularly when they come on Fridays, because a lot of people are on vacation and Congress is out. And so the headlines are likely to be come from nowhere. So we warn people about that. But if clients were to move to the sidelines for a couple months, you're talking about a 30% kind of tax hit all in, and then they have to be right about getting out and getting back in. And many of our clients have been with us for such a long period of time that they see through that. They're willing to understand that volatility is there and look through it as long as the fundamental underpinnings are there. And we just have finished up a really solid earnings season. So far so good on the fundamentals being there.
Hey, Carol, so you talked about earnings season winding down, but there's still a few more big names for earnings. Who are you going to be keeping an eye on next? I mean, I think NVIDIA is at the end of the month.
Yeah, obviously NVIDIA, and just there's a few major names that give us ideas, but we do have the bulk of them in, because we have close to 90% of them in as of late last week. I was running the numbers on, I think, Thursday afternoon or Friday morning, and the numbers have surprised. The nice surprise has been on both the revenue and the earnings line, and watching that continue. And now we'll be watching, obviously, because they report a month off, all the retailers will start to come, and there'll be a lot of
Carol, President Trump is coming to the podium, so we're going to say goodbye to you. Carol Schleif, Chief Investment Officer of BMO Capital Markets. Go down to Washington, D.C., President Donald Trump speaking.
Oh, ballroom. This is really a lot of people, most I've ever seen in this room. And we're here for a very serious purpose, very serious purpose. Something's out of control, but we're going to put it in control very quickly like we did on the southern border. I'm announcing a historic action to rescue our nation's capital from crime, bloodshed, bedlam, and squalor, and worse. This is Liberation Day in D.C., and we're going to take our capital back. We're taking it back under the authorities vested in me as the President of the United States. I'm officially invoking Section 740 of the District of Columbia Home Rule Act. You know what that is? And placing the D.C. Metropolitan Police Department under direct federal control, and you'll be meeting the people that will be directly involved with that. Very good people, but they're tough, and they know what's happening. They've done it before. In addition, I'm deploying the National Guard to help reestablish law, order, and public safety in Washington, D.C., and they're going to be allowed to do their job properly. And you people are victims of it, too. You know, you're reporters, and I understand a lot of you tend to be on the liberal side, but you don't want to get mugged and raped and shot and killed. And you all know people and friends of yours that happened. And so you can be anything you want, but you want to have safety in the streets. You want to be able to leave your apartment or your house where you live and feel safe and go into a store to buy a newspaper or buy something. And you don't have that now. The murder rate in Washington today is higher than that of Bogota, Colombia, Mexico City, some of the places that you hear about as being the worst places on earth, much higher. This is much higher. The number of car thefts has doubled over the past 5 years, and the number of carjackings has more than tripled. Murders in 2023 reached the highest rate probably ever. They say 25 years, but they don't know what that means because it just goes back 25 years. Can't be worse. Our capital city has been overtaken by violent gangs and bloodthirsty criminals, roving mobs of wild youth, drugged-out maniacs and homeless people. And we're not going to let it happen anymore. We're not going to take it. Just like we did on our southern border. Nobody comes through our southern border anymore. 3 months in a row, we had zero. I don't know if that's right, but the people that do the work, it's a very liberal group of people, actually, and they actually said zero for the last 3 months. Nobody thought a thing like that was possible. And, you know, when you take a look at numbers, I just saw some charts. These are different cities throughout the world. Red is, okay, the red is a place called Washington, D.C. Look at these. Baghdad we doubled up on Baghdad. Panama City, Brasilia, San Jose, Costa Rica, Bogota, Colombia, heavy drugs. Mexico City, I mentioned, Lima, Peru, all double and triple what they are. So do you want to live in places like that? I don't think so. I don't think so. And I think the people in this room, if you wrote correctly, you'd see, look at the kind of numbers we have. D.C., 41 per 100,000, number one that we can find anywhere in the world. Other cities are pretty bad, but they're not as bad as that. Is that where you want to live? The reporters of the world? Juvenile offenders and crimes against persons, as they say. It's getting worse. Not getting better, it's getting worse. And we had a recent indication. There was a story about a man who was just left. He quit because he was asked to do phony numbers on crime. And we're going to look into that. I think Pam is going to be looking into that. But he was asked by the city, I guess, that we don't want to show the real numbers. Let me do numbers so it looks like it's going down. Not going down. And under Biden, it was a disaster. And nobody did anything about it. We're going to do things about it like you wouldn't believe. Every American has a constitutional right to be able to access and petition their government in safety, and countless federal officials and employees likewise have the right to carry out their jobs in peace without being shot. As you know, I lost a very good person while ago was shot, waiting for his wife. He was in the car. They robbed his car. They shot him. They killed him like it was nothing to it. She was walking to the car. It's a horror show. This issue directly impacts the functioning of the federal government and is a threat to America, really. It's a threat to our country. We have other cities also that are bad, very bad. You look at Chicago, how bad it is. You look at Los Angeles, how bad it is. We have other cities that are very bad. New York has a problem. And then you have, of course, Baltimore and Oakland. We don't even mention that anymore. They're so far gone. We're not going to let it happen. We're not going to lose our cities over this. And this will go further. We're starting very strongly with D.C., and we're going to clean it up real quick, very quickly, as they say. Days ago, a former member of the DOJ staff was savagely beaten by a band of roving thugs after defending a young woman from an attempted carjacking. He was left dripping in blood. He thought he was dead, with a broken nose and concussion. Can't believe that he's alive. He can't believe it. In June, a 21-year-old congressional intern was tragically killed after being hit by a stray bullet in a drive-by shooting. A former Trump administration official named Mike Gill, fantastic person, was murdered last year in cold blood in a carjacking blocks away from the White House. We all knew him. Great person. Waiting for his wife as she was walking to the car. A Democrat congressman was also carjacked at gunpoint not far from the Capitol. And in 2023, an aide to Senator Rand Paul was stabbed in the chest and head by a demented lunatic as he walked down the street, just absolutely for no reason. Horrifically, last July 4th weekend, a 3-year-old girl was shot in the head and killed while sitting in a car near the Capitol. It's becoming a situation of complete and total lawlessness. And we're getting rid of the slums, too. We have slums here. We're getting rid of them. I know it's not politically correct. You'll say, oh, so terrible. No, we're getting rid of the slums where they live. Caravans of mass youth rampage through city streets at all times of the day. There are ATVs, motorbikes. They travel pretty well. Entire neighborhoods are now under emergency curfews. Just this past weekend, gunfire went through, and you saw that, the Navy Yard. I saw it this morning. They saw that they fought back against law. See, they fight back until you knock the hell out of them, because it's the only language they understand. But they fought back against law enforcement last night. And they're not going to be fighting back long, because I've instructed them and told them whatever happens, you know, they love to spit in the face of the police. As the police are standing up there in uniform, they're standing and they're screaming at them an inch away from their face. And then they start spitting in their face. And I said, you tell them, you spit and we hit. And they can hit real hard. It's a disgusting thing. I've watched that for years, for 3-4 years. I've watched them. The police are standing, and they're told, don't do anything under any such, so and you can see they want to get at it. And they're standing there, and people are spitting in their face, and they're not allowed to do anything. But now they are allowed to do whatever the hell they want. This dire public safety crisis stems directly from the abject failures of the city's local leadership. The radical left city council adopted no cash bail. By the way, every place in the country where you have no cash bail is a disaster. That's what started the problem in New York, and they don't change it. They don't want to change it. That's what started it in Chicago. I mean, bad politicians started it, bad leadership started it, but that was the one thing that's central, no cash bail. Somebody murders somebody and they're out on no cash bail before the day is out. We're going to end that in Chicago. We're going to change the statute. I spoke with Pam and Todd and everybody. We're going to change the statute, and I'm going to have to get the Republicans to vote because the Democrats are weak on crime, totally weak on crime. They don't know why. They want to stop because they get mugged too. But we're going to change no cash bail. We're going to change the statute and get rid of some of the other things. And we'll count on the Republicans in Congress and Senate to vote. We have the majority, so we'll vote. We don't have a big majority, but we've gotten everything, including the great, big, beautiful bill. Got that done, and that's one of the greatest things that's ever happened to people in this country. They're starting to figure it out, how good it is. Biggest tax cut in history. So many things. But we'll be able to get that done. So, Todd, if you and Pam can draw up things working with the people, I'll get it passed. We'll get it passed with the Republicans. Probably won't get, think of this, probably won't get one Democrat vote because they have no idea what they're doing. That's why they want men playing in women's sports. That's why they want transgender for everybody transgender. And they just got walloped in an election, in a landslide, and they haven't changed one thing. I saw the other day the certain gentleman who was a very well-known politician, Democrat, was fighting like hell that men should be allowed to play in women's sport. They just don't get it. They said it's an 80-20 issue, and I think it's a 97-3 issue. And I don't know who the three are. I've never heard anybody nobody's ever come up to me, sir, you have to let men play in women's sports. You have to do it, sir. Nobody's ever approached me. I don't know where this issue even comes from. Never seen anything like it. But they turned our nation's capital into a sanctuary jurisdiction. That's the other thing. We have to get rid of sanctuary cities as quickly as possible. We're going to do it, too. We have to. Because it's sanctuary for criminals. Releasing illegal alien gang members onto the streets in 2022, nearly 70% of criminals arrested in Washington went unprosecuted. That's not going to happen with the group we have standing aside and standing behind me. And at the Metropolitan Police Department, it's now reached a small number relatively compared to what it was, but it's thousands of people. You know, we have thousands of police. I was told today, sir, they want more police. I heard a number, 3,500 police. That's a lot of police. 3,500. I thought they were going to say we only have 30 policemen or women. They said we have 3,500. We need more. You don't need more. That's so many. I'd never heard. That's like an army. How could you need more than 3,000? It just happened 2 minutes ago. Sir, they've requested more police. Oh, what do they have? About 3,500. I said, 3,500? This is not a big area. It's ridiculous. What you need is rules and regulations, and you need the right people to implement them. And we have the right people here, that I can tell you. Look at the border. Biden said there's nothing you can do. Kamala was the border czar. She never called one of the Border Patrol agents who are great. ICE is great. Never spoke to anybody. Never went there. But she was the border czar. And everybody said it was impossible to fix. I fixed it in 3 months. No, really. I fixed it the first week, but really fixed it over the last couple of months. And I mean, literally to a point where, as I said, 0 illegals entering our country in the last 90 days. Pretty amazing. It's time for dramatic action. We're going to do the same thing over here. It's going to be a very safe city very soon. We're not looking to take years, because a lot of people die in years. And we've got incredible people in this country, except we have to allow them to do their job. And that we will deliver like nobody's ever delivered before. I actually think it's easy. You know, if you're competent, it's easy. If you're incompetent, it's impossible. But I'm very competent. Last week, my administration surged 500 federal agents into the district, including from the FBI, ATF, DEA, Park Police, the U.S. Marshal Service, the Secret Service, and the Department of Homeland Security. You know, a lot of nations, they don't have anything like that. They got some police, and they're rough police. They don't have DEA, ATF, FBI, Park Police, the U.S. Marshal Service, Secret Service, Department of Homeland Security. They got some police, but they're rough police, and they do their job. They don't have crime. We're not going to have crime either. They made dozens of arrests, and that's what It's what starts to happen. Again, cashless bail. Watch what we do with that. Today, we're formally declaring a public safety emergency. This is an emergency. This is a tragic emergency. And it's embarrassing for me to be up here. You know, I'm going to see Putin. I'm going to Russia on Friday. I don't like being up here talking about how unsafe and how dirty and disgusting this once beautiful capital was, with graffiti all over the walls. It's another part of it, by the way, because we're talking about safety, but we're also talking about beautification. We have the most beautiful, potentially, capital in the world. We always had. But people come from Iowa, they come from Indiana, they come and then they get mugged. Not going to happen. Keep coming, because by the time you get your trip set, it's going to be safe again, and it's going to be clean very quickly. We're going to replace the medians that are falling down all over the roads. We're going to replace the potholes. We're going to put a nice new coat of asphalt over the top. No, we don't have to rip the road out and spend 7 years building a new road because they cut everything. Because some designers said, well, we need a 1/4 inch more turn for safety reasons. No, we're going to do it right. We're going to get it done quickly. So today we're declaring public safety emergency in the District of Columbia, and Attorney General Pam Bondi, who's fantastic, is taking command of the Metropolitan Police Department as of this moment. And I'll be making the appropriate notifications to Congress and to the mayor, our new DEA administrator, who's one of the top in the country. He better be Terry. If you're not, I'm going to get rid of you so fast. Terry Cole. Terry, thanks. Very good. We just got him. Most highly recommended person. And you'll be designated as the interim federal commissioner of the Metropolitan Police Department. Okay? And you run them tough. They're good. You have a lot of good people. You have people that shouldn't be there. You also have people that shouldn't be there. They got in there because of woke. But you have a lot of great police. And those people are the ones that want to help you. This city will no longer be a sanctuary for illegal alien criminals. We will have full, seamless, integrated cooperation at all levels of law enforcement, and we'll deploy officers across the district with an overwhelming presence. You'll have more police, and you'll be so happy because you'll be safe. When you walk down the street, you're going to see police, or you're going to see FBI agents. We're going to have a lot of agents on the streets. You're going to have a lot of essentially military, and we will bring in the military if it's needed, by the way. We're going to have National Guard, but Pete Hegseth will tell you about it. We will bring in the military if needed. People say, oh, that's so terrible. He's going to bring in, it's been used many times over the years. I don't think we'll need it. I think we've got so many great people, including the people that are in the police department with proper leadership. They'll immediately begin massive enforcement operations targeting known gangs, drug dealers, and criminal networks to get them the hell off the street, maybe get them out of the country, because a lot of them came into our country illegally. They shouldn't have been allowed in. They come from Venezuela. They come from all over the world. We're going to get them the hell out. They won't be here long. But some of these people, a lot of them, are homegrown criminals. And these are bad people. These are rough people. And this is just a list of some of the people that were given to me today that were criminals removed from the D.C. streets this weekend. They were rough and tough. But we're rougher and tougher. Look at these people here. Nothing, you know. They're not going to be your local school teacher. Look at this guy. He has killed people numerous times. They're not going to be an asset. They will never be an asset to society. I don't care. I know we all want to say, oh, they're going to be rehabbed. It's not going to be rehabbed. I'm going to ask Doug Burgum to come up and say a couple of words because he's in charge, as you know. He's Interior, but he's in charge of the U.S. Park Police. And I have heard so many great things about the Park Police. They're proud of it. They've been there for a long time. Their families oftentimes grow into the roles. They love the country. They love this area. So, Doug, could you say a few words, please?
Thank you, Mr. President. On behalf of the U.S. Park Police, this is the oldest federal police force in the nation. They were formed in 1791 by none other than than President George Washington. They've got the awesome responsibility of protecting our nation's most sacred monuments. The National Mall, Washington Monument, Jefferson Memorial, Lincoln Memorial, Statue of Liberty, and out west, the Presidio and the Golden Gate area. These folks have tens of millions of visitors a year, the kind of people that President Trump's talking about that come from around the country and around the world.
All right, we've been listening to President Trump in Washington, D.C. at the White House, making some big announcements, and it's his plan to fight crime in Washington, D.C. President Trump announced that he would take control of Washington's Metropolitan Police Department and deploy National Guard to reduce crime and homelessness in the nation capital. Let's get some more reporting on this. Wendy Benjaminson, Bloomberg senior editor, joins us. Deploying the National Guard to Washington, D.C., that seems like a bold move here. What's the thinking behind it, do you think, Wendy?
Well, as the president was saying in this news conference, he is under the, quite frankly, mistaken impression that that the District of Columbia has a terrible problem with crime. He describes these caravans of youth, which is a weird euphemism, that are roaming around and beating people up and carjacking and things like this. None of the residents of D.C. are, yes, there's crime in D.C. It's a big city, but the crime is at a 30-year low. So what he has done is use the authorities that he does have uniquely for D.C. under home rule that allows him to federalize the Metropolitan Police Department, although that's only temporary. There was a law put in for the riots in the 60s and early 70s. And he is deploying the D.C. National Guard, which he legitimately controls, onto the streets of D.C. to show a big presence. And then he also talked about a lot of other changes that he's talked about over the years, getting rid of no cash bail, getting rid of sanctuary cities, and things like that.
Now, we've been hearing about this for a bit now. I mean, have we heard from D.C. Mayor Muriel Bowser's office at all about this?
I'm sorry. Could you repeat the question?
Sure, because this is something we've been hearing about for a couple of days. Have you heard, or have we heard from D.C. Mayor Muriel Bowser's office about this? Any response from them?
Yeah, she was on MSNBC on Sunday, and she did talk about how crime was at a 30-year low. She acknowledged his right to deploy the D.C. National Guard. She said she had asked him for 500 more officers or asked Congress for the Metropolitan Police Department. Trump said in this news conference that there are already 3,500 D.C. police officers. That's so many. Why does she need more? And yet he's talking about deploying the DEA, the ATF, the FBI, the National Guard, instead of letting Mayor Bowser hire more local cops for the streets.
Wendy, could you give us some local color? You're based in our D.C. bureau. What is the crime situation in Washington, D.C., and how maybe has it changed over the last period of years? As reported, it is at a 30-year low. There are areas of the city that are more crime-ridden than others. Those are not really the areas that Trump is most interested in having the show of force. He really wants it around the area, between the White House and the Capitol, which is sort of the main downtown, business and professional class section of Washington, D.C. We've seen federal law enforcement already over the weekend walking around the streets, in their windbreakers and stuff. But in that part of D.C., you just don't have the sort of rampant crime. I will note that Trump also talked about getting rid of homeless people and getting rid of what he called slums in D.C., which, in fact, I'm not even sure what he's talking about there. There are low-income areas, but the city hasn't had slums for quite a while.
All right, and you've been talking about dispatching FBI agents. He actually confirmed that they're going to be on the streets of Washington, D.C. What kind of impact could that have, having the agents there on the streets?
I'm not sure what sort of impact this is going to have, except perhaps because the need doesn't meet the actions that the White House is taking today. There just isn't. There is normal urban crime, in D.C. and the other cities he's mentioned. I will note that the other cities he's mentioned are in Democratic states. D.C. is a Democratic area. He's mentioned New York, Los Angeles, Chicago. Those are all in blue states. Crime is also up in, for example, St. Louis and New Orleans and cities in red states, and he is not talking about taking any action there.
Wendy, thank you so much for your reporting. Wendy Benjaminson, she is a senior editor for Bloomberg News. She is based in our Washington, D.C. bureau. We will return to the press conference in Washington, D.C. with President Trump when it gets to the question and answer part of that. So we will rejoin that when that occurs. Right now, let's get a reset here with Charlie Pellet.
Hi, thank you very much. Here's what's going on. Paul Sweeney recapping, resetting here. President Trump, you heard him moments ago right here on Bloomberg, announcing he will take control of Washington's Metropolitan Police Department and deploy the National Guard to reduce crime and homelessness in the nation's capital.
We're taking it back. Under the authorities vested in me as the President of the United States, I'm officially invoking Section 740 of the District of Columbia Home Rule Act. You know what that is? And placing the D.C. Metropolitan Police Department under direct federal control.
The president says the combined effort is designed to target homelessness and violent crime, stating, quote, "You want to be able to leave your apartment or your house where you live and feel safe." U.S. equity is dipping lower since our last update. We've got the S&P lower, little change, down 2 points right now, drop there of just under 0.1%. Dow Industrials down 138 for the Dow. That is a decline of 0.3%, while NASDAQ holding on to a 21-point gain. NASDAQ Composite Index up now by 0.1%. The 10-year at 4.26%, with the 2-year that's currently yielding 3.75%. To be clear, 3.75 on the 2-year. Spot gold down $51 the ounce, down 1.5%, 33.46. And West Texas Intermediate crude down 0.2%, 63.77 a barrel on WTI. TKO shares higher after Paramount Skydance acquired the exclusive rights to show all events from the Ultimate Fighting Championship in the U.S. over the next 7 years. It's a $7.7 billion deal. TKO up now by 7.5%. Again, recapping, S&P down 4, drop there of 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Charlie just reporting. We've got a mixed tape out there, but let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo, and we are joined by Bloomberg's Natalia Kenyajevic. Natalia, what are you looking at today?
Yeah, let's start with cosmetics brand, beauty industry. Like Alex still used to say, invest in your face.
Had to invest in your face,
yes. So shares of L Beauty, the ticker is ELF, are up by 7%. That comes after Morgan Stanley analyst upgraded the stock to overweight from equal weight, says that consensus is still materially low. I don't know how closely you guys watch this, but of course this upside is coming mainly from Rhodes. L Beauty acquired this business in May for $1 billion. However, this price target implies almost a 30% move up from Friday's close, but the latest earnings report was really disappointing. We know that the adjusted EBITDA margin came lower than expected. The company also declined to provide an outlook for fiscal 2026, of course, citing lots of uncertainties, including tariffs and consumer behavior.
I love all those Elf Beauty products. I'm sorry, they're in my drawer. CoreWeave, a stock to watch. Why is that?
Right. So this is an earnings preview story. The stock is up by 8%. The ticker is CRWV. Since its IPO, guys, the stock is up by more than almost by 250%. I still can't get used to these huge numbers after IPOs. However, analysts I spoke with cited lots of uncertainty for the stock. First of all, we know that the biggest challenge for CoreWeave is that it has to raise a lot more capital. During the last earnings report, CoreWeave said that it needs to deploy about $20 to $23 billion. We know that they raised about $5 billion for CapEx so far, so it means that they need to raise more debt or issue equity. And this is kind of one of the main headwinds, but nevertheless, the stock is still moving higher.
One more.
Circle, again, IPO story preview. The stock is rising today. The ticker CRCL. The stock is up by 430% since its IPO in June. Another huge gainer. So we know also that there are a mix of challenges. On the one hand, stablecoin market is still kind of developing. It is still at early stages. However, analysts I spoke with cited a couple challenges. They say that basically the main source of revenue for CoreWeave is that they invest in short-term treasuries when they get money from people who buy stable coins. As we expect that rates will go down, they will receive less on the interest rate side. However, they say lower interest rate environment usually is a driver, a speculative driver, and people invest more in crypto. So we'll see how that develops.
All right, we've been hearing a lot of Circle. Thank you so much, Natalia. For more conversations like this, you can subscribe to our Stock Movers podcast. Listen, 5-minute audio reports, the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. All right, so we've been hearing a lot about the impact of tariffs on big businesses, right? But small U.S. companies, they are really getting squeezed with President Trump's new levies. Here to break it down for us is Brendan Murray. He's Bloomberg Global Trade Editor. He's joining us from London. So thanks for joining us, Brendan. First off, I got to ask you, how much of a financial hit are we talking about?
Well, the U.S. Chamber of Commerce recently put a number on this, and they're saying that there are about 236,000 small business importers in the U.S. Now, those are companies that have less than 500 employees, and they say that if you apply the amount that they import and you combine that with the tariff rate that they would be paying, they're looking at about $200 billion a year is the tariff bill for these small importers that have to pay these new tariffs that President Trump rolled out. So that works out to about almost $900,000 per company per year. So imagine if that bill suddenly arrived on your desk at your retail shop or other small business, and yet that's oftentimes would wipe out any sort of profit margin you might have. So the small businesses are speaking to politicians in Washington through the National Retail Federation and the U.S. Chamber of Commerce, and trying to have their voices heard, because all anybody can hear these days is the stock market is ignoring the trade war, but it certainly isn't. The trade war is certainly having an impact on these small companies that don't have the wherewithal to absorb the higher costs and the higher administrative duties that they're facing now.
So, Brendan, we just finished up the second quarter, or about to finish up the second quarter earnings period, and it seems like most of the companies, when they talk about tariffs, are saying, "Hey, we're eating it in our margin for the most part." Can small businesses do that?
Not really, at least not in the long term. They are also trying to, get creative with putting a lot of them stockpiled before the tariffs took effect. A lot of them are doing things like these bonded warehouses where you don't owe the tariff bill until later on. So there are ways to kind of put off the tariff payment that you're going to owe the government, but not forever. And eventually it's going to have to be passed on to the consumer. Maybe the exporter that you buy it from will cut you a little break, but between the exporters, the importers, and the consumers, this extra cost is just going to get distributed throughout the supply chain.
Hey, Brendan, can you get a little bit into why this is so important? Because small businesses are really the source of more than half the country's job creation, right, in recent years?
Yeah, exactly. I mean, the small businesses, they're not the ones we read about in headlines all the time, but they are the ones that are where lots of new jobs are being created. And we read a lot about the big publicly traded companies that lay off tens of thousands of workers, but we've got millions of small businesses that are hiring just a couple every day, and so it is a big constituency for economic activity that's often overlooked because we think of the American economy as being driven by S&P 500 companies, when in fact it's it's these companies with less than 50 employees often that are driving a lot of the employment and investment in various regions across the country.
So I think what I'm also hearing from and seeing in your reporting is just, I guess, the uncertainty. If you're a big Walmart or just a big corporation, Procter & Gamble, you probably got teams of people who can deal with all these changing tariffs. Small businesses, I'm guessing, don't have those resources. So I guess they're just left to fend for themselves.
Yeah, pretty much. I mean, or they're calling up a customs broker or some expert who imagine if your tax you're filling out your taxes went from a one page a one pager to the IRS to 50 pages. You probably need some help figuring that out if you want to do it right. You don't want to be audited later. So this is essentially what these companies, these small businesses are facing, is all this extra administrative paperwork, electronic paperwork, but it's still, you still have to fill out the forms correctly. Otherwise, the Customs Bureau is going to come at you and penalize you if you misclassify a good under one HS code. When that a tariff applies to that, when it doesn't. So it can get really complicated, especially when 80 different countries have different tariff levels now, and then on top of that you have the sectoral specific tariffs: steel, aluminum, cars. It's coming on pharmaceuticals and chips. So it's just creating this real complex web of bureaucracy that small businesses just don't have the capacity to handle.
Yeah, and what are some, especially being hit with those higher import costs? I mean, you gave some big figures earlier. In the last 30 seconds or so, can you explain, kind of break that into detail about where those costs are coming from?
Yeah, I mean, basically, if you're an importer, you have to put up what's called a customs bond, and that is basically a guarantee. It's a type of insurance that the Customs Bureau is going to get paid down the road, and so it's a sort of like cash in reserve, and now you suddenly have to put up about 20%, maybe 50% more, and so that really kind of drains it comes right out of your cash flow, your working capital, and it can essentially paralyze your operation if you don't have that to draw on. So yeah, so if you add all of these hundreds of thousands of incidents together, what you wind up with is about half of new job creation created by these small businesses, feeling the real pain from these new tariffs.
Brendan, thanks so much for joining us. Really appreciate it. Brendan Murray, he's global trade editor for Bloomberg News, joining us from London via the Zoom thing. Well, on the media front today, we had Paramount. It's actually called Paramount or Skydance, because Skydance acquired Paramount, which used to be Viacom, which used to be, forget about it. Anyway, so it's Paramount Skydance. They're buying the UFC rights for $7.7 billion. Ultimate Fighting Championship. I'm not a fan, but I know there's gajillions of people out there that love that stuff. And they're paying a big penny for it. Let's see what it means for the company. Geetha Ranganathan joins us here. She covers all the big media companies. Geetha, does this make sense? Is this a good deal for Paramount?
Paul, it really, no one saw this coming. I mean, the Paramount Skydance transaction just closed last week, August 7th. And we were still kind of waiting for some inkling of what the go-to strategy or the go-forward strategy would be from, David Ellison's team. And here you go with a bang, paying almost $8 billion for UFC rights. Now, they are premier sports rights. So they're definitely making a big statement here Yes, you're absolutely right. UFC has over 100 million fans in the United States. Their current deal is with ESPN. They were getting paid about $500 million a year. So this is, more than 120% surge. So it is definitely a pretty penny. And what Paramount is hoping is that this really gets them onto the sports arena. So makes them a must-have platform. And we're talking here about Paramount Plus, which is their streaming platform, which is known for really some great scripted content and some sports. But this is really a big way for them to kind of make a statement, make a really bold splash on the sports streaming stage.
All right, Geetha, I'm trying to take this in stride because my husband is a big UFC fan. So he watches it on ESPN. So does this mean that I have to get Paramount Plus on top? Don't tell me that, Geetha.
Sorry, Lisa. Yes, you do. Because everything, all of the UFC content. So what we initially thought was that UFC was kind of going to split these packages. They have the fight night, which is the weekly, bi-weekly kind of, matchups that you see. And then they have their big marquee events, which are the numbered events with, the likes of a Conor McGregor, all these other big superstar players. And you got to pay out of your pocket for that pay-per-view. They're actually now making all of that content, both the marquee events as well as the fight nights, all available to Paramount Plus subscribers. So there's no pay-per-view anymore. But yeah, unfortunately, your husband's going to have to subscribe to Paramount Plus.
Thanks.
Well, I see. This is what I think you do. Every streamer you put on, you have to take one off. So go to the family. Okay, we're putting on Paramount Plus.
Yes.
What are you giving back?
What are we giving back?
Yep,
Okay,
exactly.
like
That's how you do it.
Thank you.
Geetha, the stock market doesn't care. The stock's off 1.2% today. It's at a 52-week low. What is realistically the bull case for Paramount Skydance Corporation?
Yes, I think, we really need, of course, this kind of tells us that they're definitely going to keep the streaming platforms. See, some of the concerns, Paul, before the deal actually closed, was what is Skydance really interested in? So they don't really have any expertise in running TV assets. All that they really cared about was the Paramount studio because, Skydance is a big studio and they were really, really interested in the studio assets. So we really didn't have any direction in terms of what they were going to do with the cable networks. Viacom has a bunch of those. You have the CBS broadcast network. You have the Paramount Plus streaming platform. What this deal signals is they're definitely interested in the streaming platform and the CBS broadcast network because, they did say that they're going to simulcast some of those UFC games on the CBS broadcast network. So I think that is going to be a core part of their portfolio. What we're still not clear about is what they're going to do with some of the cable networks. So, whether it's a BET or an MTV or a Comedy Central, we really don't know what the strategy is there. Chances are they might look to monetize those assets, sell them. But really, I think the big play for Paramount is going to come down to make these bigger and bigger investments. If they really want to be a credible, streamer, they have to obviously go after these big deals, which is exactly what they did today with the UFC. We'll have to wait and watch and see exactly what their aspirations are. But it depends. If they're willing to kind of make these big investments, they could become, arguably one of the top 3 or one of the top 4 platforms.
And is this just another sign of the impact of sports, live events on streaming? I mean, Apple, Netflix, YouTube, Amazon, I mean, you name it. Talk more about the impact of sports and live events on streaming.
Yeah, I'm really glad you bring that up, Lisa, because this year actually is I would say it's a watershed moment for media because this is the very first time in the history of media that you have all sports becoming available on a streaming service. So previously you needed your pay TV subscription, in order to get access to sports. You won't need that anymore starting August 21st because ESPN is actually taking all of its content.
Sorry, we have to just cut it short there. President Trump is taking some questions in Washington. We'll get to that. But thank you for your time. Geetha Ranganathan, she covers all the media stuff for Bloomberg Intelligence. Right now, let's head back to Washington, D.C. President Trump.
Well, is a direct reflection on how the country is run.
Yeah, I do. I think the Capitol, look, everyone comes here. They're all coming. All the leaders, they're all wanting to come. And I say it, I've said it again, but I'm really just quoting other leaders from NATO, from the Middle East, King of Saudi Arabia, Qatar, UAE. I was over there. We brought back $5.1 trillion of investment into our country. But a month and a half ago, I was at NATO. We had a great thing. They agreed to put up 5% instead of 2%. 2% they didn't pay, 5% is already paid. We had a great meeting, and they all said the same thing. They said our country was dead. They thought our country was gone. 1 year ago, They said your country was dead, and now you have the hottest country anywhere in the world. We do. We have the hottest country in the world right now. The tariffs have helped. It's given us not only the money, it's billions, trillions of dollars of money, but it gives us great power over enemies. We solved 5 wars with Pakistan and India. We just solved one, Azerbaijan, and as you know, in Armenia. A war was raging for 37 years. And the 2 leaders got up and they said, we never thought this would be solved. Russia tried to solve it. They all tried to solve it. It was a very tough situation, but we got it done and got it done. And I said to the 2 men, I said, are you guys friends? And they had a hard time. You know, they've been killing each other for 37 years, right? One was there 5 years, one was there for 22 years. He said, my whole life I've been fighting this war, and you got it solved. But we did many of those. We did in the Congo and Rwanda. That's been going on for 30 years. 8 to 9 million people killed that they know of, but it was raging, and we got that solved. We got a lot of them done. It's a great honor. But you want to have, when they come, the leaders come to our country to sign documents that the war is over or whatever, or for other reasons. They come for trade. And you want them to come through so beautifully. You ride down those roads, everything should be perfect. You shouldn't have medians falling down into the roadway. Median, you know, the metal things that are always, somebody had a great lobbyist, because I've never seen them look good. I've been looking at those things with the little, right? They're always broken and bad, but here they're really bad. And we're going to either put new or fix it. And it's not expensive. It's not really expensive. And we're going to fix our roads a little bit. We're going to clean up our sidewalks. You have countries where every Saturday, the people go out and they wash their sidewalks in front of their stores or their houses. They scrub their sidewalks. So we aren't quite at that level yet, I don't think. Gaddy, we're not quite there yet, but maybe we will. They go out and they scrub. I think it's so beautiful to hear that and to see those stories. But we're going to make it clean. But just to finish with your question, it's a very, very strong reflection of our country. And when they see a bad city, you know, my father always used to tell me, I had a wonderful father, very smart, and he used to say, son, when you walk into a restaurant and you see a dirty front door, don't go in, because if the front door is dirty, the kitchen's dirty also. Same thing with the Capitol. If our Capitol's dirty, our whole country is dirty, and they don't respect us. So it's a very good question, actually.
Mr. President, sorry. Question for you on the specific issue. Do you expect more cities to follow DC's path if this goes through? So the idea is that Chicago, LA, San Francisco, would they expect similar action what we've seen in DC? And the other question, sir, there is reporting that the administration is going to reclassify marijuana. Would that send mixed messages that marijuana is okay, some drugs are okay, but we're trying to clean up crime? How do they go hand in hand?
We're only looking at that. That's early, but you know, somebody reported it, which is fine. We're looking at it. Some people like it, some people hate it. Some people hate the whole concept of marijuana because if it does bad for the children, it does bad for people that are older than children. But we're looking at reclassification, and we'll make a determination over the next, I would say, over the next few weeks. And that determination hopefully will be the right one. It's a very complicated subject, you know, the subject of marijuana. I've heard great things having to do with medical, and I've had bad things having to do with just about everything else. But medical and, you know, for pain and various things, I've heard some pretty good things, but for other things, I've heard some pretty bad things. The other part of your question, I mean, we're just going to see what happens with it all. You're going to have, we're going to have a tremendous success in what we're doing. Other cities are hopefully watching this. They're all watching, just like everyone's watching here. They're all watching, and maybe they'll clean up, and maybe they'll do this and get rid of the cashless bail thing and all of the things that caused the problem. I mean, if you go back, this whole thing with cashless bail is a disaster. So many problems came that we never had before. So they're watching us today, and if they don't learn their lesson, if they haven't studied us properly, because we're going to be very successful. I have zero doubt about that. It's going to be. It's a question of will it be really fast, like the border, You know, everyone said, they used to say, Biden used to say, I need legislation. I didn't get any legislation. I called up our people, and we did a great job. Tom Homan was great. As you know, our secretary did a great job. They did a great job. There's no games. They didn't play games. And we're going to have the same thing here. But then I'm going to look at New York in a little while. Let's do this. Let's do this together. Let's see. It's going to go pretty quickly. And if we need to, we're going to do the same thing in Chicago, which is a disaster. We have a mayor there who's totally incompetent. He's an incompetent man. And we have an incompetent governor there. Pritzker's an incompetent. His family threw him out of the business, and he ran for governor. And now I understand he wants to be president. But I noticed he lost a little weight, so maybe he has a chance. You know, you never know what happens. But Pritzker's a gross incompetent guy, thrown out of the family business. But when I look at Chicago and I look at L.A., if we didn't go to L.A. 3 months ago, L.A. would be burning like the part that didn't burn. If he would have allowed the water to come down, which I told him about in my first term, I said, you're going to have problems. Let it come down. We actually sent in our military to have the water come down into L.A. They still didn't want it to come down after the fires. But that was it. We have it coming down. But hopefully L.A.'s watching. That mayor also. The city's burning. They lost like 25,000 homes. I went there the day after the fire. You were there. And I saw people standing in front of a burned down home. It was, their homes were incinerated. They weren't like, even the steel was literally, it was all warped and literally disintegrated because of the winds and the flame and the whole thing. It was like a blowtorch. They were standing on this beautiful day, maybe a couple of days after. We gave it a little time because what they had suffered. Almost 25,000 homes. And you see what's happening now. They didn't give their permits. I went to a town hall meeting. I said, we're going to get you the federal permits, which are much harder. Almost immediately. Lee Zeldin is a star. He did an incredible job. They have all their federal permits. They don't have their city permits. And the mayor said to me, we think we can have them in 2 years. I was walking down the street, and I met with firemen and police. And I was saying hello to many people that were standing in front of their homes with yellow tape. You can't go in. You can't go onto the lot. And those people wanted to start rebuilding their homes then and there. And the mayor said, we should be able to get them the permits within 2 years. I said, that's a shame. 2 years? Are you kidding? I'm going to get them the federal permit like almost immediately. 2 years. And she drew it back. Well, maybe 1 year. The place was booing her out of the place. They don't have their permits to build their homes. And now they're talking about putting, this is among the most beautiful areas in the country. Now they're talking about putting low-income housing there. Can you believe this? I love low-income housing. I made money with low-income housing. I built low-income housing. I know more about low-income housing and luxury housing. I know about everything real estate. They want to replace some of those homes with low-income housing. They haven't gotten their permits yet. We've gotten all the federal permits, which are much tougher to get, and it was done almost immediately through Lee Zeldin and Federal Environmental. And I watched the other day, those people are angry. And now, you know, they had tremendous, they loved that area. They loved the whole big area, different places, but they loved it. It was all luxury stuff and beautiful stuff. And some wasn't that luxury, but the level of love for that neighborhood, their neighborhoods, was incredible. And you know what? I watch people on television, they want to go, they want to leave. They've lost their spirit, they've lost their heart, because the mayor's incompetent. And Gavin Newsom is incompetent. He's got a good line of bullshit, but that's about it. He's incompetent. And you have Los Angeles is, you know, it's amazing. You know, I called, the first thing I did, I got the Olympics to go there. I was the one that got it. And by a rare thing that happened, I'll be the president. I was very upset because I got the Olympics there, and I said I won't be president when it comes, but bad things happened, and illegal things happened, really illegal things happened. Now it turns out one good thing was I'm going to be the president for the Olympics for 2050, for 250, which is going to be fantastic, and also for the World Cup. So we have a lot of good things, and I hope 250 is going to be, the 250th anniversary is going to be the best. But when I looked at those people, and I saw last night on television that they still don't have their permits, it's a disgrace what's happened in Los Angeles.
The China tariff deadline is tonight, but do you plan to extend that?
We'll see what happens. China's been, we've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. And we'll see what happens. They've been dealing quite nicely. The relationship is very good with President Xi and myself.
You mentioned your upcoming meeting with President Putin. Can you tell us what you hope to get out of that and whether you'll consider inviting President Zelensky to join?
So you have to understand, this is a war that should have never happened. This is a war that wouldn't have happened if I were president. It would have never happened. It was the apple of his eye. I got along very well with President Putin. But if you look, under President Bush, they took a lot of territory. Under President Obama, they took a lot of territory. Under Biden, they essentially took the whole thing. You know, it's just a question of time. Under Trump, you know what they took? Nothing. I was the one that said, you can't build your pipeline. That was half built. I came in, I stopped the pipeline. It's called Nord Stream 2. Nobody knows that, you know. Nobody ever heard of Nord Stream 2. You might have not even heard it. Biggest pipeline in the world. I stopped it. I was not a friend of Russia, but I got along well with Putin. It's always good to get along with other countries if possible, but that doesn't mean you roll over like Biden did. Biden came in and he immediately approved the pipeline. I couldn't believe it. Then they say Trump wasn't tough on Russia. I wasn't tough. I was the toughest. Putin said, if you're not tough, I would hate like hell to see you. I stopped the biggest economic development job, the biggest job that Russia had ever built. I stopped it. It was dead. And this low IQ president came in and he let them build a pipeline and supply oil and gas all over Europe, you know? So this is really a feel-out meeting a little bit. And President Putin invited me to get involved. He wants to get involved. I believe he wants to get it over with. Now, I've said that a few times, and I've been disappointed because I'd have like a great call with him, and then missiles would be lobbed into Kiev or some other place, and you'd have 60 people laying on a road dying. I said, that's cold, but it's a violent war. 5,000 to 7,000 people a week are dying. And you know, there's nobody from here. They're all Russian and Ukrainian people, and some people from the cities, much smaller number, but still, those missiles do damage and they kill a lot of people, but mostly soldiers. And they're young soldiers, although in the case of Ukraine, they're getting much older. They're drafting 60-year-olds now. It's a terrible thing to witness, and I think I have an obligation. Look, this is Joe Biden's war. This is not my war. I made a deal with NATO a month ago. You covered it very accurately, actually. We don't pay anything anymore. You know, we're not paying anything. They are buying things from us, and NATO is paying us. I got it raised from 2% of GDP to 5%. And they're paying us for everything that we send. We're not paying. But Biden approved $350 billion. Europe has spent $100 billion. The money that's been spent and the death is incredible. It's the worst thing that's happened, by far the worst that's happened since World War II. So I'm going in to speak to Vladimir Putin, and I'm going to be telling him, you got to end this war. You got to end it. And he wasn't going to mess with me. This war would have never happened. You know, we had a discussion about it one time, and we never had that discussion again. Would have never happened. And when the election was rigged, and then Biden took office, which was barely took office. The auto pen took office. Bad things started happening. Bad things, stupid things were said. And it ended up in a war. And you know, and I don't believe this will happen anymore because I have that pretty well covered. This could end up in a third world war. This could have been a third world war. I don't think that's going to happen now. But I thought it was very respectful that the president of Russia is coming to our country as opposed to us going to his country or even a third party place. But I think we'll have constructive conversations. Then after that meeting, immediately, maybe as I'm flying out, maybe as I'm leaving the room, I'll be calling the European leaders who I get along with very well. And, you know, I have a great relationship, I think, with all of them. And I get along with Zelensky, but, you know, I disagree with what he's done. Very, very severely disagree. This is a war that should have never happened, wouldn't have happened. But I'll be speaking to Zelensky. The next meeting will be with Zelensky and Putin, or Zelensky and Putin and me. I'll be there if they need, but I want to have a meeting set up between the two leaders. I was a little bothered by the fact that Zelensky was saying, well, I have to get constitutional approval. I mean, he's got approval to go into war and kill everybody, but he needs approval to do a land swap, because there'll be some land swapping going on. I know that through Russia and through conversations with everybody, to the good, for the good of Ukraine. Good stuff, not bad stuff. Also, some bad stuff for both. So there's good and there's bad. But it's very complex because you have lines that are very uneven, and there'll be some swapping, there'll be some changes in land, and the word that they will use is, they make changes. We're going to change the lines, the battle lines. Russia's occupied a big portion of Ukraine. They've occupied some very prime territory. We're going to try and get some of that territory back for Ukraine. But they've taken some very prime territory. They've taken largely ocean, in real estate we call it oceanfront property. That's always the most valuable property. If you're in a lake, a river, or an ocean, it's always the best property. Well, Ukraine, a lot of people don't know that Ukraine was largely 1,000 miles of ocean. That's gone. Other than one small area, Odessa, it's a small area. There's just a little bit of water left. So I'm going to go and see the parameters. Now, I may leave and say, good luck, and that'll be the end. I may say this is not going to be settled. I mean, there are those that believe that Putin wanted all of Ukraine. I happen to be one of them, by the way. I think if it weren't for me, he would not be even talking to anybody else right now. But I'm going to meet with him. We're going to see what the parameters are. I'm then going to call up President Zelensky and the European leaders right after the meeting, yeah. And I'm going to tell them what kind of a deal. I'm not going to make a deal. It's not up to me to make a deal. I think a deal should be made for both. I think Russia has to get back into building their country. It's a massive country. I think they have 11 time zones, if you can believe it. It's a massive, it's by far, from the standpoint of land, it's by far the largest. They have tremendous potential in Russia to do well. They're not doing well. Their economy is not doing well right now because it's been very well disturbed by this. It doesn't help when the President of the United States tells their largest or second largest oil buyer that we're putting a 50% tariff on you if you buy oil from Russia. That was a big blow. And then they say, gee, he wasn't so tough. Nobody else would have done that. And I haven't stopped there. I mean, look, I was all set to do things far bigger than that, but I got a call that they'd like to meet, and I'm going to see what they want to meet about. I'd like to see a ceasefire. I'd like to see the best deal that could be made for both parties. It takes two to tango, right? So ultimately, I'll have a meeting next week. I had a great relationship with him, considering the fact that, I was not nice to him because of the pipeline. I ended the pipeline. I also gave the javelins. Do you ever hear of a javelin? Javelin is called a tank buster. They say that Obama gave them sheets and I gave them javelins. If it weren't for me, all those tanks that were destroyed at the first days of the war because the tanks got stuck in the mud, some commander made a better they would have been in Kiev in 4 hours going down the highway. But a Russian general made a brilliant decision to go through the farmland instead. And they just had torrential rains, and the rains were so bad, and it was mud, and those tanks got stuck in the mud. I don't know who that general is, but knowing Vladimir, he's probably not around any longer because all those tanks were stuck in the mud, and they went along with the javelins. I gave them the javelins. You know that, right? I gave them javelins. They gave them sheets. But I'm going to meet with President Putin, and we're going to see what he has in mind. And if it's a fair deal, I'll reveal it to the European Union leaders and to the NATO leaders, and also to President Zelensky. I think out of respect, I'll call him first, and then I'll call them after. And I may say, lots of luck, keep fighting, or I may say we can make a deal. I will tell you this, I've seen a poll coming out of Ukraine. 88% of the people would like to see a deal made. And if you go back 3 years, everybody was gung-ho for war. Everybody's gung-ho for war until you have it. It's an amazing thing. I had it with a couple of countries where I couldn't get a deal done with one particular country. And I just couldn't. The guy's great. He's a friend of mine, great, good leader, tough as hell. I couldn't get the deal done. And then he went into war for a short period of time. You know where I'm talking about. First term. And it was nasty. Guys being killed all over the place. And he went through 1 week of war, and I was able to get the deal done. He said, this is nasty. Yes, please.
Yeah, just to follow up on what you were saying there. First of all, Volodymyr Zelensky is not invited on Friday?
He wasn't a part of it. I would say he could go, but he's gone to a lot of meetings. You know, he's been there for 3.5 years, nothing happened.
And what is the definition?
I mean, do you want somebody that's been doing this for 3.5 years? What's the definition of a good deal? I'll tell you after I hear what the deal is. Because there could be many definitions. You know, you're talking about a very large and complex situation. Now, I tell you, the war that I just settled with Azerbaijan and with, as you know, in Armenia was almost as complex as this one, having to do with routes, trade.
Meeting on Friday with Vladimir Putin.
Well, we're going to have a meeting with Vladimir Putin, and at the end of that meeting, probably in the first 2 minutes, I'll know exactly whether or not a deal can be made.
How will you know that?
Because that's what I do. I make deals. Please go ahead.
Yeah, thank you, Mr. President. I'm going to ask you 2 questions, one about China, one about Russia, if I could. On China, your administration agreed to send the most advanced or advanced NVIDIA and AMD chips.
No, obsolete. No.
Obsolete chip. Well, and then 15% of the profits.
You mean the 20s? No, no. This is an old chip that China already has. And I deal with Jensen, who's a great guy, and NVIDIA. The chip that we're talking about, the H20, it's an old chip. China already has it in a different form, different name, but they have it. Or they have a combination of two will make up for it and even then some. Now, Jensen's a very brilliant guy, and Jensen also has a new chip, the Blackwell. Do you know what the Blackwell is? The Blackwell is super duper advanced. I wouldn't make a deal with that, although it's possible I'd make a deal, a somewhat enhanced in a negative way Blackwell. In other words, take 30% to 50% off of it. But that's the latest and the greatest in the world. Nobody has it. They won't have it for 5 years. But the H20 is obsolete. You know, it's one of those things, but it still has a market. So I said, listen, I want 20% if I'm going to approve this for you, for the country, for our country, for the U.S. I don't want it myself. You know, every time I say like 747, I want, yeah, for the Air Force. So I just wanted, so when I say I want 20, I want for the country. I only care about the country. I don't care about myself. And he said, would you make it 15? So we negotiated a little deal. So he's selling a essentially old chip that Huawei has a similar chip, a chip that does the same thing. And I said, good, if I'm going to give it to you, because they have a, they have a stopper, what we call a stopper, not allowed to do it. It's really known as a restrictive covenant. And I said, if I'm going to do that, I want you to pay us as a country something, because I'm giving you a release. I released them only from the H20. Now, on the Blackwell, I think he's coming to see me again about that. But that will be a unenhanced version of the big one. Like, I don't know if you know it, we will sometimes sell fighter jets to a country, and we'll give them 20% less than we have. Do you know what I mean, right? That's the same.
So on Russia, do you see a time, Mr. President, when there could be normal trade between the U.S. and Russia? Should your meeting go well, should there be peace?
I do, yeah. Russia has a very valuable piece of land. If Vladimir Putin would go toward business instead of toward war, you know, it's a warring nation. That's what they do. They fight a lot of wars. A friend of mine said Russia's tough because they just keep on fighting. They beat Hitler, so did we, and they beat Napoleon. You know, they've been doing this for a long time. I asked a question to a very, very smart man that some people like and some people don't like. Viktor Orban, right, from Hungary, the head of Hungary, and he's in that same area. and knows the two countries very well. I said, this was before Biden didn't do anything to get us out of it. He could have gotten us out of that. It would have never happened. I said, so can Russia be beaten by Ukraine? He looked at me like, what a stupid question. He said, Russia's a massive country, and they win their country, and they win their life through wars. They fight wars. That's what they do. He said, China beats you with trade. Russia beats you with war. That was a very interesting statement. China's not beating us with trade, not when I'm in charge, but they were beating Biden with trade, but they never beat us with trade. Don't forget, China had to pay $400 billion worth of tariffs when I was last time. That was last time. And if we didn't have COVID, all of this stuff we would be loaded. We're finding hundreds of billions of dollars of cash is pouring into our country now because of tariffs. And all we're doing is we're doing what they do to us. It's so beautiful to see it. They found last month, as you saw, $25 billion of excess cash flow. They're saying, where did it come from? I said, I'll tell you where it came from. It came from a place called tariffs, and we're doing very well. We're really doing well. But I expect to have a meeting with Putin that I think it'll be good, but it might be bad. And I'm here for one reason, to get rid of a war that somebody else started. Should have never happened. And if I could end it, great. Complex war, a lot of bad blood, But Zelensky's been there for 3.5 years. So if you put him in a room, now I will say this, ultimately I'm going to put the two of them in a room. I'll be there or won't be there. And I think it'll get solved. Yeah, please be.
Thank you, Mr. President.
Excuse me, I'm going to suggest, because do you have any other questions on DC? Because I don't want them to be. Wait. These are incredible people. I don't want them to be standing up here on subjects. Does anybody have a question of them? And then you guys can leave. Okay, a question, Brian, go ahead.
Thank you, Mr. President. All right.
And by the way, this is only on DC, and then they're going to leave because it's unfair to have them stand up here all day long. Brian.
I've got two questions for you. First, about DC. This is personal for me as well. Last year, I was robbed on the streets by one of these teenage thugs. Had a gun, got away with it. Let's talk about the effort that between law enforcement, prosecutors, and judges, because it's a recycling belt. Like, these kids go, they don't fear the police. They know it. If you talk about how we've got to get these judges and put these kids behind bars, adult crimes deserve adult penalties. And my second question, I'll have you answer that, please.
You want me to answer it?
Whoever wants to take it.
Okay. It's real. Do you want me to answer it? Go ahead. Here's the problem. Assuming that they're 17 years, older than 17 years old, I can get the case. If they're under 18 years of age, I can only get the case if it's murder, rob one, rape, even if they shoot a gun but don't kill you, I can't get it. So the law has to be changed. As the president said, cashless bail. That has to be changed. All right, then even assuming I get the case, I get jurisdiction, I get a conviction, the DC Council has given the judges the ability to give probation on shootings. And so then it's up to them. All of these things, the Youth Rehabilitation Incarceration Reduction Act, and now they want to seal records. So if we work hard, we get a conviction, they want to wipe it out. So that needs all to be changed.
Okay, Mr. Question.
Pam, would you answer that also?
Yeah, and just back to that topic. Let's be clear, though. We're going to charge them, and we're going to track every single thing they do throughout every step of the court process and report back to you and let all of you know what's happening to them. Because the people who are prosecuting them, the judges who are trying them, they also need to be held accountable.
Mr. President, this is the most people we've ever seen in this briefing.
I've never seen
ever, right?
Yeah. I've never seen any. Where's Caroline? Where's my superstar? Caroline. Is Caroline in the back? Where's Caroline? Come here, Caroline. Come here, Caroline. Come here. Is she doing a good job, by the way? Come here, Caroline. Is this the largest crowd that you've ever seen?
This is definitely the most packed briefing, and I think all of you would agree. I think it's why we need to build a ballroom.
Mr. President, I have a better idea.
All right, Brian, go ahead.
My question is this. You're building the big, beautiful ballroom. Yeah. Could we build a big, beautiful briefing room, updated technology, more seats?
I don't want to do that. I don't want you to be comfortable. So no, I don't want to make life comfortable. So look. Let's just do this. Let's do this. It's going to be a big thing. We're going to Russia. That's going to be a big deal. What happens, happens. I'll let you know what happens. You'll be the first to know. I'll be calling the European leaders. I'm going with totally, I mean, we have a lot of talks. They're great people. They're great leaders, actually, and they want to get back. Honestly, as one of them said, I've OD'd on trying to settle Ukraine. They've OD'd, meaning they've overdosed on the settlement of Ukraine. Not a nice expression, but boy, is it accurate. They're tired of it. They want to get back to spending money on their countries. You know, Biden gave them $350 billion. Europe gave $100 billion. It should be much more than that. Shouldn't have been that kind of, they should have had equalization, but they didn't. But you know what? Still a lot of money. They want to get back to building their own countries. They really want it resolved. My relationship with the European leaders, as you saw, is extremely good. It's perfect. It's beautiful. Wait. And we're going to try. I'll be in touch with them. I have 5 of them call me. You think it's easy? There are a lot of European leaders, but they rely on me. Very much rely on me. If it wasn't for me, this thing would never get solved until the last person breathing is dead.
Would you talk to them before?
Mr. President.
Yeah, I'm talking to them right now. So I'm talking to the European leaders. I'll be talking to President Zelensky. I'm going to get everybody's ideas. I go into that thing fully loaded right up there, and we're going to see what happens. Now, I think one of 2 things is going to happen. It could be a good meeting, and we'll go a step further. We'll get it done. I'd like to see a ceasefire very, very quickly. Very quick. I'd like to see it immediately, but I'd like to see it very quickly. And we're going to be dealing with the European leaders, and we're going to be dealing with President Zelensky, and hopefully we're going to have a great success. As far as this, what we did today, and I think you were here for D.C. more so than even Russia, because Russia will be, you know, we have a couple of days to go, but the Russia is going to be very interesting. But to me, what is very exciting, and we're going to take back our capital. We're going to make it beautiful again, but we're going to make it, more importantly, safe again. It's going to be so safe. It's going to be a model. And then we'll look at other cities also. But other cities are studying what we're doing. And you have some capable people in other cities. They can do it too. But we have a great group of professionals. We're going to have a safe, beautiful capital, and it's going to happen very quickly. Thank you all. Thank you all very much.
Where are we going? All right, there you have President Trump just now leaving the White House briefing room after a tour de force news conference that answered a number of questions we had about his approach to Washington, D.C., and federalizing the city, highlighting some crime statistics earlier that are at odds with some other numbers that we've seen. The president taking control of the police force and deploying National Guard troops to the streets of Washington. This is something that he signed 2 executive orders to implement before he actually spoke with reporters. And of course, we heard him talking to a range of issues, from the meeting with Vladimir Putin on Friday, the war, of course, that Russia has waged on Ukraine, but also a number of other topics, going from geopolitics through even renovations at the White House. We're going to be unpacking a lot of this coming up. in Balance of Power here on Bloomberg Radio, satellite radio, channel 121, and on YouTube, where you can find us right now, even before the show begins. Search Bloomberg Business News Live. We'll have much more to say here as we get through the program, as I was mentioning here, and an important conversation that we're going to be bringing you with Scott Cooper, the director of the U.S. Office of Personnel Management. We'll be hearing from a member of the administration here specific to the workforce, and also, as we just heard from President Trump, protecting that workforce. He's only been on the job for a couple of weeks here and will be with us to talk about DOGE cuts, personnel levels, and the culture inside our federal government here for federal workers. If you're with us in Washington on 99.1, it is a conversation that you will not want to miss. Are we touching base with Charlie? James, is that the plan here? Charlie's with us, so we may as well check in to see how trading has been. It's been a while since we've been listening to Donald Trump, and we're up a little, down a little here. Not the most convincing session. Charlie Pellet, he's at World Headquarters in New York. How you seeing this
right now? Up a little, down a little, Joe Matthew. That sums it up. Here's what's going on. We do have the S&P 500 index up a little, but trading at a record right now, up 563.95. That is a gain of 0.1%. The NASDAQ Composite Index also at a record of 58 right now, gain there of 0.3%. The Dow, however, in the red. Dow Industrials down by 0.2%. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The 10-year yielding 4.27% with the 2-year right now 3.78%. Spot gold down $49 the ounce, a drop there of 1.4%. West Texas Intermediate crude 63.80. Up 1.7%, 120,316. The S100 index up a little right now, up 1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. Back we go to Washington. Balance of Power kicks off now. Once again, your host here.
Driving stocks and the Monday trade is shaping up here at lunchtime on the East Coast. We are watching shares of NVIDIA up about $1, about 0.5%, as the president just now, by the way, confirmed Bloomberg reporting a 15% levy, if I can call it that. The company, along with AMD, chip sale to the United States government, and the president was even toying with the idea of making a deal over Blackwell. This previously mentioned deal would involve the H20 chips here. And we're also watching pot stocks on a tear today. The MJ marijuana ETF Amplify Alternative Harvest up over 18% as the president suggests rescheduling cannabis. So we got a lot to cover. Stay with us right here. Fastest show in politics is about to begin. Balance of Power, only on radio.
CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. President Trump calls out the National Guard as part of what he says is an effort to target crime and homelessness in Washington, D.C.
The president is calling today Liberation Day in D.C.
And we're going to take our capital back. We're taking it back.
And from a press conference in the White House briefing room says he's
placing the D.C. Metropolitan Police Department under direct federal control.
And he's calling in the National Guard as well.
To help reestablish law, order, and public safety in Washington, D.C., and they're going to be allowed to do their job properly.
Stacey Lynn, CBS News, Washington.
CBS News correspondent Scott McFarland.
Local leaders are pushing back, saying this is all unnecessary and political. The mayor cited city police data showing crime is down 26% from this time last year, and that homicides are down about 12%. And the mayor has said that is from working with the community and with federal leaders.
The president was asked about his upcoming meeting in Alaska with Vladimir Putin and the chance that Ukraine's president might be involved.
The next meeting will be with Zelensky and Putin, or Zelensky and Putin and me. I'll be there if they need, but I want to have a meeting set up between the two leaders.
A federal judge has ruled transcripts of secret grand jury testimony in the sex trafficking case against Jeffrey Epstein's co-conspirator, Ghislaine Maxwell, will not be released. Overseas, Israel says it targeted a journalist in a deadly Gaza drone strike, a reporter alleged to be a Hamas leader. Al Jazeera, his employer, denies it. And CBS's Deborah Patta tells us.
We spoke to a veteran hostage negotiator, Gershom Baskin, who told us that he believes there is still a 2-week window in which to negotiate a ceasefire in Gaza. He said Netanyahu's new war plan is a death sentence for Israeli hostages.
Instagram Map is a new feature that allows users to share their location. CBS's Kelly O'Grady.
There is already a backlash, with users and data experts raising concerns this update could compromise privacy and safety. Now, in a statement to CBS News, Meta said Instagram Map is off by default and your live location is never shared unless you choose to turn it on. If you do, only people you follow back or a private custom list you select can see your location.
Well, yes, it's true. AOL still has dial-up internet service. But AOL says it's going to end all that by the end of September. Checking Wall Street, right now the Dow is down 77 points. The S&P is higher. This is CBS News. A new survey finds many adults in their 20s still come to rely on their parents for financial help.
Gen Zs, aged 23 to 28, are growing up. Spending money on dating is out.
The Gen Z now more than ever is finding that adulting has a higher price tag than they expected.
That's Ashley Ross with Bank of America's Better Money Habits study. They're progressing to financial independence.
But many of them still rely on and their lifelines and their parents and really feel uncertain about the future.
The best tip for Gen Zers?
The goal is for 50% of your income to go to your needs, 30% to go to your wants, and 20% to your savings.
Brad Gibson for CBS News.
Paramount, the parent of CBS News, will become the new home to all Ultimate Fighting Championship events in a 7-year deal with TKO Group. It will distribute the full slate on the streaming platform Paramount Plus. Some will be simulcast on CBS. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump deploys the National Guard to the streets of D.C. Welcome to the Monday edition as the president invokes a public safety emergency in our capital city, placing the police department under federal control, at least for now, and we'll have details for you this hour. We'll also bring you an important conversation with the man who runs the Office of Personnel Management, the federal workforce. Scott Cooper joining on managing the workforce and apparently keeping it safe. Also a job at hand in light of the president's emergency orders. He'll be with us in studio in just a moment. We'll have insights from Republican strategist Ashley Davis at S3 Group and analysis from our panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the duration. We start with the trade on Wall Street, the Monday trade, and Charlie Pellet has that from World's headquarters in New York. Charlie?
And good day, Joe Matthew. Back to work Monday indeed. With the Dow lower, the S&P, NASDAQ both advancing. S&P, NASDAQ right now they are heading towards records. 7-point gain on the S&P, 63.97. That's an advance of 0.1%. We've got NASDAQ up 62 now, higher by 0.3%. The Dow, though, in the red. Dow Industrials down 81 right now, drop there of 0.2%. Our Mag 7 index pushing higher by 0.6%. The 10-year at 4.26%. The 2-year 3.75%. Traders bracing for key inflation data. Right now we have got the price of gold falling $51 the ounce, 33.45, drop there of 1.5%. While West Texas Intermediate crude, little change, down 3 cents a barrel, 63.85. Certainly trade, tariffs very much on the minds of investors, especially ahead of tomorrow morning's CPI data on inflation. Cam Dawson is Chief Investment Officer at New Edge Wealth. She was a guest this morning on surveillance.
Companies have been very hesitant to want to pass on tariff increases to consumers thus far. You've seen pockets of it, but companies are worried that if they raise prices, that they will lose market share, meaning that prices go up, quantity goes down. So we haven't seen this full pass-through of inflation to consumers. Companies have been absorbing it more, taking it more on a hit to margins.
And you can hear more of the conversation with Cameron Dawson on the Surveillance podcast. You can download it wherever you get your podcasts. Micron Technology is raising its fiscal fourth quarter revenue, earnings, gross margin, and operating expense outlook, citing improved pricing. Micron shares up now by 2.9%. Again, recapping, S&P 500 index at a record up 11 now, up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts, and Balance of Power continues right now. Back we go to Washington once again. Your host, there he is, Joe Matthew.
All right, Charlie, many thanks. Great to see Charlie Pellet on a Monday, and thank you for joining us on the Monday edition of Balance of Power here on Bloomberg Radio, satellite radio channel 121. You can watch us on Bloomberg Originals right now, and of course on YouTube. You can always see us by searching Bloomberg Business News Live. And you'll want to get on YouTube for this one because we have an important conversation coming up for you here. Live from Washington, where public safety is on the menu today. We talked about it on Friday. The president late on Friday evening announcing his plans to have a news conference, and it's already happened here in the nation's capital. With crime and safety in mind, the president is taking control of the Washington Metropolitan Police Department. This is a pretty big deal, and also deploying hundreds of National Guard troops to cut down on crime and homelessness in the nation's capital. He talked about this in the briefing room, in fact, and answered questions for quite some time. Knowing that this was coming, we just didn't have the details exactly on how he was going to frame this, and we'll be talking about it through the day. If you're with us on 99.1 in Washington, D.C., we see you, and we'll be talking a lot more about the president's plans here. In fact, we're going to spend most of this hour talking about what's going on right here in our nation's capital, specific in this conversation to what's happening with the federal workforce. Scott Cooper started just weeks ago as the director of the Office of Personnel Management, OPM, as the wonks call it here in the nation's capital. And remembering the way this administration began and the reductions we saw in the federal workforce, some of the debates that we've had around this, it is, of course, Director Cooper who needs to implement, manage, and protect this workforce starting now. He's with us in studio, and it's great to see you in our Bloomberg offices. Welcome. It's pleasure to meet you.
Well, thank you. It's great to be here.
I have a lot of questions for you, but I want to start with the news of the day here. President declaring a public safety emergency. Will you be involved as director of OPM in coordinating movement or deployment of federal law enforcement?
Not to my knowledge.
That's not in your umbrella.
It's not in my umbrella. If the president wants me to do it, I'm happy to.
You'll
but
do it for him.
It's not in my purview.
They're all federal employees, though, which is why I asked.
Yeah. I don't think so, but you've seen the news more recently.
Sure.
Than I have, so.
Well, listen, absolutely. Will you make enhancements in buildings to protect federal workers? Are you moving security around to coincide with this movement?
Yeah, as I said, right now the answer is I don't know. Okay. So we haven't done anything. GSA would probably be another organization that might be involved to the extent something like that happens. But for now, obviously, don't have any other directive other than what the president announced this morning.
Understood. I mean, the answer might be that we're actually quite secure in our federal buildings here in Washington, and that's
I certainly feel
acceptable.
Way,
yeah, absolutely. For those of us who live around here, we're not running through the streets like it's like we live in Baghdad, as people should know. As I mentioned, you were sworn in less than a month ago.
Yeah.
I would love to know the experience that you're having here, coming to Washington and going through this culturally. But let's talk about actual policy at first and what you've inherited here, because OPM is losing, I think, about a third of its workforce as you get in the building here. Do you have what you need? Are there enhancements that you need to make to enact your vision?
Yeah, certainly as I've been here for a couple weeks now, people have come to me and said, hey, we may have cut too far in this area or that area. Mm-hmm. So the short answer is I don't know, but we're going through a process to go figure that out. So what I've asked everybody to do is come back to me and tell me, okay, like, what do you think is missing? But importantly, what are you doing in terms of prioritization? So one of the things I've observed here in D.C. is we're very good about adding things to the plate, and we're not very good about taking things off the plate.
Interesting.
And so what I've kind of told my team is, look, I'm open to the idea that maybe there are areas where we've cut too far, but I also want to make sure I understand how we're prioritizing, and the answer may be that there are things that we're just doing because we've been doing them for a long time, and we don't need to do it. So we want to understand that.
So you're taking inventory. You're taking stock right now.
Yeah.
When do you expect these reports to all come back?
So we've got a near-term deadline, which is kind of in September. We have to put forward our first version of the 27 budget, believe it or not, for government. So we have a deadline that we need to turn that into, I believe, OMB. So literally in a matter of a couple weeks here, I think we're going to have an assessment of how well are we staffed, what are we focused on, and are there areas where we need to add back headcount, or are there areas that we think we can prioritize?
You expect to lose another 2,000 or so positions this year. Is that accurate?
No. So we started roughly about 3,100. Okay. We expect through mostly the DRP, the Deferred Resignation Program, to be probably closer to 2,000, 2,100 by the end of the year.
Yeah. So that's specifically through
the
deferred.
OPM. Yeah.
And is that program still active?
We still have people who are on the books right now who are coming off.
But you can't raise your hand now and say that I'd like
in
to. In
general, no, but I think that's something that is under discussion is, ought we to have a program like that kind
just
of
keep it in place all the time?
Yeah.
A permanent deferred resignation
Potentially,
program.
yeah. So we've done 2 rounds of it so far, but there is an ongoing discussion as to would it make sense to have something. I don't know if it'll be exactly the same things we've done with DRP, but maybe some program like that.
And a lot of private companies do this too.
Exactly,
of course,
right.
You're no stranger to that. So you got here after Elon Musk left town. Did the Doge make your work easier or more difficult?
Yeah, look, I think what Doge did was they really provided a catalyst for the change that we're trying to now institutionalize. So, look, you know this well. We're talking about a $7 trillion behemoth here. We're talking about 2.5 million people in the workforce, and it's very hard to kind of change culture and change the momentum there. So, in my mind, a lot of what Doge did was really kind of catalyze some of the activity. And now our job at OPM and across the other agencies is to figure out how do you institutionalize this so that operational efficiency is not just a one-time thing, but it's actually part and parcel of what everybody does day to day.
A lot of people know you as the guy who ended the 5 things memos. Was that controversial? Is that, you will be, I'm sure, known for a bit more than that. Why did you make that decision, and why would that be considered a controversial move? Because I think some folks are continuing to use this, right? It's the mandate.
I don't think it should be controversial. Yeah, it's the mandate that we dropped. Look, what I said I would do is when I come in, just like anything else, we should look at why we're doing things. And sometimes things have a good reason for when you do them, and other times maybe they run their course. And in my mind, when I looked at kind of the opportunity here, I just said, look, if it's a useful tool to you as a manager, great, knock yourself out, keep using it.
Okay.
But we don't need to consume resources kind of across the government to do it.
Was this consuming people? They're tearing their hair out each week to come up with 5 things.
It was, the honest answer is I think it was well used in some areas, not well used in others, but it was just a matter of saying, hey, look, we're going to look at things from a fresh perspective, and if we find that perhaps there's other tools that are available to do the same job, then we don't need duplicate resources.
Well, as you consider taking stock here and maybe even looking to hire, You scored a legal victory in being able to test applicants, measure applicant skills. What are these tests, and are they already in place?
Some of them exist, but there's a lot more to be done. So the history, just for your listeners to know, is we've been under a court order for about 43 years now, which effectively prohibited the use of essentially merit-based tests to determine are people qualified for the jobs for which they're trying to be hired. In the absence of those tests, what was happening was people would basically self-evaluate themselves on their hiring criteria, which I see you chuckling because it's a real issue, right? Like people say lots of things, and in general, my view is we should trust but verify. And so now that court order has been rescinded, we now have the ability to go forward with a much more robust plan where we can use actual merit-based assessments, so that if you tell me, you're applying for a software developer job, great. Like, let me, actually try to assess those skills by giving you a coding test or something like that, which obviously the private sector has been done for a long time.
That's fascinating.
So yeah, it's
what
a
was
little
it
bit
best?
surprising.
You have a self-eval and an interview? Is that basically the process?
You have a federal resume that sometimes goes 5-10 pages long.
Okay.
You have a self-eval, and then yes, sometimes you have an interview. Right now, what we want to do is to say, okay, the first step really should be, number one, is we've taken the federal resume down to 2 pages. My personal view is 2 is still long, but it's better than 5.
Yeah.
And then yes, like if you have a job for which we have a test that we can evaluate whether it's your judgment or technical skills, we should have you do that first so that we understand, are you even in the running for the potential job we're hiring for?
Boy, yeah, you wouldn't think that that's revolutionary.
Yeah, I know. None of this is rocket science. I agree. We are not inventing new things here, but we were, because of the court order, a lot of the agencies were very worried that if they use these tests, would they find themselves in constant litigation? And so now that court order is gone, that clears the path for us to do this.
I have just about a minute left. I'm just fascinated by what this must be like for you. And I'm wondering what culturally it has been like. I know where your headquarters is over on East Street. I know what that building looks like, at least from the outside.
You should come inside.
What's it like going from the world of venture capital, a firm like Andreessen, to sitting on East Street trying to figure these problems out?
Yeah, it's been a fascinating experience, and all very positive, actually. It's exactly what I was hoping it would be, which is...
Is that right?
Well, look, I view this as like the managerial challenge of managerial challenges, which is in my old job, at the end of the day, you have a CEO, the CEO tells you what to do, and at some point, people actually do what the CEO says, or they, quite frankly, find themselves another job. And this is a much more of what I would call a power persuasion job. Can you get people aligned around a mission and convince them why the things we want to do from an efficiency perspective are not only good for their career, but also good for the government?
Yeah, well, that's called public service, I think,
Exactly.
Right? Really great to meet you. Thank you for coming. Let's keep the conversation going. Scott Cooper, OPM. This is the man in charge of managing the federal workforce that President Trump was just talking about protecting here in Washington. We're going to talk more about his public safety emergency and what's going to mean for the streets of Washington. It's all ahead right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They're both advancing. Records for the S&P and the NASDAQ Composite Index right now a 12-point advance, with the S&P currently trading at 64.01, up 0.2%. NASDAQ pushing higher, up another 83 points, up 0.4%. The Dow, however, in the red, down 32 now, a drop there of 0.1%. We've got the Bloomberg Max 7 Index up 0.8%. 10 years currently yielding 4.26%. The 2-year 3.75% ahead of tomorrow morning's CPI report. Spot gold is down $48 the ounce, down 1.4%, while West Texas Intermediate crude up 0.2%, $63.98 a barrel on WTI. Chris Harvey, head of equity strategy for Wells Fargo Securities, has left the firm after 12 years. He was responsible for establishing the firm's equity market outlook, including its S&P 500 index price target and earnings forecast. Wells Fargo shares lower, little change right now, down under 0.1%. Recapping, S&P at a record up 13, up 0.2% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie. Many thanks to Charlie Pellet in New York. We'll get back to Charlie in about 15 minutes here. Check on the Monday trade. Really interesting news coming out of Washington that's not actually moving stocks much, but it's certainly got investors' attention. This story involving NVIDIA and AMD, the president talking about it a short time ago. 15% NVIDIA will have to pay, and AMD, for selling their AI chips to China. They'll be giving 15% of the revenue to the federal government. Unprecedented. Quid pro quo, as we keep hearing. And when the president was asked about other technologies, say Blackwell, he indicated that he might even consider making a deal about that as well, if it were at least a lower-powered version. We'll see what we can learn about that in the meantime. Big screamer today, though, is Liberation Day in D.C. Yeah, you thought Liberation Day had already happened with the tariffs. Then we had the second Liberation Day. I think last week was the third when reciprocals went in. But we're going to start throwing around this on any number of issues, I guess. The president said at the podium, Liberation Day in D.C., we're going to take our capital back, invoking Section 740, he said, of the District of Columbia Home Rule Act. I believe it's Section 40. Deploying the National Guard to the streets of D.C., kind of like you saw in L.A., except there are no protests or riots going on here at all. It's more about carjackings, crime, kind of run-of-the-mill violent crime, not a political movement that's occupying the streets. I live here and work here, obviously. This building that I'm sitting in is inside one of those so-called tourist zones that the president is talking about here. And it's not just the National Guard, it's the police department. He says Attorney General Pam Bondi is taking command of the Metropolitan Police Department as of this moment. The part that I don't quite understand, and we'll explore this over the course of the show, is, as we understand it, based on the Home Rule Act, you can't just take over the police department. You get to do it for 48 hours in the case of an emergency, which the president says he has here. So I don't know if this would be a rolling kind of re-upping it every 2 days, or if this will be a 48-hour event. I'll let you know as we learn it. The president had a lot to say, though, and he was talking tough about recent crime here in the Capitol. Here he is from a short time ago in the briefing room.
Told them, whatever happens, you know, they love to spit in the face of the police. As the police are standing up there in uniform, they're standing, and they're screaming at them an inch away from their face, and then they start spitting in their face. And I said, you tell them, you spit, and we hit. And they can hit real hard. You spit and we'll hit. Not a fan of the city, which he describes as filthy, crime-ridden scumbags and homeless people everywhere, now promising, quote, full, seamless, integrated cooperation at all levels of law enforcement, deploying officers across the district with an overwhelming presence. I'm going to talk to Ashley Davis about this. Not only has she spent a good chunk of her career in national security, but of course
is a Republican strategist and can talk politics with us here on Balance of Power, and does so frequently at S3 Group, former special assistant to the Secretary of the Department of Homeland Security. Ashley, it's great to see you. You'd be running around right now if you still had your old job, because DHS and every other agency in town with law enforcement is apparently going to be part of this. More than 12 agencies, we understand. Do you, I think you live here too, Ashley, do you feel like you live in this sort of dystopian, crime-ridden city? Does this actually justify an emergency and the use of the National Guard?
Well, first of all, good afternoon, Joe. Nice to see you as always. I've been here 25 years. I live in the city. I definitely think over the last 5 years especially, the crime has gotten worse. I understand the statistics that it's gone down over the last 2 years. However, it was at a really big height for a while. And you know as well as I do, the carjacking and the homelessness here at our nation's capital is something that is a huge concern. I actually think the president and the Mayor Bowser, do have a respected relationship to each other, especially this term. There was a little bit of a friction when he was leaving last time, but they've built a really good relationship. But what I keep calling, and who I've been saying this for years, we have a city council that is the council of no consequences. They have absolutely taken the power away of our police force to actually punish the crimes that people are doing. And so the mayor's hands are even tied in regards to homelessness, carjacking. I mean, my biggest issue that I've been learning about over the last 6 months is the fact that landlords in Washington, D.C., it takes 2 years to get tenants that are squatting out of their property. So there are situations that definitely need to be changed. If you go on the metro, I don't often, Joe, I don't know if you do. If you jump over the turnstile and don't feel like paying, the city council has put in no consequence rules over people doing that. There's lawlessness here. I'm not sure if it goes to the point of the National Guard at the moment, but I do think that there are things that need to be under control that the city council won't let the mayor do. So I think that she's
probably,
you mentioned
the crime statistics, Ashley, and I'm glad that you did, because the president was spending a lot of time talking about 2-year-old data, and that was the peak, right? 2023, this is when you and I and everyone else around here was talking about carjackings and casual conversation. We've seen a pretty big drop since then. The 2025 crime stats will show you that. All crime down from last year by 7%. Violent crime last year down 26%. Assault with a weapon down 20% from last year. Are you suggesting, though, that these levels are still high enough? Because I think we saw violent crime was at a 30-year low, but you're coming down from such lofty levels, I think is your point, Ashley, that something still needs to be done here. Would it help the president to cite all of this data and not look at something 2 years old?
Potentially, and again, I don't know the data since post-COVID, pre-COVID, post-COVID, and it's something I would like to dig into, for sure, because I think it's really important information. But again, I go back to not just violent crimes. Obviously, I mean, I've had several friends that have been carjacked. Obviously, there's 7 people that have been killed during hijackings and carjacking. So I think that this is something that has to get under control. But again, if you don't have any consequences, if you do not punish even small crimes, then there's lawlessness in the city. So I think what he's trying to do, obviously there was a tipping point last week with the former staffer who was beat up in the streets. But I think that there are certain, and there was also an intern for one of our members of Congress that was murdered, about a month ago. So there is serious crime here. I think what he's trying to do is also get rid of the homelessness. I mean, if you look at the mayor's ability to do that, she has very limited ability to get rid of the homeless. I mean, because I was talking about this for months. Why are there so many homeless camps? And first of all, for the health of the homeless, but also for making the city safe. And her hands are tied because of some of the legislation that city council passed.
Understood, although I will say that there actually was a pretty large encampment right in front of this building in a small park that the city did move out some time ago. As we understand with the Home Rule Act, Ashley, the president can federalize the city's police department, Metro Police here, in 48-hour increments, retaining the power to supersede City Hall for discrete periods of time, not this open-ended thing. Do we know how this is going to work? Do you just re-up every 48 hours here? And how will that help the police to be federalized?
I think there's two questions. He could continue to do the 48 hours. I don't know how long he will do that because there's not, as you mentioned at the beginning, there's not like riots in the streets right now or anything like that. But I'm assuming he'll use the National Guard to completely move out the homeless camps. I have no idea 100%, but that's what I'm assuming he's going to use. He's not going to continue doing this for 48 hours, I wouldn't think, for the next 6 months. And the police, if he is able to, because of the home rule, change the ability to prosecute some of what City Council again has put in place, if he is able to overturn their ability to prosecute for some of these various smaller crimes, then I think I would think the police would welcome that. Obviously, I think everyone's talking about right now the federal government, the city does not want to be big-footed by the federal government, but there are things that just need to be changed and go back to how they were even 5 years ago.
Do we need to relook at the Home Rule Act? Because with some of the things the president has suggested, this Congress could repeal home rule. The president can do whatever he wants with this city, right?
Yeah, I mean that's why Washington is what Washington is. So yes, but under this administration as well as the current makeup of the House and Senate, I think that you've already seen it happen several times this year, where Congress has stripped funding for things that the government, the City Council won't do in Washington D.C. Exactly. I think that you'll continue to see that happening. Yeah, well. Their budget, I don't think necessarily has to pass until September, from what I understand. So there is a little bit of room here. But yeah, I mean, you even look what happened with bringing the commanders back. I mean, there was so much. Again, I feel like I'm an advertisement for the mayor, but I think she really tries to bring in what she's trying to change in this city, and she needs the ability to do it. So obviously, she probably does not want federal preemption.
Yeah, it's an interesting relationship between these two, and this is going to be a big test for Muriel Bowser. Ashley, it's great to have you. I thought we'd be talking about Russia and all kinds of things today. You just never know what you're going to get in this Washington, but with the help of Ashley Davis, we make our way through it. S3 Group Republican strategist, thank you, Ashley, for the insights. We're going to assemble our panel next and take the temperature of Rick Davis and Jeannie Shanzano. We haven't even talked about the IRS. Did you know that another chief has been lost at the Internal Revenue Service? Billy Long says, happy birthday. Thanks for the fishes.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, the S&P, NASDAQ. They are both advancing. Traders bracing for key inflation data have left stocks wavering near records, with the S&P up 8 right now. 63.97 was trading briefly above 6,400. A gain, though, right now of 0.1%. The Dow lower by 88. Dow Industrials down 0.2%. The NASDAQ Composite Index up 65 for NASDAQ, an advance right now of 0.3%. The Bloomberg Mag 7 Index higher by 0.7%, with the 10-year currently yielding 4.25%. And ahead of the CPI report tomorrow morning, we've got the 2-year 3.74%. Gold is now down 1.6%, 33.43 the ounce, while West Texas Intermediate crude up 0.3%, 64.08 a barrel on WTI. And Bitcoin now at 120,000, up by 1.4%. Certainly, investors are keeping an eye on trade and tariffs. Apple very much in focus. Dan Ives is global head of tech research at Wedbush Securities. He was interviewed this morning on Bloomberg Surveillance.
When you come down to the U.S.-China trade negotiations, much when we talk about chips and the 15%, NVIDIA and AMD, and Apple is key to the whole thing because they're now going to be, I think, a front row seat out of a lot of these negotiations now with Cook no longer on the outside looking in when it comes to Trump White House.
Dan Ives of Wedbush, and he mentioned both NVIDIA and AMD. NVIDIA and AMD have agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government in a deal to secure export licenses. Again, recapping, S&P little changed, up 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your host as Balance of Power continues, the Monday edition. Here he is, Joe Matthew.
All right, Charlie. Live from New York, Charlie Pellet watching the street for us, and he'll have more coming up top of the hour. We do this every day, live from Washington on Balance of Power. And with Charlie's help, we meet the connection between Washington and Wall Street here on Bloomberg Radio. Satellite radio, channel 121. You can hear all of our shows on Sirius XM. And you can watch our shows, too, on Bloomberg Originals and on YouTube. Search Bloomberg Business News Live. When you get to YouTube, find the program. Just set it up and let it roll all day. That's what I do. You can stop it, you pause it, back it up, whatever. It's the coolest thing going out there. Before they find out, make sure you get on board. Happy birthday, Billy Long, 70 years old. The former congressman from Missouri, celebrating a birthday today as he packs his bags for Iceland. This is not exactly how this was supposed to work out. Billy Long is now, well, let's see. I'm going to do the math in my head. He was the 5th man to lead the IRS so far this calendar year. Scott Bessent is now the 6th. Yeah, you might have heard. Late Friday, the Treasury Secretary got a new job running the Internal Revenue Service after Billy Long, a good friend of President Trump's, held the job for all of 2 months. Apparently, even though they are quite close, he's a big MAGA supporter, he was not comfortable with providing, or maybe the people around him weren't, providing sensitive taxpayer information to the administration. Refusing to comply with a White House request, I read in the Washington Post, to provide more taxpayer information for tens of thousands of suspected illegal immigrants requested by DHS. They wanted him to double check, well, a whole list of names here, and had told agency executives that he would not furnish confidential taxpayer information outside of the confines of an agreement that the IRS had with DHS. They were asking for more. He said no. And just like that, we have a new IRS director. Again, though, this is Billy Long. Packing his bags for Iceland, he said on Friday, I'm assuming this is still the case, that President Trump intended to nominate him as the U.S. ambassador to Iceland. Long jokingly posting on social media that he called Trump to ask to join ICE. You know, immigration, customs enforcement. Quote, I guess he thought I said Iceland, Long wrote. Oh, well. He is a multi-talented individual, by the way, and I don't know what kind of an auction system they have going in Reykjavik, but I'll tell you what, they've got a pro coming. He was an auctioneer, professional auctioneer, and for that matter, a real estate developer. Billy Long never thought I'd spend this much time talking about him. And a couple of years ago, they held a hearing on Capitol Hill. Jack Dorsey, of all people, was up there testifying. And this turned into a true riot. This is the zoo that is Washington. When the now famous Laura Loomer walked in the room, let's watch what happened. Go for it, Cece. Let's play.
$7.5, 30. Yep, $30 down here, 2.5, 35, 7.5, 40. Yep, 3.25 down, half, 3.5, 25, 400. Yeah, but a 4, 4.25, 4.5. We're selling the cell phone there.
That's Billy Long, the auctioneer. Got a big round of applause, by the way. I wish I had time to play the whole thing. He went on there for quite some time. It's a true skill to shut down Laura Loomer with an auction call. That's where we start with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is Republican strategist and partner at Stone Court Capital. What do you think here, Rick? I don't know if you know how to do an auction call, but did Billy Long have any idea what he was getting into when he signed up to run the IRS?
You know, he can get along with anybody, so I think that he didn't really care. IRS, ISIS, whatever, join it. Let's see what happens. I mean, there's a lot of confusion in Washington, but I don't think anything's more confusing than the Billy Long story today. And look, I mean, he didn't have a lot of experience around taxes to be the commissioner of the IRS. So there are a lot of people who are probably today breathing a sigh of relief that he's on his way to something with an ICE in it.
Treasury Secretary Scott Bessent, of course, has all kinds of time on his hands, Jeannie. Should he be the man running the IRS just as we get to the tax filing season with a whole new tax law on the books?
Yeah, he's sort of becoming the new Marco Rubio. You know, keep putting positions on him, new positions, and see how he can do it. You know, the fact is that this was never a good fit with Long, and everybody knew it. Not only didn't he have the experience, he didn't really even suggest that he had the interest. There was a time during the short tenure he had when he was off at an auctioneering conference and then making announcements prior to the White House announcing them. And then just Thursday, before this all happened, letting IRS officials or workers off to enjoy Friday, as he calls it, so they could celebrate his birthday today. So, you know, I don't think that he was the right person for the job, as gregarious and upbeat as he may be and as likable as he may be. And so they've shipped him off somewhere else. And I suspect the president will be looking for somebody who can implement so many of the big changes in the big, beautiful bill. You know, I think everybody in the country should breathe a sigh of relief because there's a lot of changes coming. And these are changes that are not just adaptations, but whole-fledged changes like the no tax on tips. That's a whole new policy that has to be implemented. So you want somebody at the helm who knows what they're doing and who is prepared to do the job. And Mr. Long is going to sail off to the Icelandic sunset and be very happy in beautiful Iceland.
Hey, it's very beautiful over there. The Blue Lagoon. I mean, maybe he won't want to come home, but you know, Jeannie makes a great point here, Rick. We talked to the Deputy Treasury Secretary, Michael Faulconer, about this recently. It's his job, actually, to start implementing these tax law changes. Are we going to be telling a story at the beginning of next year and when we get to filing season and creep up on April 15th, that there's a massive backlog? And, you know, look, we've heard this story before, but after the Doge cuts that just followed, after the musical chairs or the revolving door, whatever we call it, at the top of the IRS, is this an agency that's prepared for the season?
Yeah, it's going to be tough. As you point out, 25,000 fewer IRS employees than there were a year ago, and an appetite in Congress to make that even smaller in the next fiscal year. Yeah. So, yeah, there's a real challenge for the IRS to be able to perform the basic functions of the agency. And I think that Secretary Bessent's going to have his hands full to ensure that the trains run on time. I mean, one of the things that got Billy Long in trouble was talking about starting the tax season at later next year, and I mean caught everybody by surprise. Well, that's a big deal to businesses and individual taxpayers, and so the combination of a new tax bill with a lot of new quirks in it, as Jeannie points out, is not a slam dunk when you have an agency running at full speed. So. This administration tends to create challenges that only they themselves can solve, and they've done that here, both with the restructuring of the IRS, but also, as you point out, the sixth in a line so far in 7 months of this administration leadership at IRS.
Just imagine working in an office where within 6 months you saw your sixth boss show up. I don't know what that does for morale, Jeannie. But I'm pretty sure I know what funding cuts do here. And, Rick just mentioned the cuts to personnel. The administration's budget proposal here for next fiscal year would cut IRS funding by more than half once we get to 2027 relative to this year, including a 65% cut in operations support. We know the phone's been ringing off the hook at Social Security. What's this going to do to the IRS?
These cuts can be devastating depending on how they are executed. And of course, you mentioned, 6 new bosses in a few months. Imagine having a quarter of your fellow employees all of a sudden are no longer with you. And all of that work still needs to be done, plus more that has been hoisted on top of the IRS. And the one thing that makes so little sense about any of this, Joe, is that there are very few agencies in the federal government which bring in revenue, but this is one of them. And this is a president who is bent on bringing in revenue, and rightly so. And yet to cut in this way, operations funding, personnel, and to appoint somebody on top of it who everybody knows had zero background in this. This ultimately falls on the president, and I'm glad he took this step quickly, pulled the Band-Aid off quickly, but it is really up to the president to fix this IRS. But he's fixing something that he's had a large hand in breaking. And where are these revenues? That's what's got to come in. So it doesn't make a lot of sense. And the president hopefully is going to be looking for somebody who can resurrect this agency and bring in these revenues that the U.S. is depending on.
Well, Rick, does Billy Long deserve some credit for refusing to hand over confidential taxpayer information, or is the story more nuanced than that?
Well, I'm sure there are going to be people who applaud his willingness to protect taxpayer information. Not totally clear to me, and in the reporting that I've read, what that information was going to be used for. So it may or may not be a more controversial item. I don't know. But one thing for sure is he'll take credit for having a great tax year, because as the last guy out, I mean, 2025 is going to be receipts up over 200 billion more than last year. So at the end of the day, kudos to the IRS for slogging through it. They've increased tax revenues from 2024 by a not insignificant amount. And so, let's see what the future brings. I do wonder, who do you call if you got a question in the front office? Because Secretary Bessent's going to be pretty busy beating up on a lot of countries right now to get trade deals.
That's right. Yeah, we're going to end up with Scott Bessent, Marco Rubio, the only 2 employees of the administration, Jeannie. They'll just have every title. They can split them up between them. Are you worried that a loyalist, I thought Billy Long was a loyalist, he was handpicked by Donald Trump, that another loyalist might come into the agency here and actually provide the information that Long was asked to provide?
Yeah, I think that's the concern. The president, as we know, throughout this administration, his focus is not on appointing the people who are most skilled at or most qualified to do these jobs, but who are most loyal to him. It is understandable when you are running anything that you want people loyal to you, but you can't put that above qualifications and expertise, because this is what you end up with. And again, there's a good reason that the IRS is not used to track down immigration, illegal immigrants. And that is because its main job is to take in the funding that all of our lives depend on. And anytime you take a step to like use it to crack down on illegal immigration, you undermine their ability to take in funds. And so I think the president has to think very carefully about how he moves forward, because this is the most important agency in the government for what he hopes to do.
Jeannie Shanzano and Rick Davis, our great panel, will be back in our second hour. We haven't even brought up the public safety emergency in D.C., and I'm deeply curious to hear what you both have to say about it. The National Guard being deployed in Washington. We'll have much more on that ahead on Blue.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Donald Trump prepares for the most important meeting of his presidency. Welcome to the Monday edition on the early side here on Balance of Power. As we look to Friday's summit between President Trump and Vladimir Putin, we'll talk about the stakes and chances for peace with Brett Bruin from the Global Situation Room coming up in just a moment. Chip makers NVIDIA and AMD will pay the administration to sell AI chips in China. We're going to talk about the quid pro quo today with Jennifer Welch at Bloomberg Economics. And as President Trump deploys National Guard troops to the streets of D.C., We'll talk about his public safety emergency and what it means for the capital city with our panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And it's all after a look at Wall Street. We get to Charlie Pellet and the markets right now from world headquarters in New York. Hey, Charlie.
And good day, Joe Matthew. Right now we're looking at a U.S. stock market a little changed ahead of key inflation data, the CPI report tomorrow morning. S&P right now up 2 points at 63.92. Any advance today will be another record. We've got the S&P up just under 0.1%. The Dow up down 127 right now. Dow Industrials are declining by 0.3%. NASDAQ Composite Index trading at a record. NASDAQ right now up 39. That is a gain of just about 0.2%. Our Mag 7 Index pushing higher by 0.7%. 10-year currently yielding 4.25% with a 2-year 3.74%. Gold is down $53 the ounce, $33.44 for the precious metal, a drop of 1.6%. West Texas Intermediate crude up 0.3%, 64.10 a barrel on WTI, and Bitcoin higher by 1.4%, just under $120,000 on Bitcoin. Joe mentioned chips, specifically AMD and NVIDIA. Both those companies are higher. Micron raising its fiscal fourth quarter revenue, earnings, gross margin, and operating expense outlook, citing improved pricing. Shares of Micron Technology, MU on the ticker, up now by 3.1%. Recapping, little change for the U.S. stock market as measured by the S&P, up 2 points now, up under 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Balance of Power continues. Once again, your host, Joe Matthew.
All right, Charlie, many thanks. We'll get back to Charlie Pellet a little bit from now to check on the Monday trade as we keep our eyes on NVIDIA and AMD. As soon as I saw this headline this morning, I started wondering what the stock reaction would be. And remarkably, there hasn't been much reaction because this is unprecedented. What's coming from the White House today, the president a short time ago confirming this news that NVIDIA and AMD have agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government. The U.S. government is getting in the chip business, apparently. And these are the AI chips that at one time were being held from China, not allowed in the market. The H20, for instance, as export controls were turned up in the name of national security. We've come a long way from that moment. President Trump, in an unrelated news conference, was asked about it earlier today. Listen.
I deal with Jensen, who's a great guy, and NVIDIA. The chip that we're talking about, the H20, it's an old chip. China already has it in a different form, different name, but they have it. Or they have a combination of two will make up for it and even then some. The Blackwell is super duper advanced. I wouldn't make a deal with that, although it's possible I'd make a deal, a somewhat enhanced in a negative way Blackwell. In other words, take 30% to 50% off of it. But that's the latest and the greatest in the world. Nobody has it. They won't have it for 5 years. But the H20 is obsolete. You know, it's one of those things, but it still has a market.
The comments about Blackwell, remarkable in their own right, as we bring in Jennifer Welch, Bloomberg Economics Chief Geo-Economist. Jenny, it's great to see you. Thank you so much. I can't imagine what you're thinking about this. We'll get to Blackwell. Let's start with the H20 and what we know. I'm hearing things like quid pro quo, unprecedented. Both of those are true, right? These are companies that are essentially paying for access. Pay to play is the new rule.
Yeah, in two ways. Pay to play in the sense of, you know, getting the White House to agree to essentially allow them to sell their chips to China, and in the sense of getting them access to the Chinese market. As you noted, it was only actually a few months ago that we decided to not allow the H20 chips to be sold to China. As President Trump noted, they are not as powerful as the cutting-edge chips, but they're still pretty powerful, and that was the reason behind initially banning the export of them.
Just weeks ago, by the way.
Yes,
we were talking about
not that long ago, exactly. Now this scheme seems enabled to allow the U.S. government to reap a lot of revenue, allow NVIDIA and AMD to also reap revenue from selling to the Chinese market, and China to gain from having access to these still pretty powerful chips.
The idea of just talking about Blackwell which is the newest and best that NVIDIA has, and there's quite a backlog to get them. It just gives you the sense that he's willing to make a deal on just about anything.
Yeah,
First
national
he said
security
he wouldn't.
is a price tag.
Well, that's right. So is that the case here? And Jenny, to the extent that this is legal, do we know, is this constitutional?
So on the first question, it does seem like it's sort of a commoditizing export controls or national security policies. And we saw that earlier this year, in fact, where the Trump administration put in place some export controls that were explicitly about building leverage in talks with China, and then they immediately rolled them off once they got to an agreement in London with the Chinese on a true trade truce, and in order to get the rare earths to flow back in, right? So we have seen this before from this team. On the second question of legality, that's an interesting one because this very much looks like an export tax, which isn't constitutional, but it's also technically, it seems, a voluntary agreement by these companies. So maybe that's the legality on which it stands. Yeah. I think the question that I would be asking if I was an executive for a firm that produces things that are export controlled is, will I be next?
Right, absolutely. Do we know where the money goes, by the way, and what it would be used for?
No.
Special NVIDIA account somewhere in the White House?
Unclear, yes.
Okay.
Unclear.
Unclear where the money goes, unclear where the line is, I'm guessing then, because it seems to me if 15% gets you to sell H-20s in China, would 50% be enough to sell Blackwells in Beijing?
Right, and it wasn't clear when President Trump was talking at that press conference. Some of it might have been about the capacity of the chip itself, how powerful it is. Yeah. But is there going to be a fee for power sort of ratio applied there?
Right, he said they'd turn it down 30% or something like that. I don't know. Tomorrow's supposed to be a big deadline with China. This was the trade truce that was to be expiring tomorrow, but there's talk of it being extended. What's your expectation?
I think it looks very likely it's going to be extended. Certainly the chief negotiators for that deal, Secretary Lutnick, Secretary Bessent, have indicated they expect that President Trump will approve an extension. Maybe he's just trying to make the Chinese sweat a little bit by holding out to the last moment. But all signs seem to point to he doesn't want an escalation of that trade war. He wants some sort of deal. You know, he was talking about soybeans earlier. We've seen that there's been probably some ongoing conversations about U.S. export controls. So I think all signs are pointing positive, but as with everything President Trump, you never know until he says the last word on it.
Well, that's for sure. What should we be looking for, though, in the next couple of days when it comes to China specifically? Because we were said this was the big one. It would take months, if not years, to actually get to a real trade deal with China, but we've been seeing these framework arrangements that maybe something emerges in the next week or so. What stage are we at in this game?
My expectation is a little bit more calibrated, that I think they're probably going to extend the truce to give themselves more time to negotiate and work towards some sort of deal that perhaps the leaders, if they do meet later this fall, can announce. That might involve something like purchase agreements, export control rules, maybe something from China on fentanyl as well. Sure. But I think more along those lines, probably still going to take some time to get there.
Really interesting. Jenny, thank you so much. Jennifer Welch, Bloomberg Economics Chief Geo Economist. This is why we have Jenny handy, trying to figure out exactly what's going on. It's not always that easy when it comes to the confusion around tariffs, in this case, a potential export tax. We're watching shares of both NVIDIA and AMD, and they're moving higher. We thought this might weigh on the shares this morning when the headline first broke. NVIDIA right now up about 0.3%, almost $1. AMD is doing pretty well. It's up 1.5%. Up more than $2 a share. You can read a lot more about this on the terminal. It is one of the biggest stories of the day. NVIDIA, AMD to pay 15% of China AI chip sales. The other big one, of course, brings us to the end of the week, and that would be Friday. We now know that the meeting will take place in Alaska. We don't have a lot of other details at this point. The president will be wheels up to Alaska Friday, and at some point during the day, we don't have a time either, he will be in a room with Vladimir Putin talking about presumably the end of the war in Ukraine. The president did get into this earlier at his news conference in the briefing room. Let's listen.
You know, I'm going to see Putin. I'm going to Russia on Friday. I don't like being up here talking about how unsafe and how dirty and disgusting this once beautiful capital was, with graffiti all over the walls. It's another part of it, by the way, because we're talking about safety, but we're also talking about beautification.
Beautification, indeed, he has been talking about today. Brett Bruen, has spent a career as a diplomat and now a consultant in this field, the president of the Global Situation Room, former White House Global Engagement Director, with us in studio here in the mean streets of Washington. Brett, great to see you.
Yeah, survived the trip over.
You got out from the mean streets of Old Town to the dystopian center of Washington here. Congratulations. I've got a lot of questions for you, and I suspect you've got some questions that need to be answered as well. This was initially framed as a win for Putin just to get in a room with Donald Trump. Now we're the host nation. How is this going to unfold on Friday in Alaska?
Well, let's start with that, because normally in diplomacy, you would hold that back. A trip to the United States. We all remember when Trump raised the prospect in his first term of the Taliban coming to Camp David. And there were a lot of us sitting around. Maybe the reason they didn't come was that's just so strategically stupid. And now we're inviting the leader of a country that's invaded an ally, not to sign an agreement, not because he's made major concessions, just to feel each other out, according to the president earlier today. That's not the sort of thing that you do in sequential order. You start with the substance, and then you get to the superficial stuff.
Right. They should, I guess, in the traditional sense, be showing up with an agreement already in hand, right? We're coming here to codify this agreement. Will there be other people in the room? Will this go on for hours? What do you expect?
Well, we know from past meetings, even past telephone calls, Trump likes to go mano a mano with Putin, maybe a Russian translator in there, which means there are no American eyes or ears on that conversation. Concerning, yes, who will be in the room? Probably Marco Rubio, not least of which because he holds like 11 different cabinet positions at the moment.
Yes.
But also on top of that, look, the question of Volodymyr Zelensky. Right. We are talking about Ukraine, and yet Ukraine still is a question mark. You know, and it's interesting, J.D. Vance yesterday saying, well, we'll kind of see and work that out. No, that's something you work out before you extend the invitation to Putin. And the price of Putin getting to come to the U.S. is sitting at a table with Volodymyr Zelensky. And the notion that they haven't worked these things out ahead of time is just really perplexing.
He just said this morning that the next meeting would likely be between Putin and Zelensky as he saw it, or all three of them, because he'd be glad to show up and help to mediate this. He's approaching this as the man who wants the Nobel Peace Prize. Does that bring its own liability?
Well, let me disabuse those around this town who are floating the idea that the Nobel Committee, a committee of Swedes, Norwegians, who believe firmly in things like anti-colonialism, are going to give a guy who's threatening to colonize not one, not two, but multiple countries the Peace Prize. Because when we talk about peace, we're not just talking about, you know, this kind of superficial social post that Trump puts out there and claims that it's a peace deal. We're talking about real substantive peace deals. And Joe, you and I have had conversations about this, but, you know, when we're involved in peace deals, there are chapters, there are whole volumes that are involved of, you know, borders as well as how exchanges of troops and the whole confidence building measure. None of that is here with any of these deals.
Well, in the meantime, Volodymyr Zelensky is sitting in his office reading stories about freezing lines in place that we're going to hand over the Donbass and Crimea. And the president referred to these so-called land swaps. He was asked about this earlier today. Brett, let's listen to what he said.
The next meeting will be with Zelensky and Putin, or Zelensky and Putin and me. I'll be there if they need, but I want to have a meeting set up between the two leaders. I was a little bothered by the fact that Zelensky was saying, well, I have to get constitutional approval. I mean, he's got approval to go into war and kill everybody, but he needs approval to do a land swap because there'll be some land swapping going on. I know that through Russia and through conversations with everybody to the good, for the good of Ukraine. Good stuff, not bad stuff. Also, some bad stuff for both.
Some bad stuff, land swapping. Are we talking about Donbass and Crimea in exchange for Zaporizhia or something very lopsided? What does he mean by swapping?
Just to be clear, it is 2025. It is not 1825. The president of the United States does not get to swap territories of other countries. That is why we had the Peace of Westphalia of 1638. It is critically important that Trump understand what he can and what he cannot negotiate away. And at the end of the day, not only Ukraine, but our European allies are not going to accept that Trump is rewarding somebody who invaded another country, that he is deciding what the borders of Ukraine will be. Ultimately, yes, it is up to the Ukrainian constitution. More importantly, it's up to the Ukrainian people to make that determination.
Well, so from the idea of rewarding Russia for its behavior, and that does seem to be the essence of the agreement that we have been talking about, at least in the past couple of days. By the way, there is an alternate European plan that we can get into as well that I'm not sure the president has a lot of interest in. But look, I'm going to ask you this, and you might not want to answer it. A lot of the analysis recently has referred to Munich, that the president is walking into the next Munich. Is that where your head is?
I think it's worse in some sense.
It's worse?
Yes, because in the sense that we faced back in the run-up to World War II with Adolf Hitler, with the threat that he posed, a clear and present danger. But what Putin does is actually in many ways more nefarious, because he is, yes, in some cases like in Ukraine, directly attacking a sovereign country, but in others he's undermining from inside, and that includes in the United Kingdom and other parts of Europe. And here in the United States, that again is why it is so strange that you would invite Vladimir Putin to American territory while he is still actively working to undermine our institutions, our ideals, the borders of the United States. I mean, I think it was somewhat of a Freudian slip today when Trump suggested he was going to Russia. I certainly hope that Alaskan territory, American territory, is not in the cards with these land swaps. But, you know,
there was a time.
I do have to say, at least in the Munich agreement, there was a European and American consensus about the rights of certain countries, about international law. There is not currently, and that's what makes this moment, Joe, so dangerous.
European plan rejecting this Russian proposal here to keep the eastern Donbass. There was a big meeting over the weekend calling for a diplomatic end here and protect Ukraine's interests. Does Donald Trump care what our European allies think? He suggested he'd give them a call and let them know what happened after this meeting.
So here's the funny thing. Trump now, a good 200 days into his term, is starting to realize, yes, you can bluster, you can bulldoze over our allies, but then it comes back to bite you in the rear end because they are not going to cooperate in other ways. And yes, he can certainly, with Ursula von der Leyen and the European Union, try to impose his 15% tariffs, one-way tariffs on the EU. But they, in this notion of reciprocity in international relations, are able to find ways to be less cooperative on fronts that we need them.
Fascinating. I'd love to talk to you once this meeting takes place. This is why we bring in Brett Bruin. Fascinating conversation. We always learn something from Brett at the Global Situation Room. Many thanks for the insights. Brett, we're going to assemble our political panel next. Rick Davis and Jeannie Shanzana will join us as the president deploys National Guard troops to the streets of D.C. It's straight ahead, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index wavering right now, little changed, with the S&P up 1 point at 63.90, a gain of less than 0.1%. The Dow down 177, down 0.4%, while Nasdaq is higher by 38, up by about 0.2%. Traders bracing for key inflation data, the CPI tomorrow morning, leaving stocks wavering near records. The 10-year currently yielding 4.26%, with the 2-year 3.74%. Gold is down $54 the ounce, down 1.6%, $33.43. And West Texas Intermediate crude, $64.14 a barrel, up by 0.4%. Bitcoin just below $120,000. Bitcoin right now up by 1.2%. Ford has unveiled new plans for a line of budget electric vehicles in a $5 billion bid to achieve the mass appeal that has so far eluded its money-losing EV business. Again, recapping, S&P little changed, up now by 1 point for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Many thanks, Charlie Pellet. We'll get back to Charlie for more on the Monday trade coming up a short time from now. It is one of those days where we have a bit of a three-ring circus, multiple lead stories that we're juggling here on Balance of Power. It's just another Monday in August, the 11th, in fact, and thank you for joining us on the Monday edition here on Bloomberg TV and radio. As you heard a short time ago, NVIDIA and AMD, we talked about it with Jennifer Welch, paying 15% of China AI chip sales, a massive story coming out of Washington today that has our eyes on shares of both of those companies. We've got the Trump and Putin meeting on Friday, as we just talked about with Brett Bruin. And then we've got what's happening here in our capital city. This locally is the biggest story of the day, I would suggest. And if you're with us on 99.1, we see you. We live here too. The president, of course, referring to crime and homelessness in Washington, D.C., promising a news conference this morning. And he did hold that news conference. Quite remarkable. As we saw in Los Angeles, the president is going to be deploying National Guard troops to the streets of D.C., invoking a public safety emergency. About 800 troops, based on what we're hearing so far, but also deploying federal law enforcement from about a dozen agencies across town. The president spoke to reporters about it a short time ago. Listen.
Told them, whatever happens, you know, they love to spit in the face of the police. As the police are standing up there in uniform, they're standing and they're screaming at them an inch away from their face. And then they start spitting in their face. And I said, you tell them, you spit and we hit. And they can hit real hard.
You spit, we hit, the president saying as he was flanked by his Attorney General and Secretary of Defense. It's not just the National Guard troops. The President of the United States is also federalizing the local police department, the D.C. Metro Police. And under our Home Rule Act, that is in fact allowed, although only for increments of 48 hours. So it's unclear exactly how that would run. And one of our biggest questions right now is, what does the mayor think of this? We sat down just a few weeks ago this summer with Muriel Bowser to talk about her relationship with this administration, working with Donald Trump. Here's a bit of what she said.
President Trump left D.C. during COVID, which cities were ravaged by COVID.
Absolutely.
From homelessness to increases in crime to with lack of services because government agencies were shuttered. And we've worked very hard to get that image out of his mind because that's not the D.C. of today. In fact, we've driven down crime to a 30-year low. Our tourism recovered in 2024. Our kids were the fastest back to school, and our school population has rebounded. An investment in D.C., people are looking hard at us because of some of the changes we're making in our business environment. We are lowering taxes. We are cutting red tape, and we are incentivizing good businesses to start here, grow here, and hire D.C. residents.
So do you feel like you have a partner in the White House or an obstacle?
Well, it's a partnership we work on every day.
Yeah.
Certainly, the president has an outsized outsized influence over the city of Washington because it's the nation's capital. So we like him to make some bigger investments like Union Station and continuing to be a partner in developing RFK, helping us retool and reskill our workers, and asking him to pause on these separations and rehire qualified people.
That partnership that Mayor Bowser talked about is being tested severely right now as we assemble our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us right now. Jeannie is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is Republican strategist and partner at Stone Court Capital. Rick, I'm going to start with you because with some exceptions, you spent the bulk of your life living here in the Mid-Atlantic area in the Washington, D.C. region. You know this city about as well as anybody that I know. Is this required? Is this necessary now? And is it legal?
You know, so much of what Donald Trump does is not just for impact, but for symbolism. And I got to believe, based on what we've heard today, that this is a very symbolic gesture. It's a gesture to try and really, re-federalize, restore the influence of the federal government in Washington, D.C. You know, we used to have things many people don't remember, but the streets of Washington have been cleaned up a lot over the last few decades, and a lot of that came through federal money, through federal participation, Pennsylvania Avenue Development Commission, things like that. I mean, there were places that are thriving today that were war zones when I was growing up. And that process, that progress, a lot of times was done through symbolic gestures. We don't know where this will last. As you pointed out, right now, the federalization of the police is a short-term thing. When Donald Trump deployed National Guard troops in L.A., like what he's now doing in Washington, D.C., it was for a minimum amount of time. They are now back at home with their families in L.A. It's a kind of wait and see thing. I mean, the one thing Donald Trump does is he makes these grand gestures, but he doesn't fill you in on sort of what he hopes to accomplish in the process of doing that.
It's really something. Jeannie, I came to Washington as a resident, at least in the 1990s. There was still evidence on the U Street corridor of burned out buildings that had been left there since the Martin Luther King riots in 1968. Chinatown, or what we now call Gallery Place, or whatever that is, was much the same. Huge investments were made here in Washington post-Marion Barry, to the point where it's unrecognizable. As Rick just said, in some areas, if you go to the neighborhood known as Noma and you were somewhere else the last 10 years, you wouldn't even know what city you were in. So I think we have to acknowledge the progress that's been made here over the course of decades. But most recently, we know that a lot of cities were in pretty bad shape coming out of COVID. And most of the data I heard today from President Trump was 2 years old, back to 2023. As the city emerged from COVID, there was a rash of violence in Washington. We lived through it and we talked about it at the time. Carjackings specifically were through the roof. But we've also seen some pretty steep declines since then. And Jeannie, I'm looking at a memo right now that came from the Justice Department. It was Joe Biden's Justice Department, but it's dated the 3rd of January, Friday, 2025. The headline is, violent crime in D.C. hits 30-year low, 3-0, down 35% from 2023, lowest in 30 years. How come the president didn't mention these statistics?
Yeah, and it's not just coming out of the Biden administration. One of the most bizarre aspects of this press conference he just did was his own FBI director, Kash Patel, stood up. Apparently, nobody looked at his talking points because what did he say? The murder rate is plummeting. It's its lowest in history. And yet we have an emergency requiring the president to federalize D.C. And those two things just don't comport. And of course, the data that you're talking about, all the data we've looked at don't comport. And so this is another example in a long line of what Donald Trump has been doing since he came back to office, which has been declaring emergencies that the data doesn't support in order to expand his executive power. We talk about it all the time in the context of tariffs. He is doing that tariff regime under this declaration of an emergency that the courts are looking to see if actually exists. And this will certainly go to the courts and people will be able to vet whether these numbers add up. But what is most concerning here is not just about DC, but about President Trump talking about the fact that this may spread to other cities. This may spread to Illinois, to Chicago. This may spread to New York City and New York. As Rick mentioned, it's already been in LA. So that is most concerning. And I think the question that comes to my mind is, why is this at the top of the president's agenda today on August 11th, with as much going on in our country and the world as is going on? Is he creating an emergency where the data suggests that none exists? And I think we can think about answers to that question, but one comes to mind. When a reporter asked about the Epstein files, the press conference ended abruptly, and that was that.
You know, you're not the first person to use that name today, Jeannie, as people say, why now? And why not in the first term, for instance, when crime, in fact, was higher based on the stats that we're seeing? Rick, from a political standpoint, when you consider the electorate watching this locally here in Washington and all over the country, based on what we saw in California following the tariff stuff that Jeannie mentioned, does the voter begin to fatigue when it comes to emergencies? How many emergencies can America take?
Yeah, I wonder if anybody really even focuses on that. I mean, we obviously are, policy nerds. We get in the weeds on the authorities that the president and the Congress has to exercise their various powers. And yet what the public sees is today Donald Trump deployed federal troops into D.C. And I don't think people really are going to second guess him on what powers he has to do that. He's very good at trying to blow through those kinds of questions. He never actually addresses his authorities. He assumes those authorizations and focuses instead on the real act that's going on. And I do think this has actually less to do with the Jeffries controversy. And a lot more to do with just the politics of Donald Trump. Like, Donald Trump's been talking about city blight, for 4 decades. He used to rail about it in New York. He's railed about it here and everywhere else he's been. And the reality is, part of that is to put himself politically on the side of the cops versus the politicians. And I think the Democrats have to look at this from a point of view that says, you know what? This is a vulnerability for us. We have to be careful. Because if Donald Trump is successful, these kind of safety issues, especially in big urban environments, and you see Donald Trump throwing LA and Chicago and New York all under the bus, he's going to use this politically. And I think less worry about controversies and more worry about politics.
Rick Davis and Jeannie Shanzano, many thanks to both of you for the insights, our Bloomberg Politics contributors with great analysis today. President Trump just now on Truth Social. Gold will not be tariffed. We'll have more on this straight ahead on Balance of Power on Bloomberg TV and radio.